Good morning, everybody, and welcome. Dzień dobry I serdecznie witam. My name is Martin Ring, non-executive director of Wolves Summit. On behalf of the entire Wolves Summit team, I'm absolutely delighted to welcome you all here today to this, our very first edition of Alpha Wolves. And we're very excited to launch Alpha Wolves, which is the new meeting place in Central Eastern Europe for high-quality scale-ups, investors and corporations where innovation meets business and capital. On behalf of the entire Wolves Summit team, I sincerely hope that each and every one of you enjoy a very positive, interesting and successful experience. And we're looking forward to receiving your feedback in due course. Looking at the quality, the really high quality of scale-ups that we have attending over the next few days, I'm pretty sure we're going to find a few unicorns as well. So I'll hand you back over to Mission Control. Thank you.
Greetings from the Wrocław Congress Centre, where we are hosting Wolf Summit 2022 this May. Needless to say, our thoughts and prayers are with the Ukrainian people during this terrible time. Especially close to our hearts at Wolf Summit are the Ukrainian founders who are continuing to pursue their dreams at this time. Sadly, the ramifications of this war are being felt worldwide, although most acutely within the Central and Eastern European region. In light of this, I've made the decision to invite all startup founders from the following countries to join us here in Wrocław this May, completely free of charge.
Bosnia and Herzegovina,
Latvia,
Poland,
Albania,
Romania,
Czech Republic, Croatia,
Lithuania,
Kosovo,
Hungary,
Bulgaria, Slovakia,
North Macedonia,
Slovenia.
Serbia,
Estonia,
Montenegro, and Ukraine.
I'd now like to sincerely thank the City of Wrocław for providing us with this amazing venue and for their continued support in making Wolf Summit 2022 truly iconic. See you in May.
Wolf Summit 2022!
Good morning, everyone. So, those of you who didn't have your coffee, can you just raise your hand? I'm sure that you can't, but it's fine. So, welcome to the first edition of Alpha Wolves, and you're going to see some differences this time. And I also really like that they literally made it like a theater, so I cannot really see anybody here. It's just a whole thing in my face. So hopefully, at least you guys would be able to, like see me here. So I made some notes here just to make sure that everybody knows everything. First of all, guys, how many of you know Brella? Yeah, because we try to say it and some people think we're talking about an umbrella because there's rain outside. So I just want to make sure that everybody knows what Brella is. Try to be there, try to do the networking, try to get to know all the people that they're here. We try to gather a lot of LPs and GPs and scale-ups. And if you're not going to be there for them, then it's going to be a huge, let's just say, opportunity that we're all going to lose. And hopefully that is going to be solved by all of us. I would like to welcome all of you here in Warsaw, Poland. Anybody first time here? Oh, nice, nice. So make sure that after you finish the event, also try to have a walk around the city. You might like everything that you see here. We have two separate stages here. So make sure that you take advantage of both of them. But just in case that you really want to have one of them and you think that you missed the other one, don't worry, because it's going to be recorded, and up to 2 weeks after that, you would be able to have access to the whole scenario, and then you would be able to use it. I'm just going to also try to have a quick shout out to our partners that they helped us make this event happen. So I don't have that much time, so I'm just going to try to say it very loud and very quick. BNP Paribas, Brella, Enterprise Estonia, Hopram, Konieczny, oh my God, I'm really sorry for butchering this part. Wierzbicki Partnerzy, Vienna Business Agency, Innovex, LG, and our fintech partner, PKO Bank Polski. Guys, we would like to try to bring you a lot of content, and at the same time, a lot of, let's just call it, new networking and new opportunities. But let's just try to make it in a way that, like we also know where we are and what we really try to do. We are in a very, let's just say, difficult times, and we're in a country that we're in the neighboring of the Ukraine. So let's just say that we had a lot of interesting solidarity and everything that happened here. I would say that this is as much, let's just say, opportunity for a lot of you guys to try to see how we can try to help and contribute with all the things that, like you guys have in your power. So let's just try to also make sure that we are going to use all of these opportunities, to the best. And at the same time, if there was anything, there's always guys that they have the badge of the organizers. They're here to support you and help you with that. We started a bit late. I just wanted to make sure that I'm just going to save some time and try to make it in a way that we're going to be on time. I'm going to, oh, perfect. No, I have definitely time. I would like to just make it in a way that you would know at least what's going to be on the agenda. So I'm just going to have a quick briefing. We're going to have keynotes, and then between the keynotes, we're going to have the presentations for our scale-ups. So make sure that you're going to be here. The scale-ups are going to have 10-minute pitch, and then after that 5 minutes that the mentors would be able to give them some feedback. At the same time, we're going to have a bit of break in between, so you would be able to, don't worry about the lunch and everything else, you would be able to catch up with that. After that, you're going to have a networking that, like you will be also have, let's just say, other opportunities to, like mingle. And also tomorrow, we're going to, let's just say, have something a bit more interesting for the VP, for the VIPs. And I'm sure that I will be able to give you some more information as we go. But for the time being, I just would like to make it in a way that, yes, make it in a way that we're not going to lose any time. We're going to mainly talk about, let's just say, companies that they are a little bit later stage. And if any of you guys know the environment in this part of the world, we're always, let's just say, having a problem of this Series B gap. And most of the time, we have a lot of very interesting deep tech startups and a lot of startups that, let's just call it, they are very interesting at what they do, but they always have a problem with scaling. And that is something that I'm very happy to see, even that right now there are these opportunities that we are, let's just say, able to even invite LPs and GPs, and they redefine Poland as an opportunity and a place to be. So that's, for me, it's a very interesting, let's just say, turning points, because long time ago, like, let's just say, investments were like 50,000 and like 100,000, that was like a big one. And some, let's just say, big media companies would write about these things. And right now, we can see that we have like Series B plus, and these things are really new. So let's just hope that, like, we're just going to make it even to the next stage by having such interesting number of scale-ups, such interesting number of LPs and GPs that they're walking around, and at the same time, let's just say that all of these things are going to be new. So let's just embrace that and then try to make it in a way that we're going to jump into the next level. And, maybe we're going to even, let's just say, build something, sign something that is going to be, let's just say, make this event even more practical. So try to not to make everything into a theoretical capacity. So just to be on time, I'm just going to introduce our first speaker. And I was having a pleasure of also having a quick chat with him. So I would like to welcome John, a partner at FF Venture Capital. He's going to talk about how to be anti-fragile in a fragile world. And we couldn't just find a better title than that. So with that, I would like to welcome John on stage.
Wow, good. Actually, I'll lose these. Good morning, everyone. I really appreciate people taking time out. I'm not sure I got anything that exciting to say, but I put some slides together, so we'll run through this. Also leaving a lot of time for Q&A, so which probably more interesting than the prepared slides. Let's start with oh, hold on. I think I do this. There we go. Okay, so let's talk a little bit about what FF Venture Capital is. We're a seed stage firm. We like to start when companies are just getting going. We started 14 years ago in the US. We have an office in Warsaw. We've been here a couple of years. I don't want to say we're the only US seed stage firm with an office in Warsaw, but I don't know of any others. Our focus really is to help companies grow. We're not an incubator. If a company trips over its shoelaces, we're there to help it step up. And so we have very high survivorship. And that bleeds through into having a number of sort of top quartile funds. We run an active platform. We organize 200 events a year. We have a newsletter with over 20,000 recipients, goes out twice a month. And it's focused on not just the US market, but the Warsaw market as well, and what we're seeing over here in Central and Eastern Europe. We're the only VC firm to have actually founded an accounting firm. It's kind of weird because VCs, we look at numbers all day, but there are very few VCs who actually are chartered accountants, CPAs, and the like, and they seem to have a problem with numbers. And we built a front office VC platform to really help manage all the things the GP needs called totem VC. So we're a little different in our approach. So I've put a number of these slides in between. They have absolutely no relevance to what I'm saying today, other than I just think they're pretty cool quotes. So, you know, everything you can imagine is real, I think, is very relevant to startups. It's very relevant to VC, and it's very relevant to Picasso. So as I talk to people, everyone's focused on the current instability. I had a conversation before I came in here saying, thank goodness for the global pandemic because it really prepared us for World War III. And I said, that was not a sentence I expected to hear 2 years ago. So we're always focused on the current instability. And, you know, we feel everything's stable in the past because we dealt with it. But I remember how each of these felt. I even remember the 87 crash. I go back a little longer. Stuff happens in the world, and we hit periods of instability. Startups are inherently dealing with problematic situations all the time. They can be macro, or they can be relevant to that particular company. Startups fundamentally are bankrupt organizations until they're generating EBITDA, and they're dependent on the kindness of strangers. So, yeah, we've had a lot of instability in the past. We're seeing some current instability at the moment, and we're trying to work out how to deal with it. In 97, I'm not going to read this, but feel free to read the slide. In 97, there was this great article in Wired magazine talking about the long boom. And like a lot of ideas, when people stop talking about it, it probably happened. Like we stopped talking about the paperless office, but guess what? We're in the paperless office. You pick up your laptop, you go home, you can work. That's because we're in the paperless office. In the same sense, I truly believe we're in the period of a long boom where technology is just enabling so much prosperity, so much efficiency, so much disruption. And I don't see it ending yet. And then, you know, it was talking about 25 years in 97, which is kind of like ends next year, but I don't think it ends next year. I think it carries on. And I think we're very blessed to live in such interesting times driven by this. So, given all that, the four most dangerous words investing is this time's different. And at some level, I think this instability is different. You do have this long tech boom. You've had this long period of relative stability. And, you know, Minsky's hypothesis is the longer the stability, the bigger instability. And I think we may be hitting one of those moments right now. We've had ridiculous interest rates the last 22 years. You know, so much so we feel it's normal, and interest rates now going up feel weird. I don't know if they'll sustainably be able to go up, but that's a different issue because of all the money printing. You know, the rolling pandemic, you know, in the US, it's fundamentally over, except for California. Not because of facts, just because of approach. But in China, it's just getting going because they were able to keep it out for so long. So it has to burn through there, and that is obviously going to impact a lot of supply chains. And then, yes, war. And none of us know the outcome there, and we all hope this evil atrocity will end soon, say the least. Now, these are the things that really give us pause. And as VCs, we invest against disruption. So we're coming to the end of the Bretton Woods Accord, post-World War II, of expanding globalization. We're going to see increased localization. To use simple language, do we want the robots in China, or do we want the robots in the US and in Europe? And I think we want the robots locally. The cost of moving goods is going to go up because of what's going on with energy. There are national security concerns. It is very peculiar that most of the medical drugs that that are used in the US come from overseas. That, I think, will change on a national security perspective. It's also interesting most of the illegal drugs come from overseas, but that's a different issue. For many years in the US, a lot of VCs did not want to fund military technology. I think that naivete is going to change. We've got inflation, we've got bankrupt companies, we've got unrest coming, food riots, all of that dynamic from what you're seeing with regard to fertilizer, wheat exports, et cetera, from this war. And something is happening, and I can't fully articulate it yet, but in the US, we are seeing a housing boom that I think is going to just continue. It may end. We're already stretched affordability and the like. It looks like people want bigger houses in places they want to live because they can work remotely. And remote work has gone from probably 5% of workforce hours. It'll probably stabilize somewhere around about 25%, which is a massive shift. And a lot of startups have gone remote first out of necessity. They're hiring the best person they can get, not the best person they can get in a zip code that can commute to an office that they don't now dominate where they live. And that is having impacts because if people aren't using location as a way to resolve, then certain cities become less important with regard to startups. And I think you're getting a spreading out of entrepreneurship, which I think is actually very positive for inequality. VCs are worried. In 2008, Sequoia put out their 100-year flood deck, where they said things are tough, batten down the hatches, etc. Didn't really happen in the startup world. And now we have Redpoint putting out this presentation, where this is what they think is going to happen. And they just see this as the beginning of, really needing to batten down the hatches, and things are terrible. They put out a chart here saying that if funding over the next 4 years is similar to what happened post the dot-com bubble, this is what we're going to see. It's going to be a disaster, etc. I don't buy this. But you should consider it and think about whether it happens or not. In TechCrunch, Carter put out this survey where they said the amount raised per round is going down, valuations are going down. Yeah, maybe. People refer to the Series A crunch, the Series B crunch, etc. There's always a crunch. It's the nature of the game. You have 100 companies in the US raise a Series seed, 30 raise an A, 10 raise a B, 1 goes public. It's crunch all the way. There's nothing particular about now versus anything else. But great companies can raise a ton of money at great valuations. There's more money in the ecosystem than there ever has been. And good companies will get funded, and hopefully less bad companies. There is a reason why it's called venture capitalism and not venture socialism. Right? It's about creative destruction, not creative pay your salary for the rest of your life. An appropriate quote, actually. So I think what the gist that you're kind of getting here is we live in disruptive times, but we always have. So we have a company in Ukraine. It's actually a Delaware C Corp. The IP's out. They've done all of the right planning ahead of time. Some of the people are still in Ukraine. It's a great company. They do what's deep fake audio. So I could sound like Tom Hanks, which I think my wife would appreciate. But no one cares on that one. It's used by Disney and other folks to replicate voices exactly as they want them to be, whether it's Luke Skywalker's or someone else's. they had this Russian aggression plan. They were a little shocked at the speed it went through. However, they've regrouped. They're doing record revenues. They're actually profitable this last month. And, you know, I've got other VCs approach me like, how do we invest in the next round? And it's like, what world are we in where on the one hand, there's a war in Ukraine and half the teams in Ukraine on the other hand. So I think great companies will be able to raise money under adverse conditions. I can't think what's more adverse than this. And I think people should dial it back a little with concern. VC is a long-term investment strategy, and the short-term twists and turns are the things that we help companies navigate around. So what's a VC to do? We lean into disruption. We're fundamental investors. We're not momentum investors. You know, we think there's a strong European technology opportunity, especially in Poland. That's why we opened an office in Warsaw. We actually anticipate post the war in Ukraine that Central and Eastern Europe is going to get increased focus, increased investment at all levels across society, and we'll actually see a very strong growth coming out of this, as long as we avoid, you know, World War III. And do understand one thing, I'm a VC, so I'm wrong many times. So don't, you know, take this as our central thesis, but we always reserve the right to be wrong, and our failed investments remind us when that happens. What's a founder to do? So in the US, where you're a little further away from hostilities here, take your commute time, and in the US, commute time's longer than here, usually about an hour each way. Take your commute time and reinvent the world. We've already, you know, I referred to Long Boom, this amazing set of tech stacks and rails have been built that allow us to grow companies at incredible rates. Lean into disruption, hire the best talent from anywhere in the world, and we're seeing that. We're seeing equalization or narrowing of disparity of wages for engineers everywhere. And just understand you live in a chaotic, volatile world. You always have. You might look stable in the past. It really wasn't. And run a low burn model. Get early revenues. Listen to your customers. And build a business. And put robustness in. Think about the what ifs. What do we need to do? Have an invasion plan if you're in Central and Eastern Europe. Not that you think things are going to go that way, but as a leader, guide your people if they're anxious. And this is an important point, I think. And this is very much a US perspective, but I think it's worth sharing. Go big. Build a massive business if you can. If you fail, it's only a big business. Don't try and build a decent-sized business because the opportunities out there, the global audience, the receptiveness to new technology from enterprise is massive. And so aim high because this is a world in which a lot of people are able to actually hit the target. Another appropriate quote. And honestly, this is how I like to live life, which is, you know, you aim high. If you fall a little short, you still did some decent damage. And where to do this? Well, Poland. You know, we think there's a great nascent ecosystem, which is why we set up the office here a couple of years ago. There are an incredible number of talented people here and coming, and not just, you know, from Ukraine. And there are really good mentors here who just want to help. And you can leverage that to grow your business. And then this is one of my favorite quotes that I think really applies to entrepreneurship. And Michelangelo was a visionary on many levels. And I think that's all my prepared comments. So let's get into the more interesting part here. Let's do some Q&A. If anyone has any question, I guess put up your hand. Maybe someone will bring you a mic. I'm not sure how we're organized here. Someone help me out. Elsewise, I'm going to be hanging. I might have to start singing or something, which is terrible for you.
Hello, my name is Kamil from Experty. I'm just wondering if your VC company planning to go into cryptocurrencies, blockchain investment, or just traditional one?
Okay, so the question is, what do we think about blockchain?
Cryptocurrencies.
And cryptocurrency.
Yes.
Yeah. I'm going to make a lot of enemies. So on this one, we have not made an investment in a company in the crypto space. We've looked at it. We look at decks every week of companies in the space, and we are looking to find one company that fits a simple test we have for pretty much every company we invest in. Is this solution 10 times better or 1/10 the price? We have a company in Ireland, Manna, that does last mile delivery of food by drone. Ridiculous on so many levels, which is why we like it. They believe they can get the price of delivery down to €1 versus 8 to 10 euro. Passes our test. But when we look at blockchain solutions, they can often be met with centralized databases. And so to use distributed needs to be both necessary and sufficient, and either drive a solution that's 10 times better than an alternative or 1/10 the price. We haven't found it yet. We're waiting for that Netscape moment. It's a bit like 93 if someone said to you, wouldn't it be great if someone could connect all the world's computers together and they could talk to each other? And I go, well, yeah, I guess I have good conversations, but how's that help me do stuff? How's it help me run a business? And then Netscape came along and we had the browser, and that unlocked, all of the potential we see. The same thing with mobile, and that unlocked a lot of potential. So we're waiting to see that potential unlock. Now, there have been infrastructure plays that have worked, and as long as you had a view that cryptocurrency really was going to be around a long time, those plays would have worked. We didn't have that view. And I think from a trading perspective, from a crypto hedge fund perspective, makes sense. But for a venture capital firm that's buy and hold, we haven't yet really seen that. Now, we're maybe naive. We may not know enough about the space, but we'd love to find something that resonates with us.
Thanks.
Yes, sir. Please pick up a mic.
So hi, I am Grzegorz from Aria Fund, and question, since you're active both in the US and in Central Eastern Europe, is there anything particular about Polish or Central European teams or Central European founders that you, for example, don't see in the US? Or is it just that you're seeing that, for example, the quality of the teams is converging? How do you compare the quality of the teams and quality of the founders and the direction in which it is going, between those two worlds?
So I've said for a long time that I think the world is flat and unevenly distributed. And we decided to foray into Europe about 4 or 5 years ago, and we did a lot of work. We felt that Warsaw and Dublin were two areas that had nascent ecosystems. We felt like New York had all of the right things in place to grow significantly. We didn't know what to expect with regard to European founders. We now have approaching a dozen investments in Polish Nexus companies, some are in Poland, some are in Estonia, and other countries around here. We're 6 months, a year in, we got to know the teams, they come over to New York, we're kind of a bridge to them. And I spent quite a lot of time with a fair number of the teams. I have been blown away by the quality of the founders. I have been really surprised at how quickly, how they listen, adapt, build business model. And so I think there may be a perception in the US that because the market isn't as developed over here, the companies aren't of the same quality, capability, and like nonsense. Phenomenal quality, phenomenal opportunity. You know, and maybe it's a little self-selection. You know, one of the things I hear is that sometimes European companies don't want to go big. They don't want to grow fast, etc. We're not finding that with the companies we're working with. So I think that where there's a will, there's a way. That if the entrepreneur is driven to make this really work, it doesn't matter where you are. You know, it's kind of interesting. When I was a kid, my parents bought for myself, my two brothers, a set of Encyclopedia Britannica. Some of you may not even know what that is, but it's like this amount of books, and it had, you know, description of everything. It's an encyclopedia. And I remember my brother got a detention because he wrote a book about airplanes, and he just cribbed it out of it. And the teacher knew this because the last sentence said, "see balloons." But now, everyone's got the sum of human knowledge in their pocket. It's a supercomputer, and you can play Candy Crush, but you also can look up, you know, how to build your own solar rooftop installation. You know, so the fact that you have this has democratized information in a way that's never been before. And so I'm just incredibly encouraged by what we're seeing. We're seeing great companies. I think there's going to be great things that are going to happen. It takes time. Venture's a slow business. I can't think of a slower business than venture. I tell people that the second decade of being a venture capitalist is more fun than the first one, because at least you've got companies that are 10, 11, 12 years old and, you know, huge and doing fun stuff. But it's a slow business, so it'll take time. It'll take 10, 20 years for this to become evident to everybody. But I truly believe there's tremendous capability here. There's tremendous talent, and it should just be encouraged and nurtured.
So when you say that Central European founders do not like the ambition to go big, what do you think is then in their way at this point?
So I'm reporting what other people have told me. The founders I've met, I've not really seen that reticence. But sometimes it's literally I don't want to use the term insecurity or the like, but it's probably they just haven't seen it done before. You know, Silicon Valley, I think as a concept, will look quaint in 20 years, because I think with what's happened with the pandemic, a lot of talented people have left there to go to other areas, and it's sort of equalized things within the US, and I think it's equalizing around the world. So I think people just have to believe it can be done. And by the way, there's a TV series, I think it's HBO, called Silicon Valley. I think there's 4 seasons. If you haven't watched it, please do. The first one is like the first season is a comedy, the second one is a pastiche, the third one is a documentary. It's like just so much embedded good information within it. But yes, I think it's simply a matter of understanding what you can do and how you can do it and just getting educated.
So I guess we have to share more success stories.
Share more success stories, absolutely. And what we found in the US, and I think you're going to find here, is successful people who make money as entrepreneurs, want to give back to community, they want to become angel investors, they want to be mentors, they want to start accelerators, start VC firms and like. And I think that cycle takes time, but I think we're going to see that here.
Hi, Arthur from Ovens VC, so the fund's based here. I have a question regarding your view on valuations. I have met opinion that that scissors are even more broader, so that the best companies, but the best in a way that they are growing like four times a year or 3 times a year, and has like really huge market. They still get that amazing valuation, but then even good companies and mediocre companies are going to struggle a little bit with funding. Yeah, and so what do you think about it?
Valuation is actually a very complex subject, and there are things that are pulling in different directions. So where to start? So let's think about this pandemic, right? We all were at home. Some of us were wiping down our, groceries as they came in, keeping away from people, masks, blah, 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 right? But we picked up our laptops, we went home, and we're probably as or more productive than being in the office, which was kind of weird. But imagine that the pandemic hit 20 years ago. Firstly, you didn't have a laptop, you had a desktop. So you'd have to like carry it, home. And then that wouldn't be very good because the checkbooks were in the office and the paper records were in the office and all the systems weren't on your computer. And even if they were, there wasn't enough bandwidth to do Zoom calls. You have little postage stamp things that look grainy. That's the best video you could get 20 years ago. And Zoom couldn't have scaled because the rails they sat on couldn't scale, etc. So we came into a period, this long boom, where all the rails were built. So Zoom could grow by orders of magnitude. We could all have high bandwidth video conversations instantaneously. We could learn how to do this because the user interfaces were designed to be very easy, unlike the ones 20 years ago, which you scratched your head. So we're very lucky the pandemic hit now. And the economic impact was much less because of that. So understand where we are today. Companies can grow faster than they could ever grow before. And if a company can grow faster, it can have a higher terminal value. And if valuations are a DCF against terminal value, maybe valuations should be higher. Now, when a lot of founders talk about valuations, they're really saying, what's the price of my next round going to be? What dilution am I going to suffer? And we tell founders the dilution you suffer is how you spend every dollar between the round, not where the round is. If you spend the money accretively, your valuation will be higher. If you spend it dilutively, your valuation won't be that much higher. And so that's how you should think about dilution, which is the sort of flip side of valuation. There is a lot of money out there. There will continue to be a lot of money out there. At the margin, may there be less or more. I still don't think putting money in your bank for 50 basis points is that attractive. Maybe 1%, 2%. Maybe if I put money in the bank for 6, 7%, maybe that'd be attractive. I don't think we'll get there. And if we do, there's a lot of other stuff that's going to get dislocated in the interim.
I think on the left,
there's a lot of money in this space because this is the place where growth is. The Fed, since March 2000, has held interest rates artificially low. It's de-alphaed almost every strategy, but growth exists here because Manor, when they deliver something, they can deliver it cheaper than having an Uber driver sitting in McDonald's to pick up your McDonald's and taking 28 minutes to bring it to you when it's sort of soggy warm, right? If they can do that and deliver it in 3 minutes, a better experience, it's 1/10 the price, that's just going to happen. And that's growth. And it's going to enable a whole new series of businesses can sit on top of that infrastructure they build. That's growth. And growth should get funded, and growth will generate a return, right? You've got commodity markets you can trade and stuff, but this is real underlying growth that exists within startups across the board. And so the money's here. Good companies will get funded. Maybe there's some dumb companies that are getting funded that shouldn't. Maybe some companies are getting funded at valuations they shouldn't. But that's up to the discipline of the VCs to communicate. Because we as VCs, we look at thousands of companies a year. We have a bigger data set to think about where valuation should be. But there's a couple of thoughts there, if that helps.
Digging a bit on the valuation, because what we saw in the public market is that many tech companies just went down like 50% or 75% in some cases. Even UiPath, which is like the biggest tech story from the CE, and a lot of it was attributed to rate hikes, Fed policy, etc. Do you see anything of that happening in the private market? Or is there like those two markets live together? Or maybe you just think like our focus is so long term that it like doesn't matter, if the Fed hikes the rates 1 or 2 or 3% for that sense.
It does matter. So a couple of thoughts here. One is, as VCs, ultimate buy and hold, long-term investors for growth. Our companies grow revenues each quarter, year over year, somewhere in the 25 to 40% mark. Other things being equal, if that continues, we think our valuation should grow at that, right? But multiples can come in and they can expand, and that can be driven a little bit by the sentiment in public markets. Now, public markets are momentum. Right? No one wants to buy stock going down. Everyone wants to buy stock going up. People will pay higher prices for something, not lower prices. It's just how it's the George Costanza mentality that's embedded in the public markets. And by the way, before I was a VC, I was at Goldman 21 years, and the last 11 years on the sales and trading floor covering hedge funds. So I have some experience with public markets. I think an analogy I often use with people to think about public and private markets is think of the sea. At the top of the sea, there's a storm. There's a storm going on now. We're in a bear market, I believe. I think this recent rally we've seen is going to be crushed back down. We'll probably take new lows. I think the technicals are weak. But there's a storm at the top of the sea. And then the surface waters are pretty churned up. But the deeper you go, right, there's less sort of disturbing of the water. So seed stage is very low, and it's had very little relevance there. Later stage, near the surface, it has. I spoke to a growth manager who said Q3 we were 6 times fund. By Q4 we were 3 times fund. I'm like, wow, that's pretty bad. It's like a hedge fund without the hedge. And they were buying pre-IPO companies with a view that between the period they buy and the end, multiples don't compress, and they're right 9 years out of 10, but in that 1 year it doesn't work. It doesn't work. Well, we're not seeing that because we're across the stack. Because we got very early companies, we got later companies, and you blend it. Our median duration is less than theirs. But yeah, it has an impact, and it is relevant. And for some of the frothier stuff, it can certainly impact. But If the companies are growing 50 to 100% year over year, you got to see a lot of multiple compression to not recognize that the company is getting more valuable over time.
So you mentioned management accounting. How do you deal with small, young companies that have not much experience with that, getting in place kind of management accounting that is the foundation for the next growth?
The question is, how do we help them think about their numbers, about accounting?
Well, I mean, typically, it's statutory accounting, that's kind of the basic stuff that everyone's dealing with, but then getting up to management accounting, understanding the real margins of the business, et cetera, how they grow, that's an important part. But I think that's not very typical in Central Europe that you find people that understand the management accounting.
Right, so that's like a really softball question for me, because prior to my 21 years at Goldman Sachs, I was at Arthur Andersen, I qualified as a chartered accountant. So for those in the room who don't know the difference between financial accounting and management accounting, most accounting firms who work with startups do financial accounting. Here's your balance sheet, your extended trial balance, your P&L, flow of fund statements, and that's about it. But we think management accounting is very important. You have one product, what's your contribution margin? You have two products. What's the contribution margin of each? Right? Product line P&Ls, very important. That's why we built an accounting firm to provide management accounting support to our portfolio companies. It's called Graphite Financial. When it got to about 40 people, we spun it out because I didn't want to manage 40 people. But it's out there, it exists. We feel that about 10% of startups fail because they don't know their numbers. Very rarely is a CEO an accountant. And they don't know what they don't know, so they lean on their accountants. Their accountants provide them financial accounting information that's insufficient. If you have a negative working capital model, one where you get paid before you have to pay, and you're growing fast, that's wonderful. You start to grow a little slower, all your cash disappears. What happened? Right? So accounting can be very relevant. VCs don't talk about all the accounting screw-ups that companies have, but I think about 10% of companies fail because of that. So yes, we think it's very important. We believe CEOs should make number-informed decisions. So understand your margins. And it can get complicated. You have a marketplace where you're trying to build supply and demand. Understanding your cost acquisition is really difficult. Knowing your margins are really difficult. And a lot of marketplaces, I think, fail because neither they nor the VCs around them nor anyone on the board understands this. So yes, strong belief in management accounting. It's very important. There's a question at the back here.
Hi, Adam from Bowweb. You said that Central European companies don't dare to go break so quickly. What's your general view on, let's say, a company from Warsaw or Central Europe? Should they grow first here in Central Europe or go immediately to the US? Do you see a point in growing in Central Europe and then maybe a little bit broader, let's say Europe or Western Europe, or you advise companies to go to the US right away?
It depends on the company and depends what you're selling and the like. I will tell you that my answer today is different than it would have been 2 years ago. 2 years ago, I'd say build big in the local market and then work out how to go global. I think we're at a point where, because of the pandemic, we've broken the notion of location. We have a company called Secure, growing rapidly. They raised around a $4.5 billion valuation recently. We led the seed round. They used to be a New York firm, New York head office. They came into 21 with 184 employees. They exited 21 with 450. They now have about 650. They want to end this year with about 1,000 employees. And around about December last year, I spoke to a CEO and I go, how do you think about remote? He goes, the vast, like over 50% of our employees aren't based in New York anymore. I've actually moved to Park City. We're not a New York firm anymore. We're remote first. We had to be. We just hired the best people. Why focus on people who just could commute to an office in New York when we weren't even occupying an office in New York? And so, and I don't think he cares whether they're in the US or if they're in Warsaw. If they're the most capable person to do the job, he's going to hire them. And so I think location has broken down. In addition, remember I talked about all the rails being built? There are companies out there that allow you to hire employees in any country in the world without you having to actually set up an office because they're an employee of them. They're like a super PEO. So I think given where we are, given the tech stack, given things have been built, location isn't that relevant. So if your company, it's easy to sell into the US, sell into the US. If the experimenting locally and building a brand locally is the right strategy, do that. It very much depends on the company. So there's this new paradigm here that I think is just a little bit different. Do we have time for one more? Or I think we're out of time, folks. I really appreciate you having me here today. This is a lot of fun. I'll be around for any other questions, and thank you very much for coming today. It's going to be a great summit.
So, guys, I know that this is a time of COVID, but I promise that the first row and the last row have the same chances. So try to be as much close to the beginning as possible. We're going to have a very interesting pitching contest right now. I told you I have a problem seeing you guys, but I will try to do my best. How many of you guys are startups? You can raise your hand. Nice. And VCs? And startup enthusiasts. Okay, nice. Good. So guys, I'm not going to take that much of your time. I will basically start with announcing the mentors that, let's just say, they're going to judge our startups, hopefully gracefully. Daniela from Aquatica Experience. Hi, Daniela. And also Theo from Miru Capital. I pronounced it properly. So I'm not going to take more time from the startups. Are the guys from eTalk here? eTalk? Perfect. So please just give them a round of applause on the stage. So you have 10 minutes, and then after that, 5 minutes with the mentors.
Hi guys, my name is, thanks for giving me the opportunity to pitch you today. My name is Vyacheslav Zhiratkov, and I'm CEO and co-founder eTalk. It's an online English learning platform for adults and kids. We simply match students with teachers on the platform. I have a very short 1-minute promo video, and I would like to organizers to put it on the screen, and then I'll continue with my presentation. Thank you.
And her son, Mark. Mark studies English at school, but the lessons are not interesting and boring. That's why he doesn't keep up with the curriculum and barely speaks English. And this is David. He's been studying English for a long time, but still has problems with basic conversation. With eTalk, Maria, for her sons Mark and David, are able to get personal online classes to help them become fluent in English. You can start learning English with eTalk today. Just follow these 3 easy steps. 1. Send a request. We will select a teacher for your needs from thousands of experienced tutors from all over the world. 2. Take a free trial class with selected teachers online. 3. Plan your study schedule and start learning. Online English lessons are the next best thing to living in an English language country. With eTalk, you'll have a personal English teacher and real conversations with native speakers. Every day, thousands of people are connecting to international teachers through eTalk. Find a personal teacher for yourself or a child today and become fluent in the English language.
That's it. So you can understand the product so far. I should have a slides. Right. Just a brief history about us. My partners and I, we have been running physical English language schools for many years back in Ukraine. So we have very deep expertise in education. Coronavirus forced us to go online, thanks God. When we launched eTalk 2 years ago, we quickly realized that we have to use off-the-shelf edtech solutions because it will let us to scale globally very quick. Problems on the market. Everyone who previously studied foreign language or tried to find a tutor for your child, you know that it's very difficult to find the right fit. Usually it's time consuming. There are three typical problems. Lack of professional teachers, high cost of training, and a lack of schedule flexibility. So, sounds familiar. Try finding a teacher for yourself in the big city. Usually it takes at least 1 hour just to get to the place of studying, and good teachers are very expensive. So solutions for that is very apparent. Try to provide the accent for the sounds of the thousands of the teachers and the native speakers. Sorry, it's too low. Affordable tuition fees due to no infrastructure costs, and ability to study at any time, at any place. To solve all the problems and cover one of the significant pain points matching with the right tutor, we launched eTalk. The platform meets all the necessary requirements for the both sides, for teachers and students, and our success rate in matching with a proper teacher is extremely high, so students and parents are usually thrilled with the fit. On the platform, we have all necessary tools and features like concierge service, self-booking and cancellation classes, 24/7 support chat, virtual classroom with audio and video, and pre-built tutorial materials. We accept Visa, MasterCard, bank transfer, PayPal, and even Bitcoin. Here's the platform, how that looks like inside. Let's go to the market size. The market is very competitive, but it's also huge. More than 1.5 billion English language learners worldwide, and just 10% of them studying English online. According to different resources, the current market size is more than $15 billion, and it's gonna grow. Competitors. There are a lot of competitors. We picked a few who we considered to be good, successful startups. All of them that selected, they were funded by venture capital. All of them raised more than $5 million US or even more. All of them have more than 10 million revenue US dollars, and all of them have more than 10K active paying students. Some of them have the numbers even much bigger. Business model, pretty simple. We have different subscriptions plans. The customer can pick from 5 to 40 classes. Once they exhaust the package, they can just simply buy a new one. Product market fit. We brought our rich offline expertise to the EdTech. We know how to grow the number of students. We know how to grow the selected team of teachers. We know how to do a daily operation in the educational business. But since the learning language market is very competitive, you have to do things differently. So for our strengths is the right ecosystem for the teachers and students. Shown carefully selected teachers. We provide a free trial class for prospective students with a future teacher. We have ability and expertise to scale our product on many markets. Regarding traffic, we use different channels, but the biggest one is paid channels of right now. It's Facebook ads. Our audience, we sell English, individual English lessons to adults and kids in 6 countries, and we speak in 6 languages. Tractions. So far, we did pilot campaigns in more than 10 countries. We spent more than $50,000 for that experiment. We got pretty good return on investment and LTV and CAC ratio. We got more than 2,500 leads, set up more than 1,000 trial classes, and earned so far $150,000. I think we are not on MVP stage right now. We already have some P&L, so there are some numbers on the screen. And in average for the last 5 months, our monthly turnover was $13,000. Here's our milestone. Last year, we raised our first investment. It's $100 from UK-based private equity firm. This year, we reached the break-even point. The biggest goal that we have to reach 1,000 paying students within the next 12 months. Our plans, we have to grow up to 80,000 or up to $100 monthly revenue within the next 12 months. And our product is universal and it's easy to adapt to a new market. So it's absolutely, we can ready to achieve that. What we need, we plan to raise $500,000 and it will be enough for 12 months runway. We plan to invest mostly in marketing and grow our sales in new markets. For the next year, we plan to be present at least in the 12 markets, but our goal to be present in more than 100 countries. Our team, there are 3 co-founders. Julia and I, we have tech degree, and Kate has linguistic one. We already have a solid team of 20 members with a different field like developers, sales, marketing, HR, and so on. And also, we are proud to have more than 100 selected teachers on the platform from different countries right now. Guys, thanks for your attention. If you are interested in eTalk, please, you can just get in touch with me or just catch me in the venue. We can set up a follow-up call. I can share more our financial model, P&L, our predictions, and also I can update you with our progress. Thanks, and please enjoy this event.
Thank you very much. In case that you don't know what's the difference between a startup and a scale-up, you don't have to cut scale-ups, they finish on time.
Hi, Slava. Great presentation. Hello, everyone. Great to be here. Well, you have a very, very nice platform with a lot of soft skills. Hmm? Yep. What would you say about the soft skills of your, let's say, co-founders? What's the main strong power, you and the 2 ladies? What brings in the platform your soft skill generally?
Like our team and my partners,
yes,
our soft skills, I believe they are very good. We have more than 15 years of entrepreneurial experience. Mm-hmm. So we started when we was like 20. Before that, we traveled to the US and Europe on different exchange programs. So since our business is education, it's everything about soft skills. So our personal soft skills is, I believe they are very high and very good. We are very adaptive. Our roots from Ukraine, and you know, when you work in such countries with so many problems for the many years, you have to adapt. You have to, you know, get well with different people, learn the experience, and so on. So I believe we are all like, you know how brave Ukrainians are. So we are all adaptive, and our personal soft skills are very good.
I know, I'm Romanian, so we know the lessons. Great underlines. Please add in your pitch because it will help a lot. Right. Please. I have more questions, but I'll just use the other occasion. Please.
Okay. No, thank you for the presentation and for the traction already. It's really positive. I was thinking a little bit about the perspective of a student coming in and understanding the quality, I guess, of the teachers. So how do you check that it's consistent quality, that when someone comes to the platform, they know what they're getting in terms of content and learning?
Yeah, good question. So the key point to have the best teacher, we select the good ones from different countries, from South Africa, from UK, US, from Philippines. We have a very strong selective process. We take the teachers with some experience, with diploma. We check it. They run the demo for my partner. She's academic director. She was a teacher for herself for 15 years, and so we didn't came from nowhere. We used to run big language schools in Ukraine, so it's not a new field for us, and we know how to select, how to train, and how to grow the teacher with us. So it's like a internal ecosystem for teachers.
And also in terms of marketing, I think one thing that's super interesting here is that you have lots of specific pools of people that are looking for classes. So you have students that are looking for help to learn English, you have immigrants that have moved into a country and want to learn the language where they're working, or people that are business people and want to sort of do business outside of their home country. Is that sort of helping you guide your performance marketing a little bit in terms of where you're sort of focusing on acquiring students?
Yeah, you're right. I think everyone needs to keep up language, learn new one, and so on. We use different channels. So since we are limited on capital, we can afford just to use a few of them and to work with specific audience. We decided that we should focus on kids on the first place, and then on adults. Because lifetime value of the kids is long, and especially that's such a hard time. Adults, they can give up at any time, but the parents usually invest in their future of the kids, and they can take classes for many years. So we focus on that audience, and we are looking the cheapest channel, how we can get to the audience. But right now, there's startups in our field. They just decide to specialize on refugees, and they don't take money from the students. They are looking for grants and sponsors from outside. Right now, our model, we sell directly. So we work, and we need to approach to the families, to adults. Also, one of our points to work with big corporates to educate their employees. In our previous experience, we had a lot of tech startups, companies back in Ukraine. But for the eChalk, this is something that we have to. This is a point where we can grow, especially on the US market. We already have some corporate clients, but the number is so small, so I even decided don't put it on the screen on the presentation.
If you don't mind, because we have another hot startup that is waiting, and we passed 5 minutes.
We already passed.
Yes.
First of all, just the last.
You have an opportunity at the end for 15 minutes to elaborate on the whole thing.
By the way, about soft skills, let me underline the admiration that I think it's obvious for everyone what happened now and how the Ukrainian people react to this out of the time situation, very bad situation. Yeah, you should.
Thank you very much for the feedback.
Thanks.
Yes, perfect. Thank you very much. As I said, guys, we have a very, very hot startup. The name is Lavotech, so I hope that they're going to be as hot as lava. So welcome on the stage, and just round of applause, please.
Hi, everyone. I've just had eye surgery some days ago, so it's very hard for me to look against light. I will be closing my eyes. I started Lavotech 4 years ago, and what we want to do, we want to make indoor farming scalable and sustainable, because you've heard probably that a lot of vertical farms raised hundreds of millions in their rounds, but the problem is none of them are sustainable up till now or profitable. And with our technology, we can actually make them profitable. We found a way to decrease energy consumption significantly. Right now, the problem is that we will need to produce much more food within the next couple of decades, and the outdoor farming just simply can't give it to us for various reasons, logistics, use of land, and so on and so forth. And as I mentioned, the main problem is that 60% of revenues of pretty much any indoor farming facility are spent on their electricity bills. And most of that, 80 to 90%, comes from lighting. We've developed a full system that helps to decrease light energy consumption by around 80%, and then the whole indoor farming facility energy consumption down by, on average, 60 to 75%. We have products both on hardware and software side. On the hardware side, we have drivers specifically for the lamp, which is patented, because with that driver, pretty much any LED lamp we can decrease energy consumption and work with. We have control unit that we also developed ourselves, which we connect to driver sensors, irrigation, ventilation, basically anything that you already have integrated in your vertical farm, or we can help you to integrate it as well. And then the information from all the hardware and IoT devices goes to our cloud, where the machine learning analyzes it and helps you to find the best case scenario where you would not lose any of your yield, which actually helps you to increase the yield, but then save the most energy possible. And the beauty of it is that you do not need to know the biology part of it, because the system will tell you what is the best scenario. You can find that information either on our app or on your desktop version of the app. You can download our app as we speak from App Store or Google Store and just run a demo. What it gives to our customers: full control of all parameters, 60 to 75% decrease in light energy costs, at least 13.5% decrease in their OPEX costs, and around 20% increase in yield. For example, in here you can see that we were able to decrease the energy costs 3 and 4 times comparing to the competitor systems. The market is really big. It's projected to be over 171 billion within the next 4 years, and we are specifically addressing the indoor farming tech market, which is already almost 40 billion. We operate on light as a service, so we provide access to our hardware and software based on the monthly fee, and it obviously depends on the size of the facility, but we also sell our hardware upfront in case that our customers want it. If we're talking about our hardware, so it's suitable for any type of project, small or large. We provide fully remote updates and technical support. You do not need to have any programming or electrical skills to set the system up. Any sensors, anything can become part of the system. You don't need to have 10 or 15 apps. And then you also, we provide several various communication channels with devices. Originally, the system operates on Modbus, but you also can connect it to Wi-Fi or 4G or 5G, whatever you have where you are located. So that's how our controller looks. Super easy. Basically, our next step would be to adjust this controller for any indoor facilities, including, for example, offices and so on, because energy reduction is a huge topic for any properties. We provide also extension models, so you do need only one controller per facility. We integrated beautifully into installation solution, basically a panel. We can also integrate their touch screen, and only your skilled workers will have access to it, to the hardware part. Then this is our first B2C project, which became a hit in Estonia. So this is a fully automated small vertical farm. We've integrated it in over 20 schools in Tallinn, and we've launched it only 2 months ago because it helps kids to see in biology classes how the crops grow. They not need to have any skills for it, plus they can also see the technical part of it, the automation part. They get to experience the app, like laptop experience and so on and so forth, and we actually planning to also install it in some Polish schools as well. This is how our app looks like. You can either choose from existing presets. You can use our cloud and machine learning background to help you to create your own presets, or you just don't use anything of that. You can completely create a preset yourself, and that would include over 20 parameters that you can control. If we're talking about the founding team, myself, I'm in Forbes Under 30 for industry and manufacturing in Europe. I'm also included this year to MIT Innovators Under 35, which will be announced in May. We have a very strong engineering and software development team on board. We've received European Commission grant of 3 million a year ago. We've also been funded by Sony and by Tesla co-founder and former CTO J.B. Strobel, and some other sustainability investors. So yes, I would be happy to talk with anyone who is passionate about making cool technologies that can actually improve the quality of life for us, and who wants to make indoor farming profitable and sustainable. Thank you so much.
Hi, Tatiana. Love to see a lady founder on the stage.
Thank you.
Congratulations. It happens that I know the industry. I also invest in 2 companies that they are using this. Let me ask you a kind of personal question. What make your soul as an entrepreneur and innovator vibrate more? Profit, awareness, contribution? Choose.
I would say the change that you can actually do with your technology. I believe that in 21st century, we have enough of financials and enough of knowledge available to make happen pretty much anything. It's just the question of the desire.
Thank you. Love your answer. Please.
Very good question as well. In terms of when you go to a potential customer, what's the sort of pitch do you say that you can save on energy, that the yield is higher? How does that compare to, say, a competitor? Like, are you slightly cheaper, or are you slightly more expensive but the yield is higher? Like, what's that sort of?
We are the only one on the market who can decrease energy consumption from LED light systems. So whenever you hear about decrease in energy consumption, it's because our competitors install in LED light systems and they're more efficient than fluorescent. But nevertheless, they still spend literally hundreds of thousands a month for electricity and energy bills, while we can decrease energy consumption from LED light systems. Plus, again, you can integrate into our app and system any IoT devices, because the biggest problem right now that everyone is developing the solution for a very specific problem within the indoor farm, and that just doesn't really help the farmer.
Right. And what are the customers sort of, are they responding to that reduction in energy? Are they saying, yes, I want to go with you because, the energy cost is 30% cheaper and it's going to cost, the economics work for them? Or
yeah, obviously the decrease in energy consumption is our best punchline, the sales line. Normally we run a pilot for around 4 weeks. That's more than enough for the customers to see the decrease in their electricity bill, and then we just go from there. But it's it's not the word. All the facilities have electrical meters, so they can just track it real time. We don't need to come up with a number.
Yeah.
This is just the trigger. You have more behind, more tools that offer efficient and advantage to your client.
Yeah, exactly.
Just love to hear later on. We are in time. I don't know. I think we still have more time for one question. Where would you see your solution in the next 10 years? Where is the limit? Are you going to take it on March or?
Well, I mean, the space industry is where we were offered to test our solution, but unfortunately, as not only as a startup owner, but as a business owner, it just doesn't make sense financially wise. It's cool and cute and would be nice to mention, but it would use a lot of our resources and wouldn't give us as much profit. But it's very hard to say. We probably will have exit by then and would be integrated into one of the bigger corporates.
I think I can see it in every house, on every phone, from my point of view. It can work.
Well, every house is, so if we would be working more with warehouses, not the places where humans operate mainly, because when we operate with light, we basically make it pulsate on very high frequencies, up to 35 kilohertz per second, which we do not know how affects human brain, and I personally don't want to test it in the long run, so cannot give you, cannot guarantee that we will be in every house.
Then interesting detail. Thank you. Thanks a lot.
Thank you so much.
Congratulations.
Thank you very much. And we're going to have more scale-ups, but this one is going to be the last for this batch. So I am not going to take too much time from the guys from Spree Interactive. Are they around? Perfect. Welcome on stage.
Hi there, I'm Jonathan. I'm the co-founder and CEO of Spree Interactive. And let's see whether we can get our presentation up on the display. Here we go. So we are actually developing the next generation entertainment, and I've here a virtual reality headset with me. And we have raised so far 8 million euros, 5 million equity and 3 million debt. And we're growing the last 3 consecutive years for 250% each year, despite COVID. And what we focus is actually selling B2B turnkey virtual reality entertainment systems to theme parks, to family entertainment centers, to trampoline parks, to sports parks, to shopping malls, to cinemas, basically everywhere where people come together to have fun. And we think that VR and fun in a social aspect is even nicer. And let me now play this video, which I will talk over so that you can get an idea of what I'm talking about. May you play the video, please? Perfect. So essentially, with our virtual reality, it's all about active social fun. So it's the aspect that you have a free space. It's like a true holodeck experience, so 10 by 10 meters empty, and you can go anywhere. So sky is the limit. We started with kids. Why kids? Because kids are very adoptive. So for them, a virtual reality headset is as new as an iPad, and they love it. They put the headsets on, and then they're immediately in another fun world. We started with ultra casual games, basically mini games, 3 to 5 minutes, above all for birthday parties. Every parent in the room will understand that as a parent, you always need to come up with new ideas what to do with the kids for birthday. And our clients make 50% of the profit and revenue with birthday parties. So that's why we are trying to help them with virtual reality birthday parties. And the biggest media company in Europe, ProSiebenSat.1 Media SE, publicly listed, invested 3 million in our seed round. With that, we moved to edutainment, so you can fly to Mars with us. And now, recently, we've onboarded a leading virtual reality esports title to our platform. In essence, to create more different content for different target groups. So by now, we're also covering team building events, corporate events, and teenagers and adult entertainment. And in order to grow that content portfolio, we are raising 12 million Series A, and we have already 7 million euros committed. And I would love to speak to you if you're interested to either invest as a follow investor or as a lead investor. And here are some trends why this is actually being adopted globally. First segment is shopping malls. So shopping malls with COVID, actually this trend has been accelerated. Either they die, and many of them in the US are dying, or they will transform to entertainment and experience places, and we help them to do so. The second segment is theme parks. So theme parks, either they need to also keep up with the in-home entertainment alternatives. All kids are playing Fortnite at home, so they go to a theme park, they want to be actually do something beyond that. And we help theme parks doing exactly that. So what we provide is the world's highest user throughput virtual reality attraction. What that means is essentially there's no other virtual reality attraction in the world where you can entertain more people per hour as with our system. So we have 3 products on the market, X6, X10 and VR Bumper Car, where we have put VR on on real life bumper cars. And a key KPI for our operators is 3,500 plays per week per attraction. That means you can multiply this 3,500 by 5 euros or dollars, and then you get an idea of how much revenue they make on a weekly basis. And our goal is them to break even within the first 12 months. And it's based on proprietary technology from the Fraunhofer Institute of Technology, where we are spin out from. So essentially, it's the MP3 birthplace. And the technology is patented, which is sensor fusion, in order the kids not to bump into one another. And let's see what the business model is all about. It's straightforward. We provide a package of the hardware, which is off the shelf. This is Chinese made. And we take the latest headset, so we're gonna change to a new headset soon. Then we put our own content, and we have third-party content. And in essence, in the future, we're gonna become the Netflix for virtual social worlds. So our content part will shrink, and our hardware part will shrink, and our content part will grow. We're selling this globally through resellers, mostly to operators who then charge tickets to the end consumer. So we have a pretty good attraction rating and won several awards. The biggest client currently is Urban Air. It's the fastest growing franchise chain in the US. They're growing with 1 park each week. And our virtual reality attraction is set in the blueprint. And here this gives an idea of what the top 19 chains globally can bring us. So over 200 million in revenue and 15 million in annual recurring revenue. If we look at the content, as explained, we started with family-friendly content because there was a huge gap on the market. There were just zombie shooters out, which were actually a bit boring. And then we moved to edutainment, and we are honing in on this, creating new titles and esports. 50% of our content is developed in-house. It's more profitable. 85% gross margin, because once you created the virtual content, you can obviously distribute at no cost. We have an open SDK for third-party developers in order to encourage to build an ecosystem, and we've already onboarded selectively one of the biggest Hollywood studios called Pixomondo. They actually did the mission to Mars for us, which is here. So besides the 3 million in seed round from ProSiebenSat.1, we got 250,000 for mission to Mars, which is graphically a bit higher quality, and we're selling this globally to museums and science parks. It's fact-based, so basically the users, they learn something about humanity surviving on Mars. We launched it last year, just when all the rocket ships went to Mars, so it was a pretty good timing. And if we look at the competition, we beat the competition by far with the highest user throughput, which is important for the operators, because the operators obviously want to make money. So the more throughput you have, the more tickets you sell, and the quicker the ROI. So this is the most important, and therefore also we are the most price competitive. And we designed the whole experience in a way which is easy. So a real-time multiplayer VR attraction is not easy, but we had to make it easy so that a teenager can actually operate it, because usually in these places teenagers are operating. And we are also the only one with the bumper car VR, which I'm gonna share a little video with you. So if we look at the market, we clearly see that Facebook, now Meta, goes for the consumer market. We believe that it's not prime time. So if you look at this headset, it looks like Nokia communicator before the iPhone came out. So Apple is about to enter this market, and then it will look a little bit like more like glasses. However, as long as it looks like a Nokia communicator, we believe that not the mass market will want to own this at home. So what we're offering is virtual reality as a service. So you don't need to own this. You don't want to handle how to calibrate this. You just want to have fun with your friends. And that's why you come to our client side. You do exactly that, and then you go back to reality. So we see a market gap of 5 to 10 years until the headsets are really that slick that everybody in this room has a headset at home. And that's why we obviously want to capture that market. At once the in-home VR market is ready, we are actually in a prime position to also dominate that one.
One more now.
Okay, thank you. So this year we are on track to reach 6.5 million revenue by having installed over 100 attractions. And as mentioned, our content proportion will grow to up to 50. therefore really becoming a Netflix model. If you look at the unit economics, we have a pretty decent margin on the hardware, which is year one. However, with the fundraise, our goal is to increase the content part, which is even more higher margin, which is 85%. So this is the video which I want to skip now. We grew the last 3 years for 250%, and this year we want to grow from 2.5 million to 6.6 million, which is even more. We have a pipeline of over 19 million globally, and we've raised 8 million so far, 5 million equity, 3 million in debt. Deutsche Bank is giving us loans, so we are bankable, and right now we are raising 12 million. We have 7 million out of that committed already, and we're looking for 5 million outstanding.
Thank you very much.
Thanks.
Perfect.
So happy to take any questions.
Hi. I have to admit, I know you. I am a IAPA member. This is my history as an entrepreneur. So in Romania, I am involved in like 200 million parks in development projects. So I have to be tough with you because we are professional, okay? How did you resolve the motion sickness?
Sure, good question. And so that is exactly where our patents come into play. If you've seen the video, basically the people move around. Motion sickness happens whenever you have audiovisual inputs from the headset and a stomach feeling. For example, if you sit down on a chair and your headset says, I'm on a roller coaster, but your stomach tells you, I'm sitting. And this disconnect basically obviously makes people feel bad.
You don't enjoy the feeling.
Exactly.
We use it in water slides.
Exactly. And what we're trying to do is basically give the users the power back to actually decide how fast or how slow the user wants to move. Essentially, one step in reality is one step in virtual reality. So the worlds are congruent. You're not teleporting yourself, because teleporting is for gamers common, but for the average Joe, let's say, it's not common. So that's how we want to, or that's how we are actually fighting motion sickness.
Just wait to try it. Do we have a chance here?
Exactly. I have an offline demo. So exactly, we would like you to also get immersed for the virtual reality bumper car, which now I haven't touched upon. So in this headset, I have an offline demo. That means you are in a virtual reality bumper car in a futuristic Asian city, and you need to find a gigantic...
We can do it in the break.
Exactly. Yeah, exactly. I invite all of you
That's
to
great.
actually join us at one of these cocktail tables. Me and my colleague Alberto, who is filming here, we're gonna, happy to get you the headset on and take you to VR and back.
Oh, please.
It's really impressive. It's super complex to have multiple people in one environment. So congrats on developing the product to be able to do that. I was wondering about potential other applications such as industrial training, sports, where you have a group of people that you're trying to teach to do a certain thing, as a group, whether that's potentially a market that you might target.
Sure, that is on our roadmap. So first we want to dominate the entertainment space. Obviously startups need to focus, because I'm not a gamer, but we've chosen gaming as most adoptive, because obviously it needs to be safe and fun. So the requirements are comparably low. If I'm talking to BMW, it needs to be safe, fun, and super realistic, even more realistic than the car itself. So basically their requirements tend to be higher. However, other applications we see is virtual reality real estate showrooms, because they have the 3D data anyways there. Other applications we see group simulations, like either emergency, firemen, or defense. And other applications we see also in industrial, like factory line planning and all that, so urban planning. So there are plenty of applications, and that's also what we're going to leverage once we have our footprint. Actually, because during the day, some of these entertainment locations are also idle, so we can even leverage the entertainment locations for B2B use cases in complementary times.
My last question, how much is your R&D budget for the future, for the next milestone, and how much is dedicated to hardware, how much is to software?
That's a very good question. So important for everybody to understand is we are not a hardware business because obviously hardware is hard. So we focus on the sensor fusion, which is essentially a algorithm and which we can combine with different types of sensors which are off the shelf, as well as the headsets are off the shelf. So there are plenty of companies doing that, so we don't need to do that. So we focus mainly, also with investment, mainly on content and software, the software to make all these hardware work together as an operating system. And our R&D budget, so coming from this R&D institute, we have my co-founder is a pretty good guy in getting funding. So we have 5 million non-equity, non-debt basic, which is subsidy or part subsidy in European, German funding. Yeah.
Love it. Thank you.
Thank you, everyone.
Let's try it.
Exactly, let's try it.
Thank you very much. So guys,
more questions?
We had, yes, you can come back on stage. As I mentioned, you know, we have scale-ups and they are complicated, they're mature, you have a lot of questions. So I thought that maybe we can try to get some more time, try to go through them. And we just see 3 of them. And how do you see it?
No, very different, very, you know, all like, you know, a different approach, but all, you know, very exciting technologies. I think anything energy related at the moment is super valuable. So definitely the indoor farming model, I think, is a really powerful product. You know, also we just talked about the applications here with the VR, and I think there's a heap of things that, you know, that business could go in as well. And then the first one, in terms of the language learning, also, you know, capturing some trends that are very relevant, like freelance working and geographic sort of, you know, arbitrage or opportunities, and you know, helping people across different borders, which I think is, you know, touches on a few trends as well. So, you know, great that they're all sort of going in, you know, directions which are, you know, very, very relevant today.
Great panel, by the way. We had soft skills, we had innovation and disruption. Love it.
All covered.
All covered. And I hope it was interesting for you. From my point of view, it's totally a win, because I see where it's going, how fast it's moving, the industry shaping totally each industry, all the industries. So obviously this is what happened also on the scene today. So yeah, e-talk, I love the sensitive part. I don't think the money will resolve their market issue, because that's they're challenging the marketing and the sales. But I think their personal soft skills as a co-founder can do it. In innovation, I love how you put together all details, and the fact that you was very sincere about the side effects. That's very important, because many of the innovation startups do not even more than startups, do not share this. And I'm aware about this, and I love that you said it. And disruption, yes, it's starting from the game, but it's always good to reconnect with human. I think this will be their challenge, because it's true, metaverse is coming. It's true, I'm a little bit old-fashioned, but I also enjoy innovation and where it goes, where the technology takes us as a humanity. And I think this will be the, if you want, the challenge, but also the advantage that they can have it with this technology.
You know, during the pandemic, everybody was like, we're in it together. But then now we just see that we're not. Like when you're a startup and then you say that, oh, we're metaverse, and despite the COVID, I was just like, that was amazing. Because everybody was at home bored, and I was like, what am I gonna do? So I'm just gonna live the life that I cannot have in reality virtually. So I would say that, let's just say, they were really helping. And I'm saying that their growth for a lot of people was like having the right mental health. Because the moment that you're alone with yourself, and a lot of people really did not have anybody in the place, or even some people did, and it was just too much, you know? A couple that was see each other like half an hour per day. Now they have 24 hours to do that. So these opportunities were a big thing for them to grow, and at the same time, the opportunity to those people. So how do you really see this? Like, let's just call it taking advantage of these, you know, volatile times.
Yeah, I think COVID has had some benefits, at least in terms of fostering, growth of some of these tools. We now have them. We're still working on a few bits and pieces, obviously, but we now have them, and it's really, our responsibility is to make sure that they're on the whole positive, because everything can be used, too much, or create some behaviour which is not positive. So I think the technology is coming along, and it's really now making sure that we are using them in a positive way, because the potential is really, really great. So I think it's it's a real positive thing.
As I see things from a personal but also professional perspective, it's simple. I am as an entrepreneur, and I'm also now investor. I'm coming from the industry of tourism. I am naming attraction parks and the theme parks, and all the startups here can be totally integrated in some levels and part of the activity. And what I see here is the chance, as you said, to create the future. So they have in their hand the chance to create the future. Where is going to take us, the technology, it's depending on us. So
we have a chance to build a future. Yes. I mean, that couldn't be a better word just to wrap this part up. So first of all, thank you very much. Hopefully we're still going to have you here. Yeah. Guys, I'm not sure if any one of you guys like money, but if you do, we have 2 panels for you. And at the same time, don't worry about it, because both of them are going to be recorded, so you can always just go back to that. So if you guys are into media and then try to merge it with investment, we have the media for equity and the other part. And if you are interested in to know which kind of investment is good for your startup, then you can be here, and then we try to, let's just say, have the panel for you guys. So you can choose. At the same time, don't forget to be on Umbrella. Not umbrella. I'm still going to remember that. And try to make sure that you do your networking. So I ask people to do 3 things at the same time. I will remember that one also. And at the same time, hopefully we will also have you here. All of your insights and everything, I'm sure, for the investment for startups is going to be very helpful. Thank you very much.
Thank you.
Thank you. We had a very interesting few scale-ups. Let's just say that was a good warm-up for where we're going to go right now. And I really have the pleasure of having such a good panel here. And one of our panelists also is going to join us live. Just that we say that we still know that we're in the pandemic time, and like we're having to, let's just say, have things hybrid. It's kind of also the pun, not to put everybody in one place, not to put all the eggs in one basket. So we would like to really try to dig into this whole idea of investment for startups and scale-ups. Let's just say that I'm sure that some of you guys deal with both of them. Some of you guys are in more later stage, so you're mainly going for scale-ups. And let's just say, considering the very limited amount of time that we have, we're going to way more focus on two things. First, only on the scale-ups. Second, only on the interaction between the investment side and the scale-up. So I'm sure that there are lots of other aspects that we can always discuss it in the future, but for the time being, we're just going to stick to that part of, let's just say, the general topic. But if you would like to have that, we would like to have two different things. A bit of sense of, let's just say, who the audience is going to be for us, and at the same time, let's just say what you guys are doing. So let's just say that, if you don't mind, Natalia, we're going to start with you, a quick introduction about yourself and the company you're presenting.
Hi, everyone. I'm based in London. I have a family office which I set up after launching, after having my own investment banking firm for 8 years. And before that, I was at Morgan Stanley. So I represent probably as a person two sides, because I used to be entrepreneur. I'm still entrepreneur in my heart, but I tend to become, I moved into investing side 4 years ago.
Oh, perfect.
Hello, everybody. Robert Łukowski. I'm a founder and CEO of Cobin Angels. This is the Business Angel Club based here in Warsaw. And we serve both sides. So on one side, we associate angel investors, quite a large number of them, and help them to become an angel investor, and then help them in investing in startups. And on the other hand, we try to support startups by matching them with a large number of angel investors and creating some value out of it.
And I got used to see online mostly. Yeah, the COVID time. So I'm Paulina. I'm representing BNP Paribas, where instead of implementing the startups, we also started financing them. And I believe that we are the most flexible bank to do this. I hope I will have a chance to get into details a bit today.
Thank you.
That's me. So today I'm representing AT Energy, which is a pan-European investment fund. We are early stage investor. We're investing in the energy sector, and our goal is to make Europe carbon free until 2050. And in the past 10 years, we invested in more than 400 startups, €500 million, and we're still looking to invest more. Thank you.
Thank you. Are we going to have Sama too also?
Yes, not sure if everyone can hear me. Does it work well?
Hi. Yes, very much.
Perfect.
So if
Hi,
you can
everyone.
also introduce yourself.
Yes, sure. So hi, everyone. I'm Sama. I'm from London today. I was hoping to go, but I couldn't make it, so sorry for that. And well, I'm an entrepreneur now, but I'm also an angel investor. Before that, I was working for AWS, leading a program in Europe, Middle East, and Africa, connecting enterprises with startups, so enterprises could invest or partner with startups. And before that, I was in the corporate acceleration or investment side for early stage startups, which we moved to scale-ups actually with O2 Telefonica. So I was with them 4 years, 2 years in Latin America and 2 years here in London. But yeah, that's me in a nutshell.
Because I have a better understanding of the, our speaker here, but can you just say very quickly, like how Box is supporting the scale-ups, that we will maybe have a better understanding of how to open up the conversation?
Yes. So with Boxy HQ, I mean, we're not investing in startups. It's an open source startup that is helping startups be enterprise ready. So basically, we provide technical compliance features that they could plug into their solutions. So very dev tool, open source, cybersecurity, like that's the intersection. But I'm also an angel investor, and I have been helping other corporates with the corporate venture capital initiatives in many ways.
Perfect. I mean, it's really hard to find like 5 people that they have all synergy with each other. So let's just try to take advantage of that. Again, by the same order, let's start from here. So when we talk about scale-ups and investment, where do you see the biggest problem?
Which one to choose?
It's a good one. You know, it's like, it's about, you have to operate with reliable data. We have too much data, and wisdom and secret is in processing what you really need to process. But you know, like, again, people can submit to you lots of information. We live in a world where we are saturated with data. There is no anymore lack. And if, you know, you told me one problem, one. So one, I would say, reliable data in sufficient detail that help me answer all questions I have in the most efficient way.
Reliable data. Robert?
Yeah, we're meeting here in Warsaw, Poland. So probably would be interesting for you to have a look at regional challenges that our startups from Central Eastern Europe have. So our experience is that scale-ups has to go international. The fastest, the better. So we see that our ecosystem is developing. We have a lot of seed investments. We have also growing number of scale-ups, but there is still significant gap in terms of all the resources necessary for efficient international expansion, and we see that many startups from the region they start operating on the local markets, so they create products that fits the requirements of Polish local, for example, in Poland, Polish customer. And then when they start international expansion, of course, they need some capital, they need some support and so on. But very, very often, even if they get investment, they face some challenges with not only efficient go-to-market strategy and implementation, but also some product challenges. So what we try to do, we try to bring as many international connections, co-investments, and knowledge to support the Polish startups in early in understanding what's necessary for serving international markets early enough not to have these challenges later on way.
I mean, you touched on so many points that I'm definitely going to go back on that one. But maybe if what we can try to put is maybe Series B gap as one of those main factors, right? And maybe Paulina, you can also.
I would add here the sales strategies. Guys, just please do not focus so much on another round. Just focus on sales, because if you're able to sell effectively, to gain new customers, for example, we can provide you with some working capital up to 2 million zlotys. So we do not want your shares for that. We will cooperate closely with your venture capital fund. We will try to help you find new customers and partners through the BNP Paribas Group, both in Poland and abroad. But if you're not able to sell and convince us with it and with a great product, it won't work.
I mean, I'm not plugging anything, but this We Crash on Apple TV, like it's really, like, for me, it's eye-opening, because like for people that are not inside the startups and scale-ups, and I was like, oh, this dude is crazy. But when you're inside, and I was like, what is so strange about this thing, right? And I was like, oh, this year we had minus $1 billion. And I was like, yes, international expansion. Let's just open up 2 more locations, right? So it is a very strange thing, right? Like you have $1 billion of valuation and no sales. Or even if you do, it's not profitable. So yeah, and Michael.
So probably I will continue with the sales topic. But I think that the first thing is to build very meaningful relationship with your investor. and I think it's not kind of like a contract. I think it's a relation for next 5-10 years. So the first of all, build very meaningful relation, with BNP Paribas or with us, and then go with the sales. And what we do at the Energy, we not only invest in the startups, we invest very early, but we also have sales team. So we have investment team and also quite big sales team across Europe, and we're trying to help startups sell. So sometimes we invest to the startups that don't have any revenue, and we're trying to help them to do that. And going to national, because we're investing across Europe, so we have startups from Spain, and we're helping them to sell in Poland. And it works, but also it's really hard to tell them that go outside Spain, invest in Eastern Europe, or talk to the Polish startups, invest somewhere else. So I think really focus on the scaling up internationally and work with your investors. I think Paulina, you mentioned you are supporting as well in sales, and we also do that, which is very, very crucial one.
And Sama?
Yeah, no, I was going to say, I think one step before that, from my point of view, is understanding your type of industry and your business model, right? Because depending on that, you might be able to raise, I don't know, 100 million without having revenue. And it might be the case that at that stage, at the Series B, I mean, metrics are going to speak for themselves. But when you don't have the traction from the revenue side, you might need it from the consumer side, user interaction, or developers engagement if it's an open source startup. So it will depend. So I think for each startup is different. So it's good to understand what industry you're playing at, but also the business model and the vision that you have. Then I think it's a great point about the internationalization that it has been mentioned. So I always like to say startups and scale-ups need to act global, but think globally, right? So you start focusing on what it's working right now, but you also have to start thinking ahead and strategically on like what is going to be the next market and why. And not necessarily is going to be the biggest market, like let's go to the US or something, because sometimes it doesn't make sense, and your resources or your strengths are going to play better in another space, right? So I think those two things are key to mention. And then, of course, as it has been mentioned as well, at the end, you're going to receive the funding because there's a relationship between you and the investors. So you need to start building that. And the best way that I've seen to do that is to start getting the connections when you don't need the money, right? If you need the money and then you start reaching out to investors, you're coming from a I need you point of view, right? Well, it's much better to reach out saying, hey, we're going to plan, we're raising this next round in 8 months, 12 months. I would like to know more about you. So it gives you like this equal sense of like, I want to understand what's your value, and I want you to understand my value proposition, right?
Perfect. I try to just put it here. So reliable data, Series B gap, sales, a relationship with investor. I think that's a big problem. Like a lot of startups, they said, I have a pitch. And I was like, but for whom? And I was like, I have a pitch. And it was like, yeah, but you do the same thing for sales and for investors and for customers. And that's, I think, that's something that is a very important thing about the relationship part of that and the business model and the global approach. I think there is a big elephant in the room these days, and especially when the numbers go up, let's just say this topic gets more and more hot, and that's valuation. Like I see that right now, even some startups are basically just lowering their valuation just to be able to be more investable. And I think the higher we go in the, let's just say, series, that really changes things, right? Because I especially know, for example, like Energy and Cobin Angels, they do even like early stage, and that is a special time. Because I just sit down with myself and with my spreadsheet, and then I just think that my valuation is 10 million or 1 million or 100 million, depending on how today I feel, or did I have my coffee or not. But when you're in the Series B, everything changes. And especially as a point of family office, I'm sure that you deal with this every day. So what is your take on valuation?
It's an interesting one, it's art, both. As a family office, when I look at someone who brings me a particular, information saying why it's valued at XYZ, it has to make sense. Ultimately it's art, but it's art supported by numbers. I am a very pragmatic person, down to earth. We know valuation differs among continents, among regions, even among startups who pretty much offer product or service in the same spectrum, in the same area, but businesses are valued differently. It's also a factor of confidence, how confident you are, how strategic you are. You know, if you think today about your end, what exactly you are trying to achieve. Is it a lifestyle business? Or on another hand, are we talking about, you know, business that can be scalable? Again, limit. Is it, you know, country level? Is it continent level? Is it world level? You know, if you understand, you have to understand, you know, people who are investors, they are savvy people by definition. If you use right language, if you know your product inside out, if you are a right person to make it happen, if you surround yourself with people who make this circle complementary, full, complete, and you have that inner strength, you know, inner gut instinct, gut feeling that this is something really cool, it has to be cool, but it has to be, again, conveyed in a way that you intrigue investor, but in a very proper way, in a very deep. It needs to have substance. You need to say why you. You know how exactly you are unique. You know, it's again summing up. It's an art, but art which is a product of a hard job, homework done properly. When you can nail down how are you going to progress with this company when issues will come up? Are you a person who can face challenges? Are you a person who knows where to plug in quickly enough to address any problem that will come? Because it will come.
I mean, again, a lot of very interesting points, but I'm just going to add one thing. Churchill said the only statistics that you can trust are those that you falsify yourself. I really think that really goes a lot, let's just say, into the startups, because then I was like, show me your valuation. And I was like, no, this is not the right type of valuation. Let me fix it for you, you know?
And I would love to add, if I may, you know, you mentioned about, you know, some, you mentioned some companies are, you know, for example, you know, they would come to market with valuation which is less than actual value of a business. It's their own strategy. Because if you go to market with valuation which does not reflect its intrinsic value, you actually say to the investor, in particular in the Western world, you know, my experience, I don't believe in my business that much. You should never overvalue, but equally you shouldn't undervalue. You have to be consistent with your valuation. You have to network accordingly, know right people, and you know what? Talk to many, many, many different investors. Some will invest, some simply will give you intelligence. You will be aware, and those who are aware will arrive at most accurate valuation.
I mean, sometimes I'm surprised. Like Instacart, I think, was one of those newses that was out there. They cut their valuation by 40%. And now it's like 24 billion. If any one of you guys is looking for money, like just think about how many billions their investment and themselves lost by just touching 40% of their valuation there. So I can even go back to Robert, because let's just say that, no offense to anybody else, but when somebody is dealing with angel investors, they are way closer, I would say even to family offices, right? Because they are literally their own money there. And that is the point that, let's just say, any profit or loss gets way more personal. So how do you start, let's just say, preparing those scale-ups and startups to, let's just say, prepare themselves that then later you as an organization that deal with those people with real money in their hands, they're not going to come back to you? Because I think that's a very sensitive, let's just say, point for all of you.
Thank you for the question, but let me take it from a bit different angle. What's the core of startup? It's to build a business to create the value fast, yeah, because it's a global race. So the valuation is probably important, but I think the more important is to get the right resources, also right investors. So sometimes the investor that will accept the highest valuations can be not the most effective choice for funders. Sometimes, for example, we see very often that on seed stage in Poland, funders are coming to us and they want to have angel investors because they can support startups not only with the money but also with all the support that angels typically get, and if there's a good match, the value creation is much more faster, efficient, and everybody is happy. And the second point of view is that if you raise the bar high, if the valuation is high, it can be done, but the next round investors have to believe that from this level they can still make his return, so the expectations to grow will be even higher. Yeah. So from our experience on angel phase, I mean seed, we very often we like to avoid the valuation discussion. So we use safes or convertible notes, because safes are not possible in Poland because of the law. If we talk about Web3 projects, we use SAFT, and it's similar construction based on future tokens, and very often we support our scale-ups in Series A, Series B. So we discuss with VC funds, with international investors, with family offices, and of course, after investment is done, the funders and investors are sitting in the same boat, and everybody wants to help the startup to make this progress. So from this discussion, again, it's important to balance between the valuation expectations and the quality of investor, actually for each round. Yeah. So I strongly believe that by good selection, good matching, we can grow much faster than just having focus on financial performance purely.
Amazing. I mean, I hope we will have somebody from media just to write everything down. This is a good article, Again, I'm sorry, I'm just keep giving you quotations, but also Reid Hoffman said that entrepreneurs jump off a cliff and build a parachute on their way down. Too little time to be a bit too quality and let's just say quantitative, let's just say detailed, when you really feel that if I'm not going to be fast enough, I'm just going to be with the head down the road, and then there will be no time for me to do. Yeah, I think it was also the guys from SoftBank that they say, like, who is gonna get the money, the madman or the wise man, and that's also one of those things that make things complicated. But I'm just gonna say something to Paulina as let's just say a very old man here. Like, I made my first startup from a bank. I literally went to the bank and I had a flat, and I just said that, like, that's something that I can put there, how much money I can get from the bank. And that took me, let's just say, a month with all the paperwork and everything, because I had something just to show that I can pay the money back, even though that my idea was just a piece of paper. And then that was it. But now I just have to prepare a pitch deck that is based on some, let's just say, hypotheticals. And then after that, not everybody is also as smart as the investors that you have, and then try to go back convertible notes. Some of people know, like, this is my money, just go there and burn it. But you just have to talk to me for 6 months. I was talking to the guys at Google Ventures. Say it takes us like 2 to 3 years sometimes just to basically do that investment. And I was like, I don't even know where I'm going to be in 2 to 3 years. So where do you really see the traditional role of a bank and the new ones into this new world?
This is a question actually I can talk a lot, because these are different angles of the situation. I believe that because technology and financial abilities, these are two different stuff, and I would say that there is also one more. This is being like a CFO on call. So I see the role of a bank, and this is basically the role of my colleagues in the team, to be the financial partners, financial managers, both to our startups and to our venture capital funds, our partners, that we sit together and try to figure out how to help effectively both to the fund and to the scale up with the tools and the knowledge that we have. Yeah, so this is a completely different role. Yeah, so we first sit with you. We want to get to know your business. We won't ask you on your flat or your house or your grandma. we don't want you to jump off the cliff. We want you to grow. Yes, and we know, we are humble, we know that you know your technology better, that the venture fund or the business angel knows, let's say, the scalability better, but we are perfect on financials, yes? And we are more flexible. I believe that we are the best, the most flexible bank these days, because we believe, and we believe it as a group of BNP Paribas, that this is working with the companies of tomorrow. This is strategically important stuff for us. Yes, so this is completely change of the mindset of the bankers, which I'm really proud of, and I believe we can be just the partners to grow the business together, both with the venture capital funds, with business angels, and of course with the scale-ups.
Perfect. So we had a lot of risks that were being averse. So it's just like, show me a solid data, show me the real money. But then we have Michael and your environment that you always mention that you're ready to take the risk with this, let's just say, startups and scale-ups. So where do you see that angle?
Yeah, so our idea is to de-risk projects. So we invest in the startups, in the projects with revenue, sometimes without the revenue, but sometimes we go to research institutions and we're looking for the teams, and then we'll build a company. And something that we do, I think there is a deadline this week, something called ET Jumpstarter. So if you have a team, research team, you still don't have a company, you can register. I think the deadline is on the 10th of April. But we're also looking at companies that have very nice ideas. I mean, teams have nice ideas, but it's early to invest for VC, too risky. So we go there, build a team, help them to have sales. And I think sales, as we discussed, quite important, because I think I can also that if you have one sale, then it's kind of like reference to the next one. And especially when we're dealing with the bigger project, energy project is really, really important. But also we invest in a big project like Northvolt. We were one of the first investors in the Gigafactory. So I think this is quite important. But just general, also summing up what we said, I think in terms of fundraising, what is really important to raise as much as you need to achieve your next milestone. I mean, don't raise too much because you want to have a still place in the cap table, but also I think that what you said, think about the strategically. So if you have fundraising for the Series C or A, then think about the B. What will be next investors in B? So think about whole the process starting from the pre-seed until the end. But also it depends. I mean, if you want to have big value and then sell to Google, then maybe you need to go to the VC fund that will give you the biggest number. But if you want to grow, maybe go to someone who have more smart money, but will give you less valuation, but it will be more meaningful relationship. And I think also that we tackle is timing, which is quite important, because you cannot do fundraising and company building. So don't chase the biggest valuation. Just try to understand what do you need, and then go build a company.
I would wish to add something in here, because we do also invest with our colleagues from different banks. We do it together. But these days, when everything is changing so much, I believe that one more thing is important, to have numbers that can be justified. Yeah. Yes? Because the first question is why? Yes, so from where you have those numbers, yes, what they want to achieve. These are simple questions, and sometimes the answer is not that simple. So I would say that having justifiable numbers, important.
I would love to add, if I may, keep it simple. Again, valuation, I absolutely agree with everyone who, different angles on the subject. It should make sense. And it may, every business different, every investor different. What works for you may not work for me, and vice versa. I always believe you have to probably step back sometimes when you have, too much information and, too many conversations and too many offers, and just take time to reflect on your own. That's at least what I do, always. And I believe it settle all information that comes in, and you have this wonderful feeling within your body, which is called gut instinct, that has been my massive helper, biggest helper ever in life, in anything, business included.
Again, I'm making notes for myself, even more than that. But Yeah, especially what you guys do with Authenti. For me, I'm still surprised how did that happen? Like 3 banks that they usually call each other
And 2
companies.
VCs.
And 2 VCs. So like, it's one of those things that more sounds like a joke than a reality. You know,
No,
it's
this
like
is reality.
three banks and a VC just went to the pub. You know, just like you really don't know like how this is gonna end.
Kind of look like it, yes. We actually talk to each other. Yeah, we appreciate each other. We talk a lot. Yeah, so this is not like that the decision was made some top down. Of course, we needed to ask. Yeah, finally, if our bosses agree. But I say that this was, let's say, it comes from, let's say, the down and go to the top. So the relations in the market are really, really good. And guys, I encourage you to talk to all of us, because when we think about scaling, so we would not be able to scale Authenti so much and build a kind of standard of e-signature, of signing the documents remotely, if we would be the only bank doing this. Yeah, so this is the only way. Yeah, so if you want to scale, build bridges, not burn them.
And humor, I apologize for interrupting, you know, the power of humor, good humor. You know, like I remember when I came to London 18 years ago, when I started my first company, absolutely, you know, impression was, you are from Ukraine. Do you know how West works? And you know how people can be, sometimes they don't tell you in words, but body language tells it all. And I treated it with genuine humor. I thought, okay, you know what, not a problem. I keep going, you know. People will always also, you know, tease you for a purpose. Can you sustain critic? How do you function under pressure? How do you function when someone make unjust assumptions about you without any foundation? Are you going to explode, or are you going to turn it into, you know, humor? Humor is very powerful. When it comes to money, when it comes to entrepreneurship, you have to be a good psychologist on top of everything. You have to build chemistry. You have to have ability to turn people who are skeptical about you to ultimately become your supporters. And like banks, talking about banks, I remember I had my first company wasn't scalable business, but I loved it. And I came to investors and I was told, look, but you can't scale your business. I took it like at first, what do you mean I can't scale? I can grow it. He said, no, but you know, I can't imagine to invest. But you know what? Maybe I'll invest a bit just because I like you. You know, so kind of sometimes you can get lucky. You will be not mainstream, but ultimately you will get money you need, and that's all you need. And then you can start company 2, you can start company 3, and those guys will make money on your company 2, 3 more. You know, simply at first, they saw you, spotted you, understood angle, and like you as a profile.
Yeah, the founders heart. This is the most important stuff.
Yeah.
I mean,
but I think it also never took it personally. I mean, when you be fundraising, you hear 10 times no, but it's not because of you sometimes, because VC don't like your idea.
50 times no.
Maybe
10.
50 times no, but you know, maybe it's better to have no, kind of like from VC in the week, rather just wait for a few months. But you know, it's not personally. Sometimes VC don't invest because they don't believe in an idea, but it's not personally because it's not the right choice for the VC. So never took it personally.
I think after Reid Hoffman and Churchill, I can just give another quotation from Rocky Balboa that he says that it's not about how hard you punch, but it's about how hard you can get punched and keep moving, right? I think that's a big part, right?
Sounds like a corporate world.
Exactly. But Samuel, let's just go back a bit on the technology side. How do you really feel that technology can try to somehow help both, let's just say, the investment part and the scale-ups to, let's just say, see each other more eye to eye?
I mean, I think with COVID, we have seen, right? Now you don't need to be at a specific place to join a meeting or to join the table. So it's definitely opening many doors. And that helps talking to the fact that you could get a higher valuation at a different market. That has bring like different investors from, I don't know, the US or China, Singapore, to look at more startups in Eastern Europe, Latin America, and other emerging markets, right? So I think, I mean, technology is key. I mean, it's good. There's many platforms being built to reach this gap. But then going back to the question that you had before about valuation, I wanted to share also my point of view as a founder, right? Because I think like one of the key things for me was to understand that with the same business, with the same startup, you could raise 1 million or 3 million, and in both cases, I'm going to be given the same stake of my business, which is going to be around 20% more or less, right? But the only thing that is going to change is who is going to be the investor that is going to be giving the money. So, and some people have mentioned it, right? But you need to make sure that you're going to the right investor with the right valuation, right? In our case, we raised a couple of $1 million just with a PowerPoint, which is insane in many markets, especially in emerging markets, right? Like, how are you able to raise that money if you don't have anything yet? And we knew that. That's why we decided to talk to a specific group of investors, the ones that we knew that they were going to be able to actually do that. And I tried to reach out to many emerging markets, I mean, VCs, investors, corporate venture capitals, and it was really hard. So I think it's key to don't get trapped on the valuation. As they say, I think you have the real business, which your valuation could be here because you're not making enough money. And then you're selling a bit of smoke or vision, which is here, right? You have to make sure that your valuation goes middle point of what you think is going to be feasible, like how much you think you're going to get of this pie, and what you actually have. So you're never going to be asking for money at the valuation or just your revenue, right? You have to bring the vision and the opportunity next to it. But yeah, just wanted to add that.
Thank you. I think I get one inspiration that maybe we didn't discuss it a bit in more detail. Can we talk about your jurisdictions, like which parts you're mainly focusing and which parts you're not going, like, because that's also very much changes the whole conversation.
You know, for me, I am quite opportunistic. I operate with my own money. You know, I always followed what makes sense to me. You know, I need to buy people. I don't care where they are from. I don't care where they are based. It has to be a good offer. You know, people have to be with integrity, but again, geography comes, unless, you know, structurally, you know, when we structure a deal, it makes essential sense to pick up geography. I don't care.
So totally agnostic.
You know, very much. But again, you know, I built massive network global in my 21 years. You know, I traveled a lot around the world. I think I've been on plane more than on ground. And, you know, I interviewed in my life 800 investors when I was absolutely driven to have a powerhouse in London covering Ukraine. I took it personally at the time. I didn't like, you know, perception about country. So I think that served me a lot in my career, you know. And I understood one simple logic. People are people everywhere. Opportunities can come from everywhere. I don't like prejudice. I don't like geographic, you know, preferences. I judge opportunity on its substance, not on cover.
So good news for entrepreneurs from Antarctica. Finally, somebody is going to invest there.
It means they are strong if.
Definitely.
Definitely.
I mean,
I like it's a good quality to have.
I think you have to also stay in Warsaw because it's not that different. So, and Robert,
what would like to hear?
I mean, you know, the truth. I think that would be good.
No. I'm in a position because I work with many angel investors, and they have different strategies. Some of them like this, some other are looking for something else. So from this perspective, we are agnostic, of course, but we try to understand both sides. So when we analyze startups, we have quite a large number of them. And this is usually startups in end of product market fit and international expansion phase. Yeah. So when we analyze them, we focus, of course, of the typical areas that all the investors are looking for, like team, product, market, competition, and so on. But what is the maybe differentiator? We try to understand what are their challenges in the next 1-2 phases of their development, what is missing there, and how angel investors can support this. Yes, and we believe that by matching them and looking for these synergies, you know, maybe sometimes 1+1 can give 3 or maybe even 4, and that's our job. So we try to understand both sides, and of course not to be biased by anything, but by looking for how the value can be created by our job.
Okay.
So statistics.
Paulina, I'm not even going to just make it that easy for you, because BNP Paribas is not even just a bank, right? So you're even, let's just say, presenting a group of companies that not only I have to ask about the jurisdiction, I also have to talk about, let's just say, the connection between those entities and the jurisdiction, because I think that will clear the picture a bit better.
Yes, so this is not that complicated, but yes. So I will start with the implementation. So first of all, the answer or the road is quite easy. Yeah? So we know as an innovation team exactly the priorities on the tribes. So you can call me anytime or anyone in our team and ask, hey guys, does my technology can work with you? I will say, well, it fits, for example, one of the priorities, but if it works, I don't know. I need to check, because I'm not sure if it will work with our, let's say, legacy, with the technological stuff stack. So many of the scale-ups, startups are, let's say, quite nice when they are treated as standalone topics, yes, standalone tools. But when it comes to combining it with different system and data from the bank, well, it may blow off. So we need to check that, yeah? So we need to be humble, and we need to do a little bit of digging, yeah, to give the brief answer, okay, it may work. That's for the implementation part. According to supporting companies with the financial and the business growth. So yes, this is the group in Poland. So these are the real estate, these are insurances, these are vehicles, of course, and transportation. So basically, we are mostly focused on the things that we know, but I may tell you that in our current portfolio, when we discuss the financing and growing the companies, they're everything. Yes, so we've got medical tools, medical stuff. We have e-commerce. We've got IoT, and thanks to the fact that part of our team is coming from the innovation ecosystem, Polish innovation ecosystem, these people are not corporates at all. So we know whom to ask if we are not sure, yeah, if the business, let's say, or the technology is fruitful and will last, for example, or is able to be scaled. So we just check it. Yes, we are check, and we try to be humble. And if I literally clearly do not understand what you're talking to me, I will tell you that.
I mean, you also have, I really think a lot of corporations comes from the culture of their managers. But when it comes to the scale of, let's just say, BNP Paribas, I'm not sure. But knowing Przemek and how humble and easygoing he is, I'm not sure how much that really affected the overall structure of what we see.
It is. Well, this is basically the mindset. Yeah, I remember the bank when I joined it a few years ago, and it was a completely different company. And now the openness, the flexibility, the yeah, just the feeling of being humble and supportive to the market. This is the most important thing. So it's good to have that CEO, actually, who's also keen on the startup world and knows everybody. So this is a lot easier to talk on the stuff.
It's not every day you just say CEO of a bank is a cool guy, you know. So yeah. So Michael, about Innonergy, because you're also all over. So.
Yeah, it is quite complicated to explain what we do. So what we already talked, we invest in the startup innovation project, but as the whole in energy, we have quite clear goal. First of all, is to reduce CO2 emissions in Europe until 2050, and reduce the use of fossil fuel across Europe, and also help to decarbonize industries. So what we do, for instance, we invested in the green steel, which consumes a lot of fossil fuels and emits a lot of CO2. So we are trying to build a new ecosystems. So we know that now we have zero green steel. So our goal is to make sure that in next 10 to 20 years still be produced without the CO2. But also we work with the batteries. We know that the future will be electric cars and everything will be electric. So trying to help to build batteries ecosystem. And we are doing that by working with the industries. A bank is our shareholder as well. We are working with European Commission as well and with the industries. So we're kind of in the middle. But it's not only about the startups, but we also try to educate people. So until in the next 10, 20 years, we plan to educate 1 million people in the battery sector. So working, to be honest, in the whole supply chain. So yeah, it's us.
And Sama, about the jurisdiction and,
Yeah.
and yeah.
Yeah, no, I think that's a good question because that is really important for many investors, right? I mean, in my case, as an angel investor, I have been co-investing with, people all over the world, basically. Continents at least. But then, as an entrepreneur, once we noticed that we wanted to get a higher valuation, we found that these type of investors were basically in the US, even they were investing in startups from Europe, Eastern Europe, and others that we map out. So, and that was a huge decision for us because it made us build the company as a Delaware company, right? Even though me and my co-founder will both be here in London. But from their point of view, the risk of investing in a company that is outside is that if there's a dispute, they will go through laws that they don't know necessarily, right? So I think like for startups in any specific region, they need to be aware of this, that if they plan to raise money from an international investor, they will have this as a main concern, right? If something happens, what do we do? Where do we go to? So you want to make it easier for them to feel secure that if something happens, which of course they believe is not going to be the case, but they need to cover, it's going to be through their own rules or something that they know how it goes.
Sure. Just one quick thing from the audience. Anybody from the European Union or the government side representing? Maybe halfway, Bartosz? Because I think that's one of the things that we didn't touch, right? Because we always have this competition, especially knowing my local ecosystem a bit here, is just like most of the VCs still, they have very strong ties either with the European Union money or with the national money. And I really think maybe because we have a very diverse group of, let's just say, people here, but I think that's also one of those factors that, let's just say, did not really reflect itself. Again, knowing some people that they are in the audience, anybody from LG here also? No, because also they are also something, because you mentioned about the electricity, and like I think they're like the top 3 battery producers in the world. And like these things, like let's just say that if they come to a market, sometimes for me, even one small company might be bigger than the whole European Union and let's just say those let's just say national and governmental factors. But the reality is the spotlight. The reality is that I see a lot of people say that, you know what, we have a lot of opportunities. So if somebody wants to know us, come over and just find us. And I would say the same thing also about especially family houses and also the VCs. And I was like, you're a startup, you sit down and pitch to me. And then I was like, nope, that's not what I do. Because we as a country, as a continent, as a VC, we did not pitch ourselves before to startups. And I really think that would save time for both parties. Like, I genuinely don't know why, let's just say, this part of the party, like not the scale-ups, but us, we're not pitching properly ourselves to others. How do we fix that? Look, kind of what we're doing here. And I was like, you know what? Like, Robert doesn't work in Brazil, you do. Like, you don't do investment in this kind of scale-ups, but he does. And that really helps you not to receive 7,000 emails that they are all unqualified. And let's just say Robert would get that because he needs it, but then they don't know his email and they know only yours. And so my question just goes into 2 things. First, this centralization, that we don't have this decentralized platform that everybody kind of, let's just say, can find each other. And then kind of this KYC that we try to have for our startups, but for ourselves. Where do you think we can find, maybe make this, let's just say, panel a bit more practical? And then when we leave here, then we just say that, you know what, after we leave, then they know that that's what I do.
I will start if I can. Because we had we tried as an innovation ecosystem, at least in here, we tried to build certain platforms with those kind of information. But it did not work. Yeah, so the data, well, everything is outdated. Yeah, nobody sees a value in updating that. I still do not see why, especially after that crazy hard 2 years, when a lot of has changed on the market, and still will. That's for sure. But I believe it's also come from the, let's say, the culture. We need to feel that we are more as a partners to ourselves, not as a top-down communication. Yeah. So this is what we need to think. And also, when I see my colleagues from the example in the US, so let's say that the power, the art of pitching comes from the kindergarten, yes, and cooperating with different people. Yeah, this is something that we still do not have here locally. We try to do this, but this is, let's say, not the thing that comes so natural with us. But I would say that these times are changing this to be more practical, to be more open. But yes, everybody should do their parts, and instead of sending the documentation, just the pitch deck, just to ask, is it a topic for you? If it is, I will send you the details. If not, just, it was nice to meet you. That's it, yeah? But to do this, we need to be aware of ourselves as a businessman, as the startuppers or scale-uppers or whatever, and be more humble again.
May I disagree?
I'm sorry?
Come on.
May I disagree?
Yes.
we agree.
Can you just disagree in
most
3
of the
minutes?
topics.
Because we have 3 minutes. So, and I can't believe that 1 hour passed that easy, but.
Yes, and of course we agree in most of the things that was been said here, but from this platform point of view, and of course this is VC market is very inefficient in terms of everybody talking to everybody, and at the end of the day, maybe 3 to 5% of the stocks end up with some transaction, which is the goal of the discussion. So yeah, I also saw many platforms. Last week we participated in reverse pitch, so investor pitched to invest to startups, and it was interesting experience. But I think that blockchain is changing this, trying to introduce some new ways of doing things. And in blockchain, you have everything digital from end to end, so it's much easier. You don't have to put this effort to update the system in this fast-changing environment. So these pros and cons are much more balanced to have some good decentralized system that will make these transactions maybe faster and more efficient. So there is some hope. And this is something
it would make our life much easier.
If you don't mind, Robert, because maybe I can give a quick solution, because I think I already introduced this Consilience venture, and what they do is that it's totally decentralized. You put your startup there, then totally random, but already, let's just say, qualified experts would qualify those startups. And if they get enough number of the thumbs up that you understand that they are fine for you, then you as a person who would like to invest, go there. So there is no personal bias. There is no like a gut feeling that, oh, this is good and the other one is not. So it's personally, let's just say, totally unbiased toward the past and experiences. And it kind of works, I just wanted to,
Yeah, I was participating in similar project in US. I was a part of it, collapsed. It was even supported by some numbers, by some AI and so on, but didn't work.
But yeah, I think you have to just for one example, but I think that the best way would be just to go to talk to the VC, but also talk to the startup that VC funded. So for instance, we invested in the 400, now we have 200. So go and ask how we support them, whether we support them in networking, in the sales, and they will tell you true that, yeah, they invested money, but they're not supporting us in sales. So just talk as well, go see who VC invested and try to talk to the portfolio companies, and probably you will know quite a lot of.
I would love to add about platforms, from my personal perspective. I hear message, but for me, platform is not, is not that meaningful, because I'm a very people person. I need to get to know people. As an investor, I would be classified as cautious. Some people are very, could be very fast, great opportunity, they invest in many, and then, 80% fail and whatever, others make money, and that's, how they run their strategy. It's not for me. So for me, even if I imagine we have such a platform, it wouldn't change my day-to-day much, at least as we speak. As technology will evolve, maybe, new features will be added, maybe, new things where I can see myself with my style. I think it's also about investor style. Every investor is different, right?
I'm very happy that this panel is recorded because, let's just say, as I said, like I can just go back and try to learn a lot from that, and also try to respect the time. I really would like to say thank you for all of you guys to give us your time and your experience. Hopefully, you would be somehow reachable for our scale-ups that they're here. They really need you and your money, and hopefully also that is the opportunity to meet them face to face. And with that, I would just try to say thank you and looking forward to seeing you during the event. Thank you.
Thank you very much.
Thank you.
So, round two. First of all, I would like to introduce Konrad from PKO Bank Polski. They're also our fintech partner, so let's just say double thank you for mentoring and sponsoring. And also Manuel from Miro Capital. I hope I pronounced it properly. That we're going to have the feedbacks for our scale-ups. I'm not going to take too much time from our scale-ups. We're going to give them 10 minutes, so every second counts. And with that, I would like to welcome Threshold Capital. Are they around? Yes? Yes. You are already fundraising. Amazing. So your valuation changes by the time you're going to be on a stage. Stage is yours.
Hello, everyone. Please give me 1 minute to prepare, because I want to be more on time as I was coming here. So hopefully you will survive with me before the lunch. My name is Martin Borodski. I will today tell you a little bit of story or like context. Threshold Capital, it's a fund, but it's not like any average VC fund. We're looking on the specific context. Imagine a company which has $500,000 revenue, bootstrapped, have a product and a service. And today world, and they're looking for growth capital. So let's say they need 300,000 to grow. So let's just very quickly, what is really growth capital? What we're talking about as a subject of the story? It's a capital you want for expansion. Yeah, go to Germany. It's a capital you need to basically fulfill sales cost, hire the people, and it's also capital for acquisitions. The issue is, yeah, the growth capital is not even distributed among the entrepreneurs. So let's back to say, okay, who is entrepreneur? What are they seeking? Because we're looking on the huge market. We're not seeking on a very specific company. We look on the SME market in Europe, and they're seeking speed. No one wants to spend 2 months negotiating with the bank or 9 months to fundraising. That's a startups game, not the, let's say, nice growing SME game. Also, they're expecting simplicity. So they don't want to have a bespoke deal every time they turn around. They want something which they eventually can understood on the market, which their lawyers can understood, which their accountants will understood, which the future potential buyer will understood. And lastly, they want something extra. Most of our entrepreneurs are millennials. We always love something extra, something which is mainstream, but for us. It's very interesting. I love it too. So, what is the reality? Long process, either ways. These clients are digital SMEs. Don't have strong assets. Banks don't understand them. It's very hard to convince bank or VC. Sometimes it's also VC in the game. Like why I'm different. So we'll focus on the bank. Bank, if you don't understand you are young. Let's say imagine company below 4 years old for $500,000 revenue. That's the context we are looking at. So long process. It's a little bit win-loss proposition, as there is a scarcity on the market. The company, if they really need that 300,000, they will sign personal guarantee to the bank or rebrand to be VC-like, just because they need it. So they lost something. Always, it's not win-win partnership many times. And more work, like to reporting to bank, it may be easy if you get money. Reporting to VC, every VC is different, so it can be very hard. And the governance. So governance is something which is one of the slowest parts of the receiving capital, whatever capital. Maybe if there's some bankers, you have a covenants, for example. Good entrepreneurs will very focus on covenants because they can very nicely say destroy them. So growing capital needs more innovation. So what threshold capital is? It is something which is simple, need to be understood. We have lots of work ahead of us to basically tell the world how to understand the asset class to investors and to the company's minds. It's non-dilutive. We want to scale. We are a lender. We are not even fund, but we are not. We are a lender. It need to be effective. So the size of the capital of the product need to be effective for the scale. It should not be pocket money. It's not overdraft financing or working capital. It's a loan and has a twist we talk about, which I will push on the end of conversation. So what is USP? We are revenue based, so we are close to the risk of the company. So we really try to help them and share the risk with them. There is no personal risk, in quotes. There is no personal guarantee, but of course, if the executive director do something against you, there is a punishment. But if the company will, by market, stop functioning, and there will be no way to survive it in the competition of the founder, let's say the COVID, like Ukraine, then you risk with him. So we going both down. There is no liquidation. Basically, there is no personal liability on the management or on the shareholders. And we providing up to 100% revenue to the company. And that's our effective part. So as I going back to the context, say 500,000 euro revenue company, they need 300,000 going out. So it need to be effective to them. So what is the ideal client? Or are they digital SME we're looking for? We're looking someone who is 24 months in operation. What I mean in operation, they need to earn money in 24 months, not to be just registered. Earn money. You look, very practical lender. They need to have at least $250,000 revenue for last 12 months. So we are sure they're just not like lucky shot. And they need to have a business model proven. What that means, that's our magic. So I will go to in the second. So what's a twist? What a twist for the millennial entrepreneur I'm looking here. My timer, horrible. So again, the first very clear, it's loan, there is no dilution. So they are not worried that you will be part. We can say the twist for millennial is very emotional. All the clients are owners, they start a business in harsh conditions. No starting business, it's easy. It's not like, it's just a business and now it's I'm making millions. That's not the case. And come to that, it's a freed capital. I know it sounds a little bit naive, but if you look on the founder, say, okay, I'm just going to bank and sign my house or going to VC and hope I can grow and deliver the VC returns. And with you, I don't need to do that. You just give me money and you expecting from me the interest rate. It's a freedom capital because there is no covenants. There is not really like there is not baggage with money. And the third one, for some of you know what revenue base means. It's basically percentage as the company grows. What we're providing to them, we're providing upside protection. So if they grow very quickly, we basically say, guys, we are honest. This is our interest we're expecting. You will never pay more. So that's the twist. And so Threshold Capital, it's innovative lender to high growth SMEs.
1 minute.
1 minute. Oh, so very quickly. There is two parts on the market. One part is I believe there is 100,000 potential customers in Europe. We know about 1.4 trillion euro. It's lended by banks to SME. That's one part of the market. We can be addition to VC and private equity, combined before, during, or after. So our magic will be very quickly. We doing new companies calling house, combination of financials and business. We can do a feedback companies in minutes. We have very unified due diligence. We're still doing it. We are not basically AI lender. Our business model, we building the technology so we can sell it. We are lenders, so we have transaction fees, and we can have an earn-out for the debt that, of course, we want to have it successful. So our team, I have a degree in data science and software engineering, but I was VC for the last 4 years, did 15 years myself. I have a guy who spent 10 years in credit risk in the bank and insurance. I have a guy who was head of sales in Twisto, which probably some of them know in the Czech Republic. So what we build technology, and now we're doing first close of the fund. So we're asking for 6 million in equity and debt, and the debt return is 70% IRR. Thank you very much.
Thank you very much.
I hopefully was not the last 1 minute. Okay.
You can be on stage and perfect.
Hello, guys. I think we spoke like 3 years ago.
Yes.
When I was chasing fintechs.
That's right. That's right. Well, I mean, as you say, we spoke 3 years ago. I could not be more sold on the category, personally. I mean, we have.
I know your portfolio, so
Yeah, well, exactly. We're investing in two businesses that do the same. So, you know, I mean, I think the problem you're addressing about how the banking system is basically leaving a bunch of blind spots and clients underserved. I mean, that's a great example, right? So congrats. I think the idea makes tons of sense. Question for you to Noe here, our colleague. Why do banks not do this?
Two things. One, the ticket size is just too low for them to do any due diligence. And the second, we don't have a size of the market. If you go, I have one good friend on the board of the one Czech bank, and they have 100 billion Czech crowns in the loan book for SME. Until you cannot present the bank, there will be at least 5% of that size. The market with some hard data, they will not move the needle. So which means they'll probably come after us.
Makes sense.
Okay, so for me it's also like very interesting, but because right now I see in Poland that the revenue-based financing is starting to be popular, but more in a case only in e-commerce. I mean, like that they are secured the the lending by the going through the payment gateways, and so I understand that you have completely different security system. So I see like the big potential here, and as I'm from the bank, so I really would like to talk with you later, because so what's the difference? Like how
I will
securing
very
it?
quickly. We have a paradigm shift in the lending. We know the old lending is asset-based. Now we have a performance lending. Your companies, Uncap, Recap, Scale, Clerco, they're basically see your numbers, see the movement, and they're happy to lend you, let's say, 30% to that what they see. What I'm doing a business model-based lending. Basically expanding the VC part in the part we can and understand the unit of economics and lend towards that.
Okay.
And how do you see, I guess, the future of your offering, right? Do you see, because clearly you're positioning yourself as a partner to your clients, which I think that's the right way. I mean, you need to build share of mind with your clients. How do you see that help growing with them, or maybe get into new products or something like that?
There is two ways. One way, I'm debt, so I don't have a conflict of interest as an equity investor, so I can build a broad portfolio, and I'm allowing my partners, my early stage LPs, to participate on that portfolio. So I'm basically speaking with the other parts on the market, M&A people, private equity people, VC people, banks, everyone else who see the business in my group what I'm building.
So also my question.
And that, to be understood, that's part of me to be a company, because I want to build a new product for the base I'm building. And for me, this product is the most emotional and most tricky, which is not solved today.
I agree. Well, very good. Well, thanks for your presentation.
Any questions from the audience?
I think we can, try to wrap it up and then try to have the questions later, right? I'm sure you guys can try to catch each other in the networking part.
Sure. Thank you.
Thank you.
Okay, thank you.
Guys, every minute counts, right? So, I'm sorry if I'm, again, butchering another name, but Meminisi, if that's the right word. It's close. You can come here and correct me. So please welcome him on the stage.
It's called Meminis. And my name is Morten, which maybe is harder to say. I'm from Sweden, and let's see if we are humble, we Swedes, so we say the $1 trillion opportunity right away. I will skip some slides during the presentation due to the respect of the time slot. Otherwise, I would just talk. So, Meminis, we developed the solutions for the people with cognitive diseases, which is Alzheimer and other diseases often called dementia. We try to find the ones in early stages, even though it's quite hard because then we get first-hand information. What every solution we do is try to find a better life for the people with a diagnosis like this. This disease is a severe brain damage. It destroys your cognitive functions, your ability to think, you talk, the time, space, and everything. And it's very, very important that you know this is not a part of natural aging. This is a severe brain damage. There's no cure. There's no turning back while getting the disease. The huge problem within this is there's often, and as you see in the most cases, 90%, they are not diagnosed correctly, and 62% of the doctors around the world think this is about normal aging. It's horrible. You can see 50 million people have diagnosed today all over the world. We have dark numbers about 45 to 50%, and they're going to triple until 2050, until 150 million people. This is a huge, huge tsunami coming up. The annual cost already is 1.3 trillion US dollar. That's why the $1 trillion opportunity. If you see that this also going to triple in the next 30 years, you see where we're going. It's not going to happen. The COVID that we just went through over the years is going to be a small, small sneeze comparing to this. This is the real tsunami coming up. You need to do things, you need to act, and you need to act now. Because what we have also together with this is the natural aging itself. The ones plus 65, that's going to go much more than going to double during the same time period. So the world's combined healthcare systems not going to fix this. They're not going to be able to handle all the care, quality of care. So what you're going to do, I skipped this one. What we do, we have 3 product segments. Care is all about find a way to always get the right doctor at the right time, the right care and right time. That's care. Simple as that. Within care, we're going to launch the world's first telemedicine service for this group. I'll get back to that. Home, it's all about making your home a safe place. Putting in sensors, cross-connected devices like watches, cameras, and everything, and together with an app developed partly by Berkeley University, we have the family, all kinds of relatives, neighbors, and whoever you want that could help you out in your situation, because it's the family and the relatives who have the care here. All over the world, the care system can't handle this group, so what you do, you put it on the relatives. So you have forced relatives to perform specialist care. It's not acceptable. The last part is all about solving the puzzle. It's all about taking data from care, taking data and models from home, combine it, model it with AI, model it with science projects, and try to solve the puzzle, trying to find a cure. Connect the caregivers. I skipped that. Eloise is the very simple telemedicine service like anyone else with a big, big difference. This is specialized for dementia population, which is there's neurologists, geriatrics, dementia nurses, occupational therapists who have experiences within this field group. This is the first in the world that we are introducing. It's insane. It cost $1.3 trillion, and there's no specialist care for this online. We do this. Okay. Home, as I said, we built together with Berkeley University a software that they can manage and monitor their sick relative or care personnel from a remote way, which is you can check if they have taken the medicine, if they have been sleeping, if the door is open, if the stove is open, or whatever happening, if there's 35 degrees inside, or whatever it could be. This has an evidence in decreasing levels of stress, anxiety, and depression for both patient and relatives. It's all about keep on living, keep track. Sharing is caring, like always. and a trusted circle that can help you out in the way, because we are forcing relatives to take care of them. Oh, let's do this. Science, as I said, this is the combined data, the combined actions from for the other two segments. We model it in AI, we do science projects, and then we do studies, reports, and we offer it to research and development companies all over the world, insurance companies who wants to pay for it. We can actually give them a tool that they can use for the diagnosed insurances. Care agencies, as we say, 62% of doctors believe this is a part of natural aging. It's not. You know that now. Pharma industry, the big boys, of course, we can help them out. When they do clinical study, they have done over 200 clinical studies within this field. 99% has failed with a simple answer: too many missing pieces. Because the missing pieces is a patient with a memory disorder, and you ask them, how was your day? How was your 6 months? It's impossible. And if you have a relative with the same disability because of stress, anxiety, and depression, you don't get anywhere. We will help them. And of course, we will do new products. We will try to find a new way. The board, the team, everyone is taken into the company. Either they had huge and long experiences within the field of dementia, or most of the people is all about sales, marketing, doing IPOs, doing things international. We are a born international company. We start in Sweden, but there's no limit here. We go for the world because the world needs us. Action plan, as I say, due to the semiconductor shortage, we are focusing in Sweden this year and build up a strong organization that can deliver to the rest of the world. Otherwise, we go to Hong Kong, because Hong Kong authorities reached out and say, hey, we have the oldest population in the world now, we need your help. And we said, how do you know about us? But anyway, we will go there. UK, and you can see it yourself, but we are adding countries all along. We need partners in every market. Key figures: 84,000 start kits, where everything starts, where the intelligence is. Quite good revenues, if I may say so, and 9 operational markets. About it, we can skip that, we can skip that. This is a $1 trillion opportunity, my friend. Thank you.
Perfect. So even 2 more minutes for the feedback part. So.
Oh, you see, speed is.
25.
All right.
Yes.
Well, thanks for your presentation. I mean, it's very commendable, I think, what you're doing. And as you say, I mean, I'm Spanish, which has also a very aging population. I think no one that I know would be kind of not knowing this problem in their own family, in their own community, right? So I think that's great. I mean, one question I always have when talking about medtech is, is there any regulation that you guys need to be aware of? Is this something that would actually maybe make you more valuable because it would create that moat, or just something that you need to be aware of?
It's all about regulations. It's GDPR, HIPAA compliant. You know it all in different continents, in different stages, and I do believe that that's very important, because the patient data needs to be safe, needs to be secured. So that's why we work very, very hard with a law firm. At the other hand, we don't care about personal data. We only need anonymized data, because that's interesting to us. We want to know how things are connected and how we could find a cure about this. But of course, if there's a care provider that uses our system, they need to be able to know the specific person, and we need to be able to store that in the correct way. So all about regulation, that's a huge, huge part of our investments actually going to secure that. So it's a big issue, and it's a hard work. But yes, that will bring us forward, but it takes time.
Okay, so I have a question about the scaling your business. I mean, because I saw on your timeline that we are starting from the Sweden, like we are Swedish, yeah, and then Nordic, and then like Hong Kong. But what about European Union? I mean, like there is no problem with the cognitive disease here, or this is the GDPR issue, or?
No, exactly. Now, the reason is actually that Hong Kong reached out, the Hong Kong authorities reached out and said that you need to help us. And we see that you have the most complete solution that we've seen. And as we are in this stage, we shouldn't say no. We shouldn't say we need to go UK first or Germany or whatever. So we said, yes, let's go there. And it's a brilliant market for us because it's a small geographical area. It's a small population, 7.5 million people. So it's a good start for us as a first satellite country, and starting to, because the biggest issue is not to go abroad. The biggest issue is to deliver everything in right time. Then you need the organization, you need competence, you need logistics, you need everything in place, and that's what we're trying to build now. That's why, in some ways, semiconductor shortage is a good thing for us because we can build an organization and we can prepare ourselves for both UK and Hong Kong 2023. But Europe is there, of course, like Poland is very interesting for us, but we need a partner because we don't know the language, we don't know the culture, so we need a local partner, and that's what we're looking for in different places. And then we will add them in our action plan. This is our, what we say, preferred action plan or strategic action plan, but as you go, you always add up.
And just on that, actually, I was going to ask about, you mentioned twice we need partners, right? And then, if I understand your product, I mean, obviously you need somebody to prescribe the product. You need the local professionals in the local language, with the local habits and the way of explaining things. You mentioned IoT integration, which I think is really interesting because at the end of the day, you're part of the smart home in a way, right?
Exactly.
So what other partners do you need, and how?
Sorry,
what other partners do you need, or what's the set of partners?
What we're looking for?
Yeah.
It depends. What the preferred one or ideal one is someone within the care system has some experience within the dementia field, because it's a very specific and different field. But then it's a sale organization like anyone else. It's, as you said, this is hardware. It's a start kit that we sell, and then you said a lot of hardware. But it's also care. We sell care to insurance companies and so on. So it's a telemedicine service that we sell actually. And lastly, but the one that will take the longest time is actually a new way of performing care for everyone within this care process. And that takes more time, and that's why we need a local person with knowledge about the healthcare system and the disease.
Yes, so maybe last thing from my side. So, talking about the partners, so for example, like in Poland and in countries where the private healthcare is like very popular, so I see like that the entering to such a market could be, let's say, quite easy for you. I mean, because it's simply getting a partner like this big private healthcare companies like Luxmer or Medicover can set up simply the special package for the cognitive disease people, and it will be very good for start, yeah, and since it's quite easy so to find the scale like countries like here.
Absolutely, the best way for us to scale up internationally would be to partner up with a local online doctor service. And then we say we can offer specialist care for you within the field as nobody else is working this complete as we do. So that's our scale up, and that's our USP at the moment. But in the long term, we are planning to add food delivery, so we know what nutrition they have, so we get that data too. And then we get a holistic system, and we get holistic data. We get the most powerful dementia database there ever is. So, but you're correct. That's the part we're looking for. But you need to. We want to see as broad as possible because we want the right person, not the right background.
Thank you very much.
Thank you.
Round of applause. Perfect. We're going to be a bit more decentralized for the next one. So I'm not going to take too much of our startup's time. So without any further ado, I'm just going to introduce DoxyChain. And stage is yours.
Yeah, thank you.
Hello to everyone. My name is Gabriel Dymowski. I'm the CEO and co-founder of DoxyChain. DoxyChain builds the best blockchain focused for very specific niche, which is document management system. We have enough competences how to bring smart contract to mainstream businesses. We don't say we're going for everything. You know, we just build the best solution to take care about documents in the Web 3.0 world. And what is a problem on the one hand side and an opportunity? So the enterprises understood that the Web 3.0 world blockchain, it's not only a buzzword, it's not only speculation stuff like Bitcoin, but they understood the blockchain in terms of security, transparency, automatization, and DeFi world become such a huge that no longer can be neglected by the mainstream businesses. But still they face a problem, the problem of high barrier to implement the blockchain-based solution because of the lack of competences in corporates. That's why DoxyChain is becoming a natural bridge and fulfill this gap. We believe that this solution, this implementation can be done within 2 weeks, not in 2 years as it is today. And look what we prepare. On the one hand side, we work very close with enterprises clients. We understand that they would like be in Web 3.0 domain, but they cannot forget about the already existing solution. So we prepare good APIs, documentation that's possible to easy peasy plug and play, implement our solution. On the other hand, we use a Tendermint consensus built layer 2, which allows us to be connected with a Cosmos, which is a blockchain of the blockchain. So once again, DoxyChain become like a bridge between this well-established Web 2.0 world with the exposition to Web 3.0 new game. And for those of you who are not familiar with blockchain technology, how this technology can facilitate the document management space. First, the number. 80% according to last year report, Deloitte report says that enterprises, global corporates would like to use a blockchain technology for their operations. In terms of document management space, they see the great value in terms of certification, safe storage, collaboration on docs, signature, and control of those docs. And the market, actually, this is my favorite slide because take a look about smart contracts domain, guys. It's like 23 billion value of this market. In comparison to the e-signature market which is actually shaped by like last 30 years by such player like DocuSign, it's only 18%. Extremely acceleration in the market which we will win in the coming years. Today this market is worth 40 million, but it will be worth 2 billion, 5 times bigger, and this is the great momentum, the market which we win. And the magic behind the project, because already a lot of said about blockchain-based solution, but take a look what makes us really outstanding in terms of other players. First, the modular architecture. So we understood, once again, if the enterprise, if the mainstream will go to with a blockchain-based solution, we have to adapt to the already existing one. The second thing, DoxyChain blockchain is not only a stupid database that you will push everything what's happening in the SaaS version of in the SaaS layer, but truly our system is governed from this decentralized layer by the smart contracts. And last but not least, thanks to competences of CTO of DoxyChain, we're using a Tendermint consensus, but we built DoxyChain blockchain, which is fully compliant with AIDAS, with PSD2, all this European crazy stuff. On the other hand, what is ultra important, we are predictable in terms of costs. And the product roadmap, so far DoxyChain is available as a SaaS. We understood, once again, working very close with the clients, what they are willing to pay, what they are not willing to pay. During the seed round, which we right now closing, we will prepare a domain-specific language to build very advanced workflows to meet all business requirements. Then we will prepare interactive forms, as a DoxyChain will be end-to-end solution for documents. And ultimately, we will go, DoxyChain go public. We will connect our KYC process with such wallets like Coinbase, like MetaMask, to whip Web 3.0 expectation. After Series A, let's think about DoxyChain as a Stripe. People, enterprises who would like to make a payment system, they don't feel from the scratch solution, but they just taking a Stripe. It will be the same story with DoxyChain. If the next years, as it will be, if enterprises would like to go with their docs to Web 3.0 domain, they will use DoxyChain, as we will be easy peasy boxes play and play solution. We will be ready for the mass adaptation of this technology in this domain. And ultimately, our vision, as we use a smart contract in such way, not another, we'll be ready to make DoxyChain DAO. It's the blue ocean, which we will win the documents in the future. Okay, uniqueness, because there are already some players, you know. Probably you guys are using DocuSign, and probably you know Hyperledger Fabric domain, you know Ethereum. But what makes DoxyChain really unique? What makes DoxyChain the blue ocean and the players which we will win the future of Docs? It's the way how we use blockchain technology. It's the way that we spent 2 years preparing protocol just to address all issue, all things which have to build the best blockchain for documents. And we are not traditional blockchain startup, as we have paying clients. So among others, two the most important we are proud of today from the Polish market, Warsaw Stock Exchange and Marion. Those two entities which are using on a daily basis our technology, our infrastructure to secure their docs. We have other 25 companies which are using our solution. But we are proud what kind of use cases we can do that nobody else take care of. So first is certification. We make your documents really valid. In real time, see either it's valid or not. The data sharing is the new layer of security in data sharing. So for example, Polish hospitals start using DoxyChain platform to record patients and submit to the third party. And how are we gonna make money on this beautiful story? So till the Series A, there will be stream of dedicated integration because some house working with an insurance company, banks, you have to be aware about integration issue. But after Series A, DoxyChain will become like a Stripe for documents. That's why this hockey stick will be done by the subscription. And the go-to-market strategy, so we start in Poland, there is great talent pool, but we understood that our sweet spot in terms of clients are in Germany and in the US. So we starting in Poland. This year we will have clients from Germany and US. And at the very beginning, I told you guys that we are the bridge between Web 3.0 and Web 2.0. On the other hand, we help to in the opposite side. So we have clients like consulting finance that they are in the Web 2.0 domain and helping them to enter Web 3.0. On the other hand, we have already Web 3.0 crazy startups that they seek to be legally binding signature in Web 2.0 domain. So here we are. We are the players who really combines those two words. And in terms of our competences, so my name is Gabriel Dymowski. I'm the CEO of this startup. I'm 6 years in the blockchain domain, working previously for corporates, we implementing this technology. Piotr Lasko, genius about cryptography and building outstanding protocols for blockchain. Wojciech Stroka, Chief Product Officer. This guy was leading the BitBay. He from the scratch built the solution. And Bogna Rubańska, she's in our team. She joined the team like 6 months ago with a 10 years experience in selling to enterprises. Previously as a managing partner for Verizon Connect. She shows how to make money on top of this beautiful story. Behind those guys, we have 10 other full-time players. Okay, so right now we are looking to close within next 2 weeks, 2.2 euro seed round. Thanks to this money, we will reach 100K in terms of MRR, and we will go to the other markets, not only in Poland. That's it. DoxyChain will become the new player. We will actually redefine the documentation, the way how this works today. And if you are ready to really be part of it, we are super happy to talk with you.
Thank you very much. If you don't mind, I'm just going to give a 2-second feedback. Like, I remember 2010-11, like startups were pitching in the seed stage for 10,000 zloty. And now you say 2.2. You didn't even say if it's 1 million or if it's 1,000. So I just really want to say that shows the maturity of this whole thing, and very exciting. So
Thanks.
Please, I'm sorry.
Okay, so I can start this time. So thank you for the presentation. So it's not like a secret that I'm representing Pico BP, which who invested with like 2 other banks in my opinion, you're like competitor.
Authentic.
I mean the Authentic. But on the slide with the competitor, there was no information about Authentic. So maybe the question from my side will be: you are not thinking about Authentic as your competitor, or
No, actually, the representative for the group which I'm mentioning, we are compared to the global players, which is DocuSign, and it was in my slide. Nevertheless, they deliver only a signature, you know. And from our perspective, a signature is just a part of the whole system. So we will have like a marketplace for smart contracts, and a signature is just one of a smart contract in our system. So we will be much bigger in terms of how we can take care about operationals and extend only about a signature. So yeah, they address just a small part what DoxyChain is playing for.
Okay.
By the way, we will list it last week as the first blockchain signature. The list which Authentic is also listed. So we have like our solution is as legally as you talking about your invested company.
So, I mean, well, I love the space, and I think it's very needed now. How do you convince your clients to prioritize that into their tech? You know, because large organizations, this is very far from probably what they're thinking, right? And I'm a big believer that there's a number of what I call boring functions that you can actually turn into strategic functions. And the more you automate, the more you bring data, the more you make them open, the more you can actually turn those. But the education in organization is tough. So how do you go about it? And what's kind of the your headline value proposition to a large bank, a large telco, whatever it is?
Sure. I mean, we stopped selling to clients by the technology itself, but we understood if we would like make paying for this, we have to really solve a problem. So once we going to the clients, we first really understand what kind of problem they are facing today, even though we have like Authentic DocuSign, you know, and they are really like facing the problems like certification and authentication of documents can be checked in real time, or document sharing with external corporation and having and like sign on the blockchain that the third party have an insight into this documenting. Nobody else right now on the market can give such a value. Once again, we are not selling the technology itself, but we are selling the pains which we can solve. Moreover, the blockchain is such a beautiful technology that we can even reinvent the new business model for them together with them. That's why if we're gonna win this market, we really working very close with the clients and together with them, building a solution that they can not even imagine before.
Okay, but I understand that you are solving quite the big challenges of the companies. So the implementation of the DoxyChain is quite taking quite a long time. Yeah. So for such a big companies, or you can do it quite fast.
As mentioned as my slide, we prepared the modular architecture. So we have boxes right now, 12 boxes where blockchain is one of them. So we can adjust our solution to our clients. For example, if they would like to make a storage which DoxyChain deliver, they will take it. If they would like to make it by our own, let's take it. We just take which kind of boxes would you like from our scope and take it. And thanks to the architecture, modular architecture, we will do it extremely fast.
Okay.
Yeah, no, it's cool.
Thanks.
Thank you.
Perfect. So guys, you're making my life way easier by just finishing on time. Thank you very much. And last but not the least, again, that's one of those things that I have to ask for a proper name. Share.p or?
You can say share.p or
share.p. Share.p.
It's
perfect.
easier.
So
Well, it's
I'm sure you have 10 minutes to explain what it means.
Yes, sure. So here we go. Hello, everybody. My name is Mateusz Wojdyło. I'm glad to present Share.p, and I hope you like you did like the chocolate. Yeah. So what we do, we do a quite simple thing. We finally, after 80 years, we're the first company that entirely digitalized the whole parking industry, including charging of the electric cars, because it's really binding. Some say we are Airbnb for EV charging points and parking spots. We just give people make money whenever they want, how they like, 24/7. And everything you are going to see here, we built within the last 15 months, starting January 2021. So the problem of parking, I think everybody know. I hope you didn't have many problem of parking today or even last days, but most of the people does. This is not flexible. You cannot really rent it as you like, where you like, and the promises in the buildings are closed only to certain people with some card and access. So it's kind of analog. And of course, charging stations, this is a booming market, which I'm going to show you in a moment. And it's a still big question mark, and most of the people are doing it wrong just by saying, let's install more and more charging stations. This is not a solution. Our solution is to install a special system from Sherpy, which takes nearly about from 30 to 60 minutes to digitalize any kind of existing parking infrastructure. Either it's a one-gate infrastructure or it's a 14-gate shopping mall, for example, in Wrocław. We do it with in a fully automatic way. Then you have access to sign a contract for a different timing, and it's available in the app. And when we come to the app, this is it. It's available in 5 languages on App Store and Google Store. With the app, you can find a place, book the parking, reserve for future or right now, get a ticket, open the gate, or even multiple gates if they are like this, and pay for that with all possible payment systems that are right now in the market. What is interesting is our cooperation with SBB. It's the biggest Swiss public transport operator, which with the cooperation with them right now, we are able to sell every kind of ticket in whole Switzerland, including the parking. So with this, we can create micro park and rides, and we can plan your trip. We can actually let you know that if you're a car driver, we can tell you how you can save time, money, and CO2 by leaving the car a little bit outside of city center and then continuing with the tram or a bike or a bus. And then because of this, we tell you, you saved money. That's the first most important thing for people that are parkers. Then the second, you save time. So you can spend the time with your friends or playing games or with your wife or a husband. Or, of course, what's most important, sustainability, you save CO2, even if you drive a diesel car. We have already customers, they like our solution. And, you know, among all of those things, the most important one is that it's simple. They have a panel, they don't need to come anymore, they don't need to give you a key, sign a paper contract. Since 8 years, we are the first ones who finally solved the problem, which seems quite simple, but yeah. What is also important is that charging stations, you know, you probably have seen those pictures of charging stations on the street. It's not going to work. Cities are banning this now because it's not really going forward this way, and it's extremely expensive to install. We need charging stations because this is how the market have been changed. It's not the future, it's already now. All the producers are going for electric cars, that's it. So when you install a charging station in underground parking, for every parking spot, you're not going to have enough energy for a building, even if you have a building, if you have a charging energy management system. Forget it. So our idea is to share the charging stations, but you cannot do it with your phone because there is no cellular connection underground. We solve that. Our app works underground, even on -3, without internet. You can pay for charging based on the conditions that the building owner sets or the owner of the charging stations and the timing. So this is a part of our ecosystem. It's a gate module. It's a small, tiny IoT component which can work with any kind of gating system available right now in the world, like Skidata, Gilligan, Schein-Bachmann, FACT, Doma, Kaba, etc. Mobile app, admin panel, really user-friendly, and module that is controlling, software that is controlling all the charging stations in the market right now. We have a couple of other R&D projects, of course, because it would not happen without this. I mean, many startups or companies, it's more than 156 right now in the Europe, are focusing on parking or charging. This is not even more than 500, in fact, softwares, but they are focusing on parking or charging on the street. It's 8% of the market. We're going for the rest. So we have a couple of projects in a consortium with University of Zurich, and some of the patents. The business model is quite simple. We charge 399 for the module, and then for a gate and per gate, and the whole parking can be managed by our system in a hybrid mode. So the previous systems also still functions, and we take the commission from the payment and commission from the charging stations. We already have some tractions. One of the newest one and the freshest one is the Google Switzerland. It's the real estate of them, because the story is simple. They all rent the buildings, and each building have the different system, and Google does not allow to integrate with themselves. So we are a good partner for that, because our system can verify Google employees easily and let them rent the parkings and pay for them internally. Yeah. This is one of the graphs that I think everybody experiences in their life in a shopping mall or somewhere in the parking, doing this snake move. But I recommend more to go to the gym and make the gymnastic and just use our system. It's easier. We operate in one of the closest big places to Wolves. It's, for example, one of the biggest shopping malls in the center of Wrocław, Arcady Wrocławskie, including 14 gates and all the office spaces and special deals for the cinemas, etc. And for example, National Music Center parking under the Wrocław. The market is huge, and it's not only about this, what I'm showing you, it's about the hardware selling to parkings or hardware selling as EV charging stations. But to tell you something interesting, the value of the fuel that people put into the car in average in the whole world per year, it's $5.4 trillion. According to Shell and BP, 40% of that money will go to EV charging. We are just dealing with this. And yeah, we don't care about the hardware, let them install it. We just control the flow through it. Yeah. Those are predictions for the 2023 revenue, because right now the way we operate, it's quite simple to get, as you actually know, with the big partners like B2B, signing a contract, it's a big hassle. So we prefer to give our solution for free as a start, because it's an entry point, and then just monetize it within the next 5-10 years. We want a couple of things in the meantime. It's just a little bit of them. We have a lot of users using our system, and we have also a lot of organic users coming to use our platform, which is free for everybody on our website, which is more than 370,000 users with the last 10 months. And since January, we have active users using our system, which is more than 28,000 actually by today. We won also the United Nations Development Program grant to develop our system in Central East Europe and to integrate the sustainable mobility in cities. And that would not happen without the team, which is I would say, most crucial for Sherpy. It's extremely experienced in IoT, in technology, in design, in architect, and all the people in the team are programmers, including the rest, which are not in the slide. Yeah, we've been already in some media, covering Switzerland, covering Germany, and I'm looking forward to have a discussion with our mentors.
Thank you very much. Perfect on time.
All right, thank you. No, very cool. I mean, you're definitely riding the waves of all the big trends now, right? Sustainability and new mobility and EV. So I think the presentation was great. If you were to say, this is my main impediment for more growth, what would you say that is today?
I didn't understand the question, sorry.
So, everything looks, up and to the right in your presentation. If you were to say, this is the one thing that's hindering me from growing faster, from being more successful, what would that be today?
Money. Actually, last Wolves in Wrocław, we had a meeting with Porsche and with Axel Springer. They've been also partner. And they said that Porsche invested so much money into e-mobility right now because they said that it's the way to do it. It's like Elon Musk did it in 2009 with Tesla superchargers. Let me explain you this. In a street where you live and where you live, there is a cable with a certain size. And this cable can provide you only a certain amount of energy. If you are the first one who put the charging stations, then nobody else will be able, because the community will not pay for the bigger cable, but you are legally binded to use the cable if you will to. And our goal is to scale up faster, to get more fundings, just to make the installations. Because it doesn't matter, even if the people don't use it today. But we know, everybody knows that all the car manufacturers, they switch to EV. So the people, predictions for just for Europe, according to TÜV Germany, it's 63 million charging stations we need. Now we have only 3%. So who's gonna have more money to just install them, but not on the street, on the real estate buildings, B2B. So money, this is only limit we have.
Okay, I also really like the idea, but I remember a few years ago I talked with a startup, let's say the idea only about the sharing parking spaces, not with the chargers, but only, and they had the main problem with the office spaces and the private home spaces. I mean, like, for example, it was quite easy, to talk with the public parkings, to connect to the system, or talk with the, let's say, commercial center parkings and like a lot of parkings. But there was a problem that office parkings, it was like due to COVID, so the office parkings was totally empty, and it was like everybody can use it. But there was an issue, the security issue problem, that the offices do not want to, if they prefer, to lose the money, then enter, that allowed to, to enter this parking, the other people, yeah. So this was the problem, and also I see, and this was also the same problem with the the private apartment parkings, where simply people were living in these apartments don't like the others to to walk through their parking because they are lefting there some their things. Yeah. So you challenging this problem or?
Thank you for the question. It's a very good one actually, and I think I might know this company even.
I guess yeah.
But because there's only few ones that really tried. What is the difference between us and everybody else before? First of all, we have our own technology. It's the first very important thing. That's why we are able to give it away for free, because we build it and it's low cost. It's extremely low cost. And because we examined the market before we started, we did the MVP as it was supposed to be. And we bootstrap. So we really had a feeling how to do it on the beginning, not like, busy and so on. What is important here to answer your question is that, do you know me now? You know my name, yes? You see my face, theoretically, yeah. So right now, the problem in the office spaces they were facing and in other places was that they were trying to make the app that doesn't have any user KYC. I already did 2 exits, so it's not my first startup. And previous one, I built an insurance company. I know about KYC quite a lot. And I know it's actually very important to know your customer. And if you know your customer, it's not a stranger anymore. It's the person you know. It's actually, right now, most best platform to rent parkings, share parkings is Facebook. You don't know a person there at all. And people still do it. You rent your parking to somebody, you sign the contract on a piece of paper on the boot of your car, you give him a remote controller to the garage and you have no control about this person. In our case, he gets the button in the app. If you don't like, he don't pay or whatever. You just switch off the button. That's it. So the security is on a high level, and because we also verify the way you entry, you have the recordings of that, and you can verify the cars in the parking. So the security is on the level that Google accepts and SBB accepts, which actually could be a good sign in this.
Really appreciate it. And I'm sure that there are lots of other questions, but we're running out of time. So thank you very much. And round of applause also for our very good mentors that they give their feedbacks. So guys, many of you know, hopefully, that they say that E in Estonia is for electronics, but I'm not sure if I can make that up, but they say like P in Poland is for people, maybe, you know. So we are going to talk about why Estonian startups are scaling that fast and how can Polish startups benefit from Estonian jurisdictions. So I'm not going to take your time that much. It's going to be 1 hour of hopefully fun and a lot of, let's just say, first-hand knowledge. And I think we need a few minutes just to prepare the stage for our speakers. And then in almost less than 1 minute, you guys would be able to have the stage with speakers. So stay here.
Both to remind everyone, we're physically here, but we're also online via Hopin, streaming online. And I think that was the delay here because we're on the Hopin platform as well right now. My name is Tom Barnhart, and I'm going to moderate this panel today. A couple of caveats. This is a session about Estonia. I actually have an Estonian company, so I'm actually curious to hear some of your opinions as well. But instead of me introducing each of you one by one, Artur and Sergey and Dag, I'll have each of you guys do that first, and then I'll start back with you, Sergey, to talk a bit about the e-residency program. But Artur, let's go first. There's a very quick intro first.
All right, thanks a lot. Hello, guys. It's a pleasure to be here. My name is Artur Kuczmowski, and I'm senior partner at Thompson & Stein. And we are a law firm with offices in Warsaw and Tallinn, so we are responsible for a big part of the movement, of the financial movement and capital movement between those two countries. And I'm also the member of the management board of the Polish-Estonian Chamber of Commerce. So as a NGOs, as a non-governmental organization, we do have also a couple interesting stories to share.
Okay. Hi, everybody. My name is Sergey. I work for the e-Residency Estonia, which is a governmental organization. I'm a business development coordinator, so especially for Poland, so that's a big reason why I'm here. And I think throughout the speech, I'll tell more about it.
Hi everybody. My name is Dag Ainso, and I am a general partner at Startup Wise Guys. Startup Wise Guys is the leading international B2B accelerator fund in the region. We are now currently having programs in Estonia, Latvia, Lithuania, Poland, Turkey, Italy, Denmark, Spain, and starting in Romania this year. We started in 2012. We have done over 290 investments so far, and mostly we're investing in the region. We like to say this like overlooked markets, mostly like Central Eastern Europe, but also like Italy, Spain. These are like actually overlooked markets in the general terms of venture, and we like to invest usually in the very early stages, technical founders who have big ambitions, and we see that they really have something, and we would like to support them throughout the journey, also doing follow-on investments in the later stages.
All right, so this session is about why Estonian startups are scaling faster or that fast, and it's about a combination of the structural issues with the Estonia, structural advantages that the Estonian corporate structure has, tax structure has, but also about, and I think this is perhaps even more interesting, is there an advantage, therefore, with that structure to actually attract faster, get faster access to capital, bigger access to capital, and therefore grow indeed faster. But before we get on that subject, which is going to be an interesting subject, let's talk a bit about the e-residency program. If you just introduce it, Sergey, how does it work? What is it about? Tell us how digital is Estonia, but please intro the subject.
I'll probably maybe start a little bit from earlier in the time. The reason why we are here, I guess, is, I don't know if you're aware, but Estonia just recently had its 10th unicorn on the population of 1.3 million, which puts us on a top in the list of the amount of unicorns per capita. And if you think that 30 years ago Estonia was completely with a broken economy, and streets were full of gangs and corruption, then 30 years later we were able to lead the pack, the worldwide pack of startup movement. So we thought it's going to be a good case study or a good opportunity to discuss and build a conversation around it. So we're thankful about this opportunity. But the reason I'm here as a representative of the e-residency is we would definitely want to take some part of this conversation to talk about how you can benefit from it if you're an entrepreneur from any other country than Estonia. And the key to our jurisdiction or to all of the benefits that Estonia has to offer is the e-residency program. And hopefully throughout the conversation we can discuss a bit more about it, and through some good practical examples as well, because I know those gentlemen have some good stories here that they took with them.
Yeah, so I think I can just add that we have, as I mentioned already, that we have invested in over 290 companies, and we are headquartered in Estonia, but not all those investments are not from Estonia. So many of them are, for example, from Ukraine, from Turkey, the jurisdictions that are usually not investable, and those people want to set up companies in the European Union, but also like the other European startups, they actually usually establish companies in Estonia, and we help them actually in the process. We have all the structures in place to do it, and it's a very easy process. It's actually setting up a company takes like 15 minutes actually. So of course, like preparing all the agreements, if you're getting investment, takes a bit more time, but Actually, the process is very easy if you have the e-residency set up. If you have an e-residency card, you can actually do it online yourself, not even being in Estonia. And that's a big advantage actually. And you can later manage the company also online. You don't have to like come physically to Estonia or anything. So if you have it set up already, and also you can set up a bank account actually in TransferWise or now Wise, which means it usually takes also like 1 day, and then you are actually up and running. So there are big advantages in that, and also the jurisdiction is quite actually well supported by the VC community as well. So we see international VCs investing in Estonian company. Sequoia recently invested in Bolt, which is Estonian company. So we see like a lot of bigger international VCs also like supporting actually the jurisdiction.
Please, Dr.
Yeah, just one word. You know, if you look at the e-residency and the program itself, then you realize that what is e-residency? Is only a digital signature. But the difference is that this is a digital signature which in fact works. And that's a huge difference in between the similar solutions which you currently have in Estonia. It was adopted in 2016. E-residency was 2014. And right now, the countries like Lithuania, like Latvia, like Portugal, they want to run the same program. I mean, they would like to grant the possibility to sign digital the documents and to give the access to their administration to the foreigners from all over the world. And this is that's very good that we started from that, because, guys, at the moment, if we look at the Poland, try to get the digital signature for a foreigner without his personal identification number, without Polish peso. This is nightmare. I mean, it's doable, but it takes roughly around 3 weeks if we would like to do it remotely. If you want to do the same in Lithuania, it takes, well, 1 week, but you have to be twice in the country. So, and we're talking here about this solution which was adopted quite a long time ago. So e-residency was also one of the milestones, I believe, for the scaling up the economy and the ecosystem, because it is a tool, as you said, guys, also which you can use for company registration. But then it's as important for managing the company, for running the existing company, so for joining company as a potential investor from all over the world.
So let me ask this: if you were a single operator, one person owner of an Estonian company, that must be, of course, easier than having 25 partners all over the world. How difficult is that? If one person sets up, in fact, I've done that, so that is pretty easy. But the question I have is, if you've got 25 partners and they're all over the world, how difficult is that to get that done, execute that?
So yeah, if you are just a single like entrepreneur or solopreneur, right? We have actually service providers in Estonia who will just charge you like flat monthly fee, and they will provide you everything. You know, even accounting. You know, you don't have to do anything. You have the platform where you can send invoices, everything. You have like everything covered. But if you have like more shareholders, it's of course more complicated. But even in that case, now there are solutions for that as well. So,
I mean, do those guys have to be e-citizens as well if they're a partner in that project?
Well, and again, if we compare it between Poland and Estonia, we had here in Poland huge discussion about new kind of company where you can freely transfer the shares from one person to another without the need of visit at the notary, and so on and so on. So this discussion was here for a couple years. And what happened in Estonia? There was just two new articles adopted that if your company has a share capital, has paid share capital in amount of 10,000 euros, and there is information articles of association that you can transfer the shares just in the normal written form, you can do it freely. So in this situation, we only demand the member of the management board to be e-resident or to have a digital signature. Your investors, your partners, they do not necessarily need to use that tool.
Yeah, they can actually use like DocuSign or whatever, so which is available to anybody. So basically, if your share capital is over 10K, it's super easy actually. Before that, it was a problem because if you had 25 investors, means that everybody need to get e-residency, which actually was done as well. But now you actually don't even need that.
Okay. So we're going to come back to that in a little bit, but let's talk about taxes as well, because that's also a little bit of the advantage, perhaps, or the perceived advantage, is that is Estonia a tax-free environment? Is it not? What is the situation with corporate taxes? Because some might think that it is, but please go into details.
Yeah, corporate income tax is 0. So you don't have to pay taxes on your annual profits. But if you want to distribute the profits to the shareholder as dividends, then yes, you have to pay tax on the dividends. But it's I think it's 21%, so it's quite low.
It's actually flat 20. It's flat 20
yeah.
Because in Estonia you have very simple taxes. I mean, you have 20% of income tax, 20% of corporate tax, and 20% of the VAT. But then the corporate tax really exists. It's on the rate of 20%, but as he said, this is paid only at the moment of giving the dividend to the shareholders.
So if you leave that money, if you make $1 million, whatever, and you leave it there for 1, 2, 3 years, there's no tax due until you take it out. So it's a deferral, essentially a deferral.
Yeah, and you can invest this money to other companies or wherever, right? You don't have to pay any tax on it before you take it out.
If I may add, just to maybe a simplified explanation. So there is, you pay no taxes when the money comes into the company. You pay only taxes when the money comes out. So obviously when you pay salaries, then you pay taxes on it. And then if you want to distribute dividends, then you pay dividend tax. I mean, maybe let's just call it this way, then it's easy to understand. But other than that, there is no really any...
Yeah, and startups don't pay dividends, as we know, right?
And I mean, that's why the startups, that's why I know companies who easily go 5, 10 years without paying any taxes.
But is it from your point as an investor, is it really important?
Dividends?
No, the difference in that if the company really pays those taxes or not, from your point of view as an investor.
As an investor point of view, of course, it's for us, it's also more beneficial if startup or the company needs to pay less taxes, right? It means more money to invest into the business.
It's a Warren Buffett thing, which is deferral of taxes. You know, he owes huge taxes, but he has for 30 years, the company, because it's all deferred. So that's to your point, that you can reinvest it without taking it out.
Exactly.
Yeah. Okay. It sounds great. What are any catches, any things that, or other issues that that one should be aware of? And again, let's introduce other competition, because you've got, you've got Ireland, you've got Amsterdam, you've got Holland, you've got Malta. Tell us a bit about some of the other jurisdictions and why you think it is more sensible Estonia than somewhere else.
I can maybe start with a catch, as you asked. You know, you have to consider that Estonia is a super small market, right? So if you plan to start your company there, which is actually a catch that can be easily turned into the benefit, because I would say that it's a culture in Estonia. I mean, every other high schooler wants to have a startup basically, and does everything. I mean, literally doing steps towards this direction. You know, I ask a college kid, and he probably have tried already one startup. You know. But those founders who try to start a startup in Estonia, they are forced to build their operations with a thought in their mind that it has to be scalable right away from day one, because there is no market in Estonia. So when they think about how we can build it, they think right away, okay, UK is my next market, you know, the other one is the other, and then so on and so on. So if you look at the unicorns that we have, you know, right at the moment where they realize that it's highly scalable model, then UK, US, And the only thing that's left is the name of the founder. That's Estonian name, you know.
If it's not a scalable model, you don't get funded. So everybody's from day one thinking about how to go global, and everybody's asking that question like from the day one. And we have the good is that we have those examples, those role models. So actually, that's what's inspiring the new, as you're saying, like everybody was finishing school or even in the school already, they want to do a startup. So it's because they see those success stories, and this is the vicious cycle, you know. And I see this happening in other markets as well, and I'm sure it's going to happen in Poland the same way. So it just takes some years, and in Estonia it started like 20 years ago, right, or even more. And now we have like multiple generations of entrepreneurs starting companies and helping others and investing in new companies, and then it's at some point it's gonna go bigger and bigger, right?
I believe that the difference is that if you run your company in Poland and you reach a success here on the market, you might be a very wealthy person. But then, if you are doing the same in Estonia, because since it is a relatively small market, for you, it might be only, let's say, a sandbox, test market for your products, and then to scale it up worldwide. Because it's pointless to. I do not know anybody in Estonia who thinks Estonia as the destination.
Yeah, in Estonia, actually, the typical has been like, okay, we start in Estonia, it's a test bed, right? Then we go to Latvia, then Lithuania, and then to the very big market, Poland. So Polish is like, you know, oh, this is a big market. But for us, it's like an international market. It's big market, and if the startups can prove themselves in Poland, they actually can go to the other markets further, right? So that's. But if you start in Poland, that you are actually more maybe like focused only on this market. You know, you can actually earn quite a good money here. And that's good as well. I mean, not every company needs to become like international player. In Estonia, it's just inevitable because there is no point of doing business only for Estonia. It's just.
So let me jump back to the question of other jurisdictions and the structure, and if people are looking at other structure, other vehicles, and there's also the issue about tax. I mean, there's the EU-wide initiative to have a flat or global tax agreement. How does that affect Estonia, and is that an issue that you guys think about, worry about?
Well, at the moment, Estonia is the leading country, which is actually kind of against this global minimum tax. Why? Because I do believe that it's, and somehow I agree, and that this is pointless. And Estonian tax system is pro-business and business-friendly. And actually, if you look at the statistics, and when it was adopted, it cost really the state a lot of money. But then, after a couple of years, and when the dividends are starting to be paid out from the companies, it is Estonia at the moment gets as much corporate tax as Poland, and we have 9 or 19 or whatever, or if we use other shame, we pay that amount of the taxes and so on and so on. So I don't think that Estonia should be worried about that. But from the other side, if you look at Estonia as a country, and if you run the business in that country, there is one thing where you can be sure: the administration. The administration will treat you as a partner. Guys, you are Estonian, you do not feel it. But if you go to the country where you can easily talk with the administration, if you can easily talk with the people from the tax office, imagine that you send the email to the Ministry of Finance, let's say to the tax office, and to the email address contact@MFA.ee, which is Ministry of Finance, and they will reply you within 5 days. And after a couple of days, you receive the information that my name is that and that. This is my position. I will take care of your case. And what you got really, truly fair response from them. And then they will keep it and they do cooperate with you because they treated you equals. They treated you as a partner. And this is something what is missing, I believe, in many jurisdictions, which
Certainly,
you mentioned.
certainly in Poland, right? You would have that in Poland.
I didn't say that.
Yeah, I can say that, yes.
See, a small joke. A couple of years ago, there was a national survey of where people got the best customer service in Estonia, and the tax authorities were voted number one as the best customer service provided in the country.
So let's go beyond structure and tax issues. Let's say this administration is good. Let's talk about the subject, which is scale up faster. I mean, is there indeed, beyond the structural issues, the administrative issues, do you think that it's easier to raise capital simply because you have an Estonian-based entity, which on the face of it doesn't make sense to me, unless there's a tax structure. But why would you, just because you're based in Estonia, mean that you'll be able to access capital globally or better? Explain that, because you need to convince me of that. I'm not convinced of it.
I actually don't know if that's the case, actually. So I don't think that it's like, I mean, that you're registered in Estonia, that would like by default get you better capital access. So I think right now, like the most like accepted jurisdictions for VCs are like Delaware or UK, right? So these are like the main ones. But Estonia is increasingly becoming the jurisdiction that investors, also the global investors, are happily investing in. And but it's not like something that, I mean, for the scale-ups, I think it's in Estonia, it's more like starting is very easy, and also like growing your company, and in many cases actually the investors coming in later, they want to see the companies flip to UK or Delaware or somewhere else, which is some cases happening as well. But now increasingly actually the investors don't require that anymore. But it's not like Estonia is that sense. But there is like more and more that, and also in the fund sides there is like more funds registered in Estonia. Also have like multiple Polish partners who have registered their funds now in Estonia because the legislation is very good, and also the ease of this administration side and communication that's helping it a lot.
Any more thoughts about that, with that structure?
Well, but did you hear that we're coming always back to the administration and the business environment, and I believe that this is all about, and definitely Estonia is a place to start, and this is the place for early stage of growth companies, and the companies from Estonia are really expanding very fast worldwide, because they need to search additional solution. I mean, Estonia is a relatively small country, and you do not have as many tech engineers as you wish to have. You do not have as many people who might work for you at your back office. So it's natural that majority of the startups are searching worldwide for their employees, and it's natural, I believe, that if you got the employees from India or from any other country in the world, then you have your mentality of thinking globally.
May I add, since you touched that topic a bit as well, that's another catch maybe, as you asked. Like Estonia, yeah, it's a small market, but the second thing, we're very short on professionals, like IT people and so on. So there are ways, as how we are trying to solve it, but one of the things that has been working really well for us is, if you are a startup, then you are qualified to bring professionals from all over the world with the startup visa, and I mean, it's like that simple. So that's a huge advantage if you have a team that's spread and then you want them to bring somewhere to Estonia, then it's totally doable with no issues.
Yeah, I would add to that startup visa is also meant for the founders who coming, right? So it's basically you can come with the startup from anywhere in the world, and you can apply. And there is a startup visa committee who will go through your application. They will check the slide deck, if the business is valid, if the founders have like a good background. Basically, it's I'm actually part of that committee, so I know how it works. So there is like 7 people or representatives from different like VCs and organizations who are evaluating those ideas. So in a way, the startups are applying, and they are in a way like pitching to the investors that they have a solid startup that should get a visa from Estonia. And then after the committee has said yes, it's a startup, then it will go to the immigration, which will just check the background of those people, and then give them the visa. And then it's a 1 year. I think it's a 1 year visa. Then.
And of your companies, you said you have 270 or 290 companies in your portfolio. How many of those are Estonia-based from a registration perspective?
I think it's about 40%, I would say. I don't know the exact number, but around that, or even more. I think it could be like half.
Okay. All right. And Artur, back to Poland a little bit. I've lived in Poland a long time, lots of the bureaucracy in Poland. What are you seeing in terms of the acceptance among Polish companies to set up somewhere other than Poland? Is that becoming, fashion was the wrong word, is it becoming favorable, sensible? Do you see anything with this Polski Ład that changes that? Tell us a bit about that.
Well, I believe that our biggest problem is again the administration, and it's not only the current ruling party, but because it's happening since many years here in Poland. And the problem is that you living here, these guys are living in Estonia. They're residents of Estonia. They know exactly what kind of taxes they will pay this year. I will tell you more. They know exactly what kind of taxes, what amount, percentage of the taxes they will pay in the next year. Plus, they knew exactly, look at them, they look at me like they do not know what I'm talking even about. And here, what is the situation? So of course, this is another reason why the Polish startups are really searching for the jurisdiction to register itself. And of course, you have different reasons. Is this in administration and the legal frames to run the company, the access to the capital, the possibility to onboarding the new investors, and especially if you are on the early stage, those money really counts. You do not spend them on lawyers. Rather, you will spend it on your product. And another thing, of course, the taxes plus the image on the world. And we have examples of the seed rounds or pre-seed rounds of the Polish entities which were actually registered in Estonia. Even what is interesting, with the branch in Poland. So in this case, in this one case, it was possible for the Estonian entity registered with a branch in Poland, was possible to have a Polish VC founded by PFR to have as one of the investors. So yeah.
We have actually tens of cases like that. Yeah. So that actually have got investment from Polish VCs. But they usually, and the company headquarters has stayed in Estonia, but they have established a branch or the subsidiary here in Poland. And also they have the option to convert the equity into the parent company in case of the exit. So this actually works quite well.
Okay, since we're in Poland, let's say it's a situation where I had, 100 employees on Umowa Praca, the proper Polish employment contract. Is it possible to have that within the Estonia structure with a branch here, or is that simply not possible?
The branch is treated as a local company, so it doesn't bring you any differences.
Okay. All right. Tell us a bit about the companies in your portfolio, Dag, that have grown up, and you touched on the fact that some of them have been asked to move jurisdiction to Delaware or somewhere else. Tell us a bit more about that. and that's changing. Estonia is being more accepted as a final destination. Tell us a bit more about that, if you would. Flesh that out some more.
Yeah, I think we have seen this change in the past years, and I think it's just like based on the examples that I brought. Like for example, Bolt is a good example who has actually not moved the jurisdiction. If you look at the other unicorns like TransferWise, right? They were established in London, in UK. So it's in the recent years, like founders actually want to keep their companies in Estonia, and we have many actually examples of those. So I see this as a trend for sure, and but I don't see a problem even if you change the jurisdiction in some point. I mean, there can be many reasons for that. So as long as you have like business still in Estonia, it's good for Estonian economy as well. And of course, we have like many companies that actually don't have any operations in Estonia but have the legal entity in Estonia, right? So this is actually majority, like all the like companies, let's say like from Ukraine or Turkey, or so they usually don't have any operations in Estonia. So they just have their legal entity there. They manage the headquarters from there, but actually their development team is maybe in Turkey, right? But customers are all over the world.
And let's talk about how is Estonia, how digital is Estonia really. We talked about this morning, John Franco mentioned about the war and how that one should have a backup plan. What's a backup plan for Estonia? Let's say that you have an Estonian company, you've got a bank account there, you've got $1 million in the bank account, and all of a sudden something goes wrong. Am I to worry about that, or is it all in the cloud? I mean, tell us a bit about that.
Well, I truly believe that Estonia is the first country in the world which can function 100% remotely. I mean, if you are running your business in Estonia, you can just pack your desk and everything is in your laptop, in your mobile phone, and from this perspective, it's really easy to run the company. But the second thing, which is more important, is that you'll be backed with all the public administration services as well. Sergey, you know where the servers are located and and data.
You know the exact address.
I've been there.
Tell us that.
I've built that. No. But yeah, it's I think since 2017. What happened is we basically all the government data is located in the cloud, which is based in Luxembourg. So we call it data embassy. And it's actually treated like the Estonian embassy on some other jurisdiction. So it's completely our jurisdiction there, like e-jurisdiction, you know, in the cloud. So what it means really, I mean, if we talk about the e-governance, so like this is a fun or a real fact that 99% of all the public services in Estonia are available online. You can't get married and you can't divorce, and that's the only thing. But everything else is online, which means...
And in English.
Oh, yeah, and it's, I mean, obviously, yeah, it's all...
That's not that obvious.
Oh, it's not obvious? No. Oh, okay. Yeah, it's all Estonian, and English is basically the second language in Estonia. But what it means is that all of the information is stored in databases. So it's not like the old way of a paper, and the paper is located somewhere in the building. That's not the case in Estonia. So that's why if something happens, I mean, the only thing we need to worry about is cyber attacks. But we've been good.
Cyber attacks are like happening every day, and recent months they have been super heavy, and but all the services are functioning. So it's I think this is a given, you know, that you have cyber attacks basically happening, and so far it's been proven that we can actually stand against them. We'll see how. Hopefully it lasts.
You see how the Estonian people are talking about the cyber attacks on their country? Yeah, we're facing cyber attacks. Yeah, we're facing them every day. Yeah, we're handling them. Well, you know, and that's the secret of the success of the country. And the same with, not sure if you heard, guys, about the X Road. This is the way how the public administration is built. This is how the data are decentralized. And actually, if you are using this system, it's supernatural. I mean, it's the user experience is on very high level, and for Estonians, for the people who are born there and who are living there from the childhood, it's supernatural that you're going to the one or even logging online somewhere from one administration office, and then you have the data from the another one. So imagine that you're going to buy your property even online through the e-notary. So you're scheduling your meeting with the notary online, and then you don't need to provide them, for example, extract from the commercial register or your own information, whether if you are married or not. Why? Because the notary has access to everything, and then you can just connect it and has it in one place. And what is super cool about that is that these are your data. These are your private data as well. And you have whole access to the history. So you know exactly who went through your data. I mean, you know exactly that this person in that office were reviewing, for example, your company data, or that person from that office was checking your marital status or your place of living. This is, you know, that's the smooth difference. I mean, Malta is. I heard that Malta is ranked among one of the most advanced states. But come on, what for if you are not able to use it as a user, as a person who lives there? I mean, you know, I give you a simple example. To transfer, we spoke about the transferring the ownership of the company in Estonia. Then, in one of the most advanced countries, I mean, as was stated, Malta, to do that, you need to have an opinion of your auditor. So it's not that simple anymore.
But yeah, the e-notary was actually, it was a project that was implemented during the COVID time, actually, and that's actually the biggest new thing that we have, and this is like super convenient thing. You can be in like any part of the world and be in the notary appointment, and usually there is I have like signed I have like an e-notary appointments basically few every month, and sometimes we're signing deals. There is like 10 people, you know, on the call, and they're like each on different side of the world, and each is signing the document, you know, like being like physical in the notary office, but actually being like in a different location.
And cost setting up and operating in Estonia versus, you mentioned Malta or UK or Ireland. Tell us a bit about that. And not just, of course, the original cost, but the legal costs, the lawyer costs. You're a lawyer, but tell us a bit about that, because that's often the hidden costs in some other jurisdictions.
Well, if you have a simple administration, if you have a simple tax system, if your law is simple, then how you can compare the costs? I mean, in Estonia, you won't find the newspapers like in Poland, Dziennik, Gazeta Prawna, with yellow pages. You will not find their articles explaining the details of the tax system. Why? Because you don't need it. I mean, so if you ask me about the costs are similar pretty much all over the world. If we spoke about the bookkeeping hourly fee or lawyer hourly fee, but then the scope of the work, the amount of the work which should be done, it's relatively lower, I believe. And the other costs which are related to the to running the company in Estonia or in other places. If you compare even to Poland, I mean, it's also lower, because those are the costs. I'll give you a simple example. You will need to provide to your bank somewhere in the world or to your investor corporate documents with the apostille. And to get it in Poland, then you have to go through the notary, from the notary to the court, which will certify the seal. From the seal, you take those documents to the Ministry of Foreign Affairs, and then the Ministry of Foreign Affairs stamp the apostille that this document is really apostille and it is Polish valid. In Estonia, it looks like that one notary can put the seal with apostille and certify your documents. So it comes to the point where one person is printing, the another office is certifying that. So those are the small differences, which probably in the whole budget of the projects makes huge differences.
And in terms of let's say that's an advantage that you have, Estonia has right now, do you see other countries trying to copy that, and will they catch up?
I think it's happening, right? So, for example, I think Latvia and Lithuania have accepted the digital signature, right? At least in Latvia it's working.
Well, not.
But at least in our case, we have the agreements signed with the digital signatures. In Latvia, at least, I've seen that.
They do accept the signature, that's true. But then if you compare, for example, Lithuania, which issued own e-residency, first of all, everything is in Lithuanian. Second, everything works on Windows, probably XP. Yeah. And the third thing is that you need to, it's nightmare.
The simple answer is that we equaled, basically we accepted digital signature on a governmental level back in 2004, and then the e-tax board was published in the year 2000. So I mean, all of the countries who are trying to catch up, I mean, it's good thing that they're doing. But I mean, you're competing with somebody who has done it 15, 20 years ago.
Yeah. I think Finland also, we sold the X-Road project, this actually system. They are basically using the same architecture to build up their own this Finnish system based on what was developed in Estonia. So that's, I know, and I see that other countries are definitely moving into this direction, but it's a long process, and if it's a bigger country with bigger, history, it's more complicated to change everything, all those processes. It takes time.
Because it's not only technology; it's actually all the legal part behind it, the integration, the response of the citizens, and that's a lot.
I remember the story of one of the Estonian ambassadors who came here, and his first question was, okay, so where and how can I get my digital signature? And it was like a couple of years ago, and people from the embassy asked him, which one? I was like, the digital signature. Yeah, well, we have like 20 of them. Okay, so pick me the best one. But in fact, what you were gonna to do with that? I don't know, sign the documents, and yeah, but nobody does it. So that was the difference a couple of years ago here, and the situation has not changed that much.
All right, let's wrap up a little bit early. Sergei, I'll let you have the last word on the e-residency, e-Estonia.
Sure. When we talk about these things, usually like publicly like this, it's definitely not to tease anybody or to brag about it. We, being a leader in something always kind of, you have to be a humble leader. then people will actually listen. And like I started my words today, in 2014, the e-residency program was developed. So basically what it means is that at some point we thought that all of these systems are functioning so well that it's going to be wrong to just keep it for ourselves. So what we did is we developed a program which will allow anybody, basically from any person in the world, to become an e-resident of Estonia. And e-residency is basically a digital ID a government-issued digital ID, which gives an access to all of the public services that Estonia has, the e-services, right? So the e-governance. And I mean, if you don't have any specific plan on what to do with this e-residency, then there is a lot of reasons for you to become one. But one big thing, and the major thing, the major benefit of it is, as an e-resident, you can register a company remotely from any part of the world, and you don't need any auditors for that. You don't need pretty much anybody. Just in 15-30 minutes online, the next morning you wake up and you rise and shine and everything is working. And then not only register, but you can also run it remotely. So yeah, coming back to this administrative part, which is super easy. But at the same time, yeah, it's one thing to keep in mind. I know that it's a scale-up event, so there is not enough market in Estonia to scale up really highly. So just keep in mind that there are many benefits that you can get from Estonian jurisdiction, but we definitely don't possess ourselves like this is your destination, this is your beginning, I would say, if you're looking for ways to scale up. So I think we're going to be here, and just find us and talk if you have more questions.
Yeah, great. Sure. Thanks, Doc. Thanks, Sergey. Artur, thanks very much. I assume no questions. If there are, raise your hand. But otherwise, thank you very much. And we have lunchtime, I think, now. Yeah.
Thanks.
Thank you.
Thanks, guys.
Thank you.
Okay, so hopefully nobody's tired by now. We're going to start another round with our great scale-ups. They say that the first way to be successful is just to be there. And the good news is that our first scale-up is already here. So, you know, like, no wonder why he's successful. You have 10 more minutes just to prove that what I said is, you know, it's going to happen. And also, I'm just going to say bow up. It's good with, you have also your branding and your shirt, so I don't even have to take a look at the agenda. So, stage is yours. Guys, some round of applause just to, you know, give some energy.
Thank you. Thank you. Can you hear me? Yes, perfect. Yeah, so we all live in apartments, right? We're not homeless, so we all need buildings. So construction is actually the largest industry in the world. And we focus on digitizing the construction industry. It's the least digitized industry in the world. Even though there's a lot of capital, a lot of technology in it, the actual process of building a house whether it's a museum or an apartment, is actually not digital. So this is one of the biggest opportunity in enterprise software. They call it Contech or PropTech, whatever. We are digitizing construction. And with BauWeb, we started a couple of years ago. We actually won a prize. We started the company in Hungary. We won a prize in Poland as well for the best PropTech product. So what do? Actually, I've never seen such a high rate of interest from clients to any products. Almost all companies, all construction companies, want to buy the following products. So one is document management, so basically managing blueprints. A building like this had probably 10,000 blueprints, each in 5 or 10 different revisions, and it's a chaos how they are distributed and who approved it, who didn't approve it. In the end, people end up building things that they shouldn't build, and then they have to build it down and redo it. So a lot of money wasted with bad document management. The second thing is issue management. So how do you manage all the mistakes, the tasks, and so forth? Then where's your equipment? And the last thing is material. So 60% of any building is material, and there is roughly 1 million types of building materials in a given market. And there's basically no warehousing solution for that. So most builders don't know how much material they have on site, how much they actually have built in, how much they are expected to ship. So to digitize this will change the game in construction. Just one example. So for example, with our solution, when the supplier issues a delivery note, the supplier is integrated to BauWeb, and they put a little QR code on the delivery note. The delivery note in Europe has to be on paper. So they bring a paper with the product, then the guy in the construction can read the QR code, and immediately all those product names, which are actually very particular, go to the relevant warehouse system of that project. So they can manage their supplies, they can manage their materials digitally with this so-called intelligent delivery note. We've been on the market in Poland for 2.5 years. We have now, and Hungary, and we have now more than 130 paying customers and roughly 600 free customers. So the subcontractors in the ecosystem actually using the product for free. So we managed to work with some of the largest brands. If you're not familiar with construction, these are actually some of the largest brands in this market. And on the very bottom, I will read it to you. So Europe's number 2, Hochtief, which is present in Poland, is a client. Vinci from France, that's Europe number 3. And Europe number 4 is Bouygues from France. Their Polish branches are our clients. So it seems that there is a real need for this product, and we want to scale further. And yeah, our revenues, I was not allowed to share exact details, but the growth you can see. And you can see that, yeah, Hungary, Poland, we started a little bit later, so still we have more business in Hungary. Roughly, we are at 1 million euro ARR, and we have tripled last year, and hopefully we're going to repeat that this year. We have some beautiful quotes from some customers. So we believe we can triple our MRR. In the last year, we tripled it. This year, we hopefully triple it, and hopefully next year as well. We have a mixed team of Polish and Hungarian former enterprise sales guys or construction people. So, you know, we want to bring people from construction and as well as from enterprise software. So I want to leave you with this. Yeah, maybe this is the, yeah. Let's leave that for discussions. Any questions or any comments? You're going to ask questions or yes? Come on, join me. I'm so alone here. Come on. Here's a mic. Mic for you.
Yes, so first of all, Adam, thank you very much for the presentation.
Yes.
Can you tell us something more maybe about the competition? Because I really missed it in the slides, and this market is getting pretty crowded, especially that you're targeting just 2 countries. How does it look like on a broadened scale, and what are your really target market? Is it only the CEE or those 2 countries, or maybe broaden Europe?
Okay, so short term, we want to focus on Central Europe. And why? Because we think that Central Europe is underserved. Central European construction companies are way much less developed than Western European ones in terms of digitization. so they don't have a backend system. Our Western European competitors assume that you're going to have a backend system, basically an SAP or something. And almost nobody in Central Europe has that, so we need to build more functionalities. So it's sort of a regional play for the next couple of years, and then we want to move to Western Europe. We want to reach between 5 and 10 million ARR, and then move to Western Europe. Competitors. I've been in digital, in enterprise software for 25 years. I've never seen a market with such a few amount of competitors. If you talk precisely on construction process automation or digitization, we count maybe 3 or 4 players, and the penetration of the product is maybe 5% or 10%. So it's not really about competition. In fact, we don't mind competition because everybody's just teaching the clients to use a system. But basically, we have 2 Polish startups that are competitors, and we have a large German player that is now going global, so they're probably not going to focus so much on Poland. And we have another German player that has some presence. So basically, 4 or 5 players. And again, this will be one of the largest enterprise software markets.
And how about the market segment, either with the geography or the customer segment?
Yeah, so the reason why construction is not digitized is because it's segmented like crazy. So you have developer, well, there are many reasons. One reason is that it's segmented. So you have the developer, you have the investor, you have the developer, you have the quality inspector, you have the general contractor, you have the subcontractor, you have the subcontractor, and then you have the material supplier. So all these players, and for each material category, you have different suppliers. And these players only come together for maybe 6 months. I mean, maybe a project is 1.5 years, but they only come together for 6 months or maybe 8 months. So there's no way to integrate, right? Plus, the market is not concentrated at all. So the largest player here in Poland maybe has, the largest developer maybe has less than 5%. I think he may be even 2 or 3% of the market. And anyone can start a general contractor company, right? So the largest general construction company, I don't think has 1% of the market. So we really need different approach than, let's say, in the car manufacturing, right? In the car manufacturing, all the players integrate to each other, right? They have long-term contracts. Bosch works with Mercedes for decades, right? And they tender the product that they're going to ship 10 years from now. Here they tender the product that you need to ship next week. And they can only work together for 6 months. So you need to have different approach. So the SAPs and the Microsofts will not cut it at this point.
I want to touch something that it was really funny for me to see a chart with no numbers. So yes. This is a new, or we rarely see that thing. So
innovative.
Innovative, because everybody wants to see a hockey stick, like growing like crazy, but what's the real numbers?
Yeah.
I will not ask you about the numbers because you said that you don't want to.
I can tell you why there is no number. In fact, yesterday there was numbers.
Okay.
And we have a due diligence right now going on.
Okay.
And I said like, okay, I'm not gonna mess with that. But I can tell you we are around 1 million ARR.
Okay. That's like, because this is also in the mentoring part, like.
Of course.
And can you speak a little bit more on the business model side? How you actually, because you said 500 users are freemium or using it for free and 100 paying. So what's the percentage and from what you actually make the revenue?
Okay, so first of all, it's classic, software as a service, right? So monthly fee with usually annual contracts, right? People can start with pay as you go, so they don't need to commit for a year. But then once they commit, they get a discount. So basically, it's worth to commit for, let's say, 12 months contract. But it's a classic software as a service. Now, don't misunderstand. The free users are not there because we have a freemium model where people will upgrade. No, those free will stay free forever. So basically, in order to digitize a whole project, you need to digitize the developer, the general contractor, the subcontractor, the subcontractor. Now, these subcontractors, you will never get money from, okay? They don't even pay their T-Mobile bill, okay? So they will not pay for software. At least that's not going to be our business, right? So for them, we give it for free. We charge the general contractor and the developer and the quality inspector. So the reason why construction is not digitized, again, is because so many players have to be in one common data environment for a short period of time, and then change to another project and another project.
Well, you're creating infrastructure for the development world, which is hard, and maybe that's why there is so little digitalization in this space.
Exactly. However, on the other hand, labor costs are skyrocketing, and material costs are skyrocketing. So companies 10 years ago probably said, well, I don't need to digitize, I'm just going to hire 5 more people, who cares? Now those 5 more people are in London, right? You cannot hire them, and they cost 3 times as much. So they are very much looking for the solutions. So this is happening now. Plus what we see is that the labor is actually also looking for companies that can provide them, tablets, right? So once you work with the tablet on your construction as a site manager, they cannot hire you if they tell you, oh, by the way, and you need to go back to paper, right? So, yeah, but the labor market is also driving that, and definitely the material market. I mean, the prices are really going up. Energy is going up, so.
I'm also really curious what you said about the segmentation of the market, because recently I had the case in maybe a little bit different industry coming to the supply chain traceability and visibility, and you said that in your industry it's also taking time to connect all of those players to the solution. So how long the implementation really takes in order to be a value for a client?
That's the key, right? So what we do is we have such a flexible system where on many projects, only, let's say, the general contractor is digitized, right? He buys the solution, he doesn't wait for the developer, then he doesn't use maybe the parts of the document management that would involve the architects, right? He does his own thing, issue management, equipment management, and he invites for free all his subcontractors. On some other project, the developer starts the project, and then the whole planning and design phase already has digital document management, reviewing the new revisions and so forth. And then they can also switch back and forth, right? So you will never digitize a project if you say, I'm only going to digitize it once everybody's on board, everybody is trained. Another example, for every player, we have 2 alternatives. One, he's part of the system, then he gets all the information on his mobile or web or whatever, or Microsoft OneDrive. Or he's not on the system, then he gets the same information via emails, right? So you don't need to wait until everybody is trained, everybody is on board. Because once you have a construction, you don't have time to wait. So we actually set up a project in a week, but then we go deeper and deeper and deeper. So one project might start with, let's say, €300 monthly fee. The same project will pay €600, plus there will be another company paying for the same project, like the developer or other companies. So it's a land and expand. You need to be able to start. On some projects, only the quality inspector uses it. So you have to have, and then once they all start using it, they are, of course, reaping more benefits.
Do we still have time?
Yeah.
Okay.
So you said you're in due diligence. Does that mean that you don't have an ask towards the audience or the investors?
It's an early stage due diligence, a pre-due diligence. Yeah, we are raising right now 5 million. We are trying to raise 5 million, and we are in discussions with several VCs. And our goal is to first become #1 in Central Europe. So basically in 4 markets we have in mind, and after that to go to Western Europe. And that's our business plan.
Thank you very much for the answer.
Thank you.
Thank you very much.
For your questions.
Yeah.
Thank you very much. So, who is ready for the next scale up? We're going to have a presentation made by Frisbo. So please welcome him on stage, and some energy, please. So you have 10 minutes, starting now.
Hello, my name is Bogdan, and I'm founder of Frisbo, an e-commerce fulfillment business. Just to give a short definition, fulfillment is that service which is typically a logistics service for e-commerce, which means the storage of the goods, pick and pack, and ship to the end customer for the e-commerce store. Now, the problem is 90% of the online stores in EU do not sell cross-border. Even though it's EU, it's a free market, everybody could do it, should do it maybe, but they choose not to, or they cannot do it. Now, besides the marketing problems or all kinds of localization problems, there is a big logistics problem. And the problem of logistics is that, first, it's too expensive. They simply shipping, I don't know, let's take the simple example, shipping from Poland to Germany is much more expensive than shipping from Germany to Germany, right? And then you cannot really deliver next day cross-border unless it's really the neighboring country and you're really in a position to be able to deliver next day to the neighboring country. And the third problem is you don't really have a return address for every country you're in. You cannot even list, for instance, on Amazon in Germany if you don't have a return address, and you cannot have return addresses everywhere. So this is kind of a showstopper for e-commerce businesses in Europe to be able to actually do competitive cross-border selling. And those who do it actually do it quite poorly because they either fulfill from their own country and they have all those problems that we listed, or they simply have to go from country to country, find local fulfillers, find local couriers, do different contracts, different integrations, different assessments, and then in the end have a few fulfillers that work independently. They cannot sync stock among them, they cannot optimize in any way, and just go along with a high cost forward. So what we thought as a solution and what we actually did is we simply connected the local fulfillers into one fulfillment network that we then offered as a plug-and-play service to every online shop. So this way, they would have access to any warehouse, anywhere, through one contract and one integration, and then be able to fulfill anywhere. So how do we do that? Well, it's simple. We just offer one dashboard where they see everything, fast delivery, because of course, if you have your stock localized as close to the end customers as possible, then you can do a fast delivery at local cost. They pay as they go. It's normal. It's a pay-as-you-go service. It's pretty much plug and play, of course, depending to every e-commerce platform and so on, but most of them allow it to be very easy to set up. The stocks are always in sync. That's important with any e-commerce channels. Just imagine that you sell on multiple marketplaces and maybe multiple e-commerce platforms. So it's easy to have everything synced, but most importantly, everything optimized as stock. Just to give you an example, you might stock in Slovakia and reach 3 countries with next day delivery, stock in Romania, reach another 3 countries with next day delivery, Benelux for other 3 countries, and so on. So we just do order processing and inventory management, which is the normal thing that a fulfiller would do. The big difference is that we do not own or we do not operate ourselves any warehouse. We do it by simply building a network of these warehouses. And so far, we started in Romania, we expanded in the neighboring countries, and by the end of this year, we will basically cover the entire Europe. It's not even on the map yet, because just last week, we signed for a few warehouses in the UK. By the end of the year, we'll have the Baltic countries as well in the network. Why is it easy to expand the fulfillment network? Well, basically because the integration is very fast, and here is one of the key elements to expansion, because we do not build our own warehouse management system and give it to the warehouses. We go in and integrate their existing warehouse management system, and that will give zero disruption to their daily activity. For them, it's no bother to accommodate Frisbo, because they do what they usually do. And of course, there are 0 costs for the warehouse to do that. So then, how do we make money? And the business model is simple. It's a shared revenue model where we take 35% of the entire fulfillment process, and then we also take about 10% from deliveries with local couriers, depending on the contracts we get on the ground. Of course, the more volumes we get and the more time we spend on the market, we get better margins. So that's a more variable in the model at this point. And so basically, we managed to get together quite a number of clients that are using our services. More exactly, over 200 clients use our services at this point, which gave us 2 million revenue in the last 12 months. Ideally, the growth, we are more used to over 100% growth, but as you figured out by now, this is not recurring revenue. It's very much dependent on the operations, and the e-commerce market has been, in the last period, suffering some supply chain problems that, of course, we'll also see. So most of our growth is mostly extensive and not intensive, as it happens this year as well. But still, the market is very big. So only CEE has a large attainable market, but the EU as a whole has it even larger. And it's not even worth to put the worldwide market because the numbers get really high. It doesn't really make sense to show so high numbers at this point. Why we believe we can get these markets? Because the team is really strong. Each of us have really strong experience in the industry, in the field, and we've been through e-commerce problems and logistics problems for several years, so we all understand in depth the industry. Thank you very much. I guess we start with the competition question.
Thank you very much for your pitch. Igor, do you want to go first now?
Yeah, so Bogdan, congratulations. The numbers speak for itself. 2 million in revenue, it's still something significant. So if I would be seeing this in a very early stage company, I will be questioning the model, but it works. So can you tell me, like, who is the specific type of user that you actually pays for this? You mentioned different, like even delivery couriers, you mentioned also warehouses. Do you have like e-commerce stores? Like, can you break down the clients that you have?
Yes. So basically, you can look at us like a marketplace. On one side, we have the couriers and the warehouses. Those are the easy ones to get. It's not even a bother for us. And the challenge is to get the e-commerce businesses. So those are the clients we are talking about. Now, the typical e-commerce business that would choose Frisbo is not really the one that would work locally and choose a local fulfiller who would maybe give him a better price, and they are there, they know each other and so on, but are the ones who have dreams of expansion outside. To give you just one example, which I know I'm allowed to give, one of our Polish clients actually, who's running Xiaomi official stores in other countries, for instance in Romania and Hungary, chose us especially for this, because they can expand with us in every country without the need of doing another integration, no search, nothing. And setting up a fulfillment service, it's quite hard in terms of integration, moving stock, aligning everything. So once you do the effort, you don't really do it for every country, every time.
And just go with one. I was looking at the map. You said next will be the Baltics. I'm coming from another untapped region, which is the Balkans. So what would be for you the solution? Is that something interesting for you to expand?
Well, yes. If you mean Greece and the south, even Turkey, actually quite last week I have been traveling to Istanbul, had really nice meetings, and it seems like the Balkans are really open to this type of solution. Why? One of the things is, like every country, there is a limit to growth inside, even for, just think, large marketplaces. In all these regions, there is typically one large marketplace that cannot grow anymore because they kind of satisfied the local market. So they need outside sellers. And Frisbo seems like a solution through which outside sellers can easily get into their country. And on the other hand, the local ones, they're very interested into getting outside because they reach their own limit as well. So it seems like this type of service seems to be even more attractive as we get outside of the EU, because it looks like an entrance to the EU, which is very easy for the other markets.
This was what I wanted to say, that maybe you should go in that untapped markets because they will look at as a gateway to European Union.
It's exactly like that, yes.
Yeah, if you let me, I would like to challenge your idea a little bit, because I see that you have a good ambition in terms of what you would like to achieve with this company and with this product. At the same time, I feel that you are still before the biggest scale-up challenge that the company at this stage usually has. So I wonder, because the underlying technology, of course, I'm not aware of the algorithm, but I assume this is not something really, really high level and complicated. The same, I'm not aware of how good is your marketing. So I would assume that your main advantage would be in the operational excellence and execution. So I wonder, how would you make sure that in the future, if you would like to grow the company to the European level, you make sure that there is enough of customer stickiness and you can really win this market when new competitors will be for sure approaching you?
Yes. One thing which is bad and good at the same time, it's not an easy setup to do in every country. So it's kind of, that's why there are very few competitors. We compete with every local fulfiller, but we also partner up with them. But when it comes to a network of fulfillment, there are very few that do this, and there are only local initiatives going to 2 or 3 countries mostly. So at this point, there is no startup that managed to bring so many countries together. And it's not the technology, it's not the know-how, it's simply, it's really hard to get into every country, find everything, sign everything, and do it. The other thing is, what we typically do when we go into a country, we are trying to hack the entrance a bit. So, and we have a few ways. One, we bring existing portfolio of clients into those countries, so we go with them. We don't start from nothing and just try to, you know, fish some local sellers. The other, we are trying to identify a local e-commerce champion, person, influencer, which we usually try to recruit in the company and, you know, to become part of the team, and then, you know, not start from nothing and building credibility and so on. And our marketing is actually not bad. It's quite...
I will check it later.
Yeah. I mean, even in Poland, I think the first time we came in, we had a very nice article in Puls Biznesu, in the print and everything. So we are trying to, from the marketing side, we are really trying to have a significant presence in every country we go to. And the biggest challenge in expanding with this model is actually the operations quality, because we do not really control what's happening there at the, you know, at the pick and packing. So we have to choose the best fulfillers in every country. And that's why we went with this model of integrating their VMS, because best fulfillers already invested hundreds of thousands, if not even millions, in their own VMS. So they would not accommodate some startup, you know, VMS wannabe. And this kind of ensures us a good quality, because we get to work with the best in every country.
So what are the next steps that you're planning for the company, like fundraising, going into new markets or something else?
We realize that, you know, this will be a race pretty soon once all the others figure out the way of scaling. And we have to, now that we proved the model and we proved we could get out of Romania, we proved we have clients who are using multiple warehouses and so on, what we need to do is scale as fast as possible. So yes, the plan is to raise around this year. Now, we are at the beginning of it, so it's something between 5 and 10 million. We are looking at different scenarios. Of course, 10 million is more aggressive. 5 million is more, you know, natural for where we are. But yes, this is the next step.
That was also my question. What would be the next step? But can you just clear, you mentioned something about the 2 million that are not recurring revenues. What you were meaning by that? You don't have as an MRR, or?
It's hard to call it, I would like to call it an MRR, but it's hard because it's operations-based. So
on volume.
It's on volume. So every store pays per processed order. Now, if the market goes down, and the e-commerce market now went down with the war and the economic situation, actually the e-commerce market, even though it's not in the news yet, it did go down. We can feel it in the volumes. We do compensate by new countries, new customers, and so on, but we see the volume per client, per seller. It went down now. It will go up when the market recovers, which is also good. But that's why, you know, I would love to call it ARR, but it really isn't. So let's say 80% is
more
ARR. More
markets means more revenue, more volume.
Exactly. On the same side, this also has a good side, because if the market goes up, then the volume per client goes up. And many times there are markets, especially in Eastern Europe, that go up 20, 30% just because they go up, just because they take from classical retail. And then we go up because we simply go up with our clients. So It's on both sides.
What do you predict would be the cost for entering Turkish market, because it's a vast market? Like, what would be the cost per market acquisition?
Usually our cost per market acquisition overall in all markets, we spend about 3,000 euros in total to acquire a client. This means marketing and sales all together. Now, the customer lifetime value is around 12,000 euros. So that's kind of the ratio. It's 4 times the...
And how long does it take you to enter a new market in months?
It doesn't take us long in terms of being there. We usually go in, sign warehouses, start integrations, and it's all set up in 1 month. It's a question of how much time it takes us to be relevant in that market. And that usually is, it's like a 6 months process before we get first clients in that really start rolling, and then we are able to recruit from that market and move to other markets and so on.
Just as a suggestion, I would love to see a case study presented of how a client really leverages your technology of accessing different markets and through numbers. So that would be for some next presentation.
For sure, we have to do that. Yes. Thank you.
Thank you very much. If our judges are going to stay on the stage, maybe we can just... You don't want to be on stage? We'd like to just tap into your knowledge a bit more.
You want to ask us something on the stage?
Of course. I mean, if anybody knows something more, then please. Thank you very much. First, I just wanted to have your opinion, generally speaking, about this scale-ups, and then we'll just go a bit more detail.
I said it to the last startup. Some startups seem that they're working in a space that it's new. So is there market for and like potential? Yeah, if there is actually traction, we go after it, and we just see of all these questions of how easy to access new and what's the trajectory, so that as an investor you can be sure that there is a return of investment at some point. And we didn't touch on the last investor about potential exits. So that was one of the questions I didn't ask, but hopefully we can talk later.
I think that maybe one thing that would be very important to mention, especially when it comes to such kind of events as Wolf Summit, you have an opportunity to ask about something. And what I was really missing is like the last slide, that we are here because we are, I don't know, entering the Polish market, looking for investor, anything like that. And I feel like it's very often just missing an opportunity, because then maybe there is somebody in the audience that can then come to you and discuss this matter that you're looking for. And I think it's always good to add this slide at the end.
I mean, knowing the maturity level of the startups in this region, even the fact that we have a scale-ups, for me, is very interesting.
Yeah, that's a really good point, because usually when it comes to events in this region, as you mentioned, we very often see very seed startups, even idea stage companies. And here, 1 to 2 million revenue, it's really like very good to finally see that those companies are emerging.
I mean, like it's like you have a 1-year-old kid, and then somebody says that my son, 1-year-old, is running faster than yours. And I was like, your 1-year-old son runs. It's like, because they don't even walk, right? So knowing the maturity level of the startups in this region, even the fact that they are here, for me, it's amazing. And let's just say, hopefully, with your guidance and mentoring and let's just say sharing your ideas, they're going to be even better. I just wanted to, let's just say, get it a bit more theoretical and just give some more feedback, because if other scale-ups really want to give their ideas and share their opinion, it's really a matter of what they really want to have. Maybe also touch a little bit more on the exit part and a little bit more on the numbers and what you really want. So that would be a very good point to also try to go with the last scale-up for this batch. And then after that, hopefully, we're just going to have a bit of a change of scenery. Thank you very much. So guys, last but not the least, the guys who know everything about sales are going to come here and talk about their scale-up. So can we just have a round of applause again for them, please?
Hello, guys. My name is Dariusz Nawojczyk. I'm the CMO of Facebook, and today I'm going to tell you about who we are and what we do in our company. But let's start from the basic fact that we discovered as the company. So we discovered this very chart, And this chart represents the typical structure of the sales team. So when you look at every sales team, whether you work for a startup and try to build a sales team, or you work in a corporate and you already have a team of like 100 sales representatives, usually at the very end of the day, you can see that the structure of performance in this team is like that. So about 5% of people in your team are really talented one, about 25% are the solid one, and the most of the people, well, they are so-called the cyclical salespersons. So generally, sometimes they sell, but usually they do not. And we did the thorough research because we used to be a software house working with really big customers, and we asked them generally what happened that the structure is so typical for every sales team. And usually the answers were like, well, we mostly are basing on the people natural skills. So we really believe that natural skills like talking, like gestures, like your overall presentations do the sales, right? And the second thing was that managers, they do not have the control over the sales meeting. What they do control usually is the pipeline because they have the CRM system, but they cannot be at every sales pitch, every sales meeting, and they do not know what actually happens then. And the third very important factor is that we discovered that only a little bit over 30% of the sales representative time is really spent on building the real relation with the customer. So it's spent on the real process of selling. And there was a famous idea of how to cope with this issue. And there was this guy called Jordan Belfort. You may know him as a Wolf of Wall Street. So he took this very unprofessional and unskilled people just right from the street, and he gave them recipes. And he made of them one of the best-selling machine ever. And we thought, well, recipes are good. Maybe let's combine these recipes with the new technologies. Because when you look at the traditional consultative sales process, usually the new technology is not there. I mean, they still operate with the ball pen and piece of paper. They're trying to explain something on a piece of paper to the customer. Maybe they have the computer with the PDF created by the marketing department, and Excel if they need to calculate something. So we decided to change it, and we built Salesbook. So Salesbook is a platform. It consists of two elements. The first one is the mobile application, which is installed on the iPad, and iPad is for the salesperson. So the sales representative, he can take the iPad with our application and go on the meeting with the customer. And the second part of the platform is the back office application, was the CRM and analytics and so on. And when you look at it, it appears that we cover the whole sales process, like from the very beginning, from meeting with customer up to hard analytical data that you may find in our back office application. And what is really crucial here is that you can even have a hangover while meeting the customer and still having our application and following the process which is embedded in our application, you can be a successful salesperson because we have presentations there, the customer needs analysis there, the CPQ module, so you can generate an offer on-site with the customer. And what is really important, we have also lots of automation. So our app, when you click finish the meeting, our app will send the meeting summary to the customer's email. So if offer was generated, the offer will go automatically to the customer. And what is really important from the side of the manager is that all info about the meeting will go to the back office panel. So in a real time, as a sales manager, you have a full knowledge about what is really happening in your sales team. And of course, if you have like 3 salespeople in your team, maybe it's easy to control them in a different way. However, we have customers that operates with the sales network of like 5,000 sales reps in a field. And then you have hard analytical data about what is really going on like in a real time. And the result is that we change the cyclical guys into the solid ones. So your overall like sales growth is really significant with Salesbook. Usually when we did the when we asked our customers what is the result, they say about something like 53% of increase of sales with our application. And you may also think, well, there is Salesforce, there's Showpad, blah, blah, blah. Of course, there is something like that, but let me underline this very important issue. We believe that we are one and only that covers the whole process, right? Salesforce, it's a great app, but they really do care about your pipeline. You know what you have in your pipeline, what type of customers, what is the quota, and so on. Showpad, of course, he will let you to present your offer to the customer during the meeting. But we are the first application that combines these 2 approaches and makes this process available like from end to end. The business model is quite simple. We just charge our customers per seat. And some of our most important KPIs, we already reached like $1.2 million annual recurring revenue, and last year the growth was 100%. Yeah, and some of customers that we already served, you may find some big names here, like Orange, like Daimler, like BMW, like OVB, one of the biggest insurance company in the world. So these are the guys that we are working with. And we also work with the SMB sector because we have a lots of ready-to-use processes. For example, if you are just starting your business, you can just buy Salesbook and you have already the whole sales process, for example, for insurance, for energy, for automotive, included into application, so you don't have to think too much about how to establish the certain steps of your sales process. And yes, we won some very important prizes, like for example, during the Sales Innovation Expo in London, we became the best sales enablement platform. And what is really crucial, this is one of our most important awards, UiPath, I'm sure you all know this company. It's quite disruptive one at the moment. UiPath gave us the award for the best app that just simply automate the traditional consultative sales process. And the team is like more than 40 people at the moment. We are based in London, Wrocław, Rzeszów, and Warsaw. And what is really important now, yeah, I forgot to put one slide. However, I'm going to tell you about it. We are just closing the seed round at the moment. So most of the money that we wanted to raise during this round is already be raised. There is like $500,000 to be raised to close this round at the moment. And we are spending these funds to expand globally. We are already present in some foreign markets like Germany, Singapore, and yeah. But this is not something that we call like the well-established streamlined revenue. And now we are using this seed money to expand globally, and we made some first steps. Now we are trying to establish our presence in UK, Australia, and United States. And that would be all. Thank you so much.
Does this? Okay. Thank you very much for your pitch. So I wonder, because you said that in terms of scaling, this is your plan for the coming months, and you already have some clients in Germany and Singapore.
Yes.
I understand Germany. Why Singapore, and what is your plan for the scaling in terms of strategy?
I wouldn't call it like this first customers from Singapore or Germany. I wouldn't call it like a thorough expanding strategy. It's just that we grabbed some customers on the local market, and we were able to like copy this to other branches of their companies. So this is actually what happened. And now finally we have enough money to establish our presence on other markets. So we now do the first steps. And our main idea in terms of acquiring new customers is the inbound marketing. We are pretty good in it. So this is what we do. We are trying to acquiring leads through the marketing channels, and then we have very, very efficient SDRs team, and they are trying to close these deals over the phone, Zoom, and so on.
Okay, and what is the customer typical profile? Because I saw many big brands on the slide. This is your target, or do you also sell to smaller companies?
Yeah, like I told you, we have, to be honest, every our spreadsheet and so on, we have always these two rows, like enterprise and SMBs, because typically we do target both of them. These are two different types of deployment there, because those big brands, they always want to have some personalization. So we need to work a little bit closer with them. We need to spend some more time with them. However, we have also these very like ready-to-use processes. So you may grab Salesbook like out of the box and just use it as like predefined process in your company, and this is pretty awesome for the smaller ones, right? Because when you are a big fish, you probably already have the perfect sales process. So you rather want us to customize our application to your process. However, when you are a little bit smaller, the chance that you know what you do is definitely smaller. So you come to Facebook and you may just grab this process already embedded in the application, right? So this is the great advantage for them, because they might try the ready-to-use process since day one.
This was actually a question of mine, kind of. I will rephrase it, because personally it was very interesting for me. I was doing 15 years ago trainings in sales and service, especially for in the Balkans. But we had a really interesting, like that formula that the others like Brian Tracy and Bedford are applying in some specific areas. Yes. With really like sales representatives with quotas that they need to go on site. So would you say that you need to alter the content, or the content is altered by the companies?
Well, let me put it this way. We tried to establish the process as generic as it's possible, and we think that there are some very important steps every time, like presentation, like customer needs analysis, like the CPQ, like configure price quote, like automation, like agreement signing. So basically, or at the very end of this process, like CRM management and analytics, right? So these are like these 7 steps that we think are generic, and we embedded it in our application. And like I would say, 98 of scenarios do work with it. However, of course, you can alter the content like in a way you like, because we build this application in a way that it's It's a module one, so it's pretty easy for customer itself or for our customer success team to change a module so it's suitable for a certain customer.
Do you integrate with any lead generation application so that, because I understand this is only for managing the sales process, nothing to do with lead generation or bringing actually clients to your...
Yeah, we integrate with lots of tools, and I would say both sides. So you can integrate with like GetResponse or MailChimp or whatever you have like active, I don't know many of the names of these applications. However, we have this open API. So the leads generated by marketing departments are just going into the CRM. They are marked in a specific way. They are being seen on the mobile devices or the iPads of the sales representatives like immediately. Like you can even establish an automation so the meeting is being scheduled like in an automate way. So we do integrate upfront, but you can, for example, sometimes when we go to the biggest companies, they already have their CRMs, right? So we say them, well, because we provide CRM as well, like a part of this process, but when you have your CRM and it would be like impossible for you to get rid of your old CRM because there's like 15 years of history of selling in your present CRM, we can integrate quite easily with your CRM. So we have like integration with Salesforce, Pipedrive, and so on.
It seems like a true painkiller, at least from my point of view.
Yeah.
So you need to present it something. I saw more car manufacturing companies there.
Yeah, we have like
they were just telcos front fencing sales. Do you do like insurance? I don't want to get this in an insurance broker hands to.
I can say like the 5 main verticals that we are serving at the moment is the energy, is the automotive, is the insurance, like telco, and retail.
Thank you very much.
Thank you so much,
Thank you.
guys.
Perfect. Thank you very much. A lot of good feedbacks. I also want to give you a good feedback. Good job. It was a very small feedback. So guys, I hope you're not tired. We need to prepare the stage for the next panel. So we're going to have like 5 minutes-ish break. And then we're going to start like 2-3 minutes before 3 o'clock. So if you guys want to stretch your legs and try to grab maybe some water or coffee, as long as you promise you're going to be back by 5 minutes, then we will see you very soon. Thank you very much.
Hi, good afternoon, everyone. That's it, thank you. My name is Roland Magnai, and I'm founder of Leopoli, a software company, and we make 3D and virtual reality design easy and accessible to the new market trends and demands. And we also contribute to for a more sustainable future, as you will see. Before talking about the market environment and where we operate, I would like to start highlighting 3 things that we are very proud of from last year. First of all, if you guys, any of you know about anything about virtual reality, you must have heard about the platform Steam, because on the Steam platform, that's an app store for VR, we were rated the best design application last year. And the even better news is that we were rated much higher than other players in this field, including startup or even products by companies such as Adobe. The second thing I would like to highlight is that last year we signed an agreement with HP. HP's 3D printing related product called Arise is offering their solution to the US clinics nationwide. And what they do is that they offer an end-to-end solution for personalized medical devices, braces, insoles, and so on. They use 3D scanning and 3D printing technology to make sure that every product is perfectly fitting the patient's body and needs. And for this, we license our software so the doctors can easily change and edit all these kind of medical devices easily. And the third one that I would like to highlight is that we reached over 1 million users in the United States with all the developments we have done in the past years. Now, I would like to show you a short video because this is 3D design, so I would like you to have a little better feeling and understanding what this 3D design really means.
LeoShape enables businesses to digitize, simplify, and automate the production process of custom-fit wearables, implants, and other healthcare products. LeoShape can process 3D body scans and find matching product templates that can be customized automatically or manually. We have made it easy to scan, edit, and produce real-world 3D printable products. With our simple tools and robust features, anyone can edit 3D geometry with high precision. This is why HP uses LeoShape for their orthotic solution called Arise, which enables podiatrists to deliver quality 3D printed custom foot orthotics to their patients. However, if you need more advanced 3D editing options, you can use our professional direct modeling and sculpting tools to create more complex 3D objects.
So you've seen that we have many different interfaces, many different modeling tools. And one of the key things that we have an engine, a 3D software engine, and we can set up any custom solution in no time. Now, what is the market environment we are talking about here? First, I would like to talk about 3D and VR. 3D and VR are named one of the most impactful technologies that will transform, or be very important in the next decade together with robotics, AI, blockchain, or IoT. The good thing is that 3D printing and VR also contribute a lot to reduce the waste we produce and to reduce the ecological footprint. This presentation is not about that, but that's also an important factor. Now, we are focusing, as you will see, the healthcare industry, because the digital healthcare market is also growing by a 2-digit number, and 3D printing and VR is just accelerate this growth, accelerates this growth. And the good news for us is that within this environment, 3D mapping, 3D visualization, 3D modeling is expected to grow the same way, or some say that it is expected to grow even with a greater rate. And the reason for that is that we need tools, we need new tools, because what are the design tools that people will use? What are the tools that doctors will be able to personalize all these products in the futures? The ones that we have been using in the past decade or two? Not really. They are really good solutions. They are for professionals. But the doctors will not be able to use any of these. None of these have any VR extension. These were made for something different for professional users. So we are absolutely focusing, not even competing with these guys, but we are focusing on the newcomers, on the new demand. And we have come up with a unique technology which has 3 main pillars. The first one is we made sure that it is easy to use by anyone, which means that this software can be used by any of you, the doctors, technicians, students, designers. So we can make sure that it is accessible And because today, using all these VR and 3D technologies, the big bottleneck is that people are not skilled. Companies can't really use these technologies. A second thing is that we have a modular basis. And we can, if you are making a prosthetics, an insole, or a sculpture, or a game character, you are using very similar tools, but on your interface, you don't need the same tools. So we make it easy and custom specific to the special use case. And third, and absolutely not least, is that our solution is the only one which is cross-platform. In most cases, you don't need VR or AR to create custom products. However, for example, for making prosthetics perfectly fitting the limbs, clinics in the US already use our solution in VR. We didn't even know about that. Our solution was not designed for that, but in some cases, AR, VR has huge added value to speed up the production process. So we are focusing pretty much on two areas currently, the healthcare, and within healthcare, we are focusing on the orthopedic industry. And we also have a general purpose 3D and VR CAD designer focus area. We could target basically any industry because 3D and VR, I mean, it is used everywhere. But we take a step-by-step approach, and once we establish a presence here, then we can move next year and a year after to other industries. For the healthcare industry, we are licensing our technology, sometimes directly to the end users, even clinics or studios, and or we also are licensing to, we call them value-added resellers, such as HP and other manufacturers who are sub-licensing this technology to the end users. We also are planning to build our general purpose CAD software based on a subscription basis directly to the end users. The prices vary. This is a super new and innovative market. Some clients prefer revenue share, others prefer usage-based licensing fee. So we have our own idea, but we have to be flexible and agile to meet the demands. In terms of revenue, I think we are in a good stage because in the past 2 years, we are doubling our revenue from year to year. And maybe what's even more important that by today, we already signed more than 50% of our yearly revenue plan. And our pipeline currently suggests that we're going to exceed the plans in terms of revenue. We also could sign some great strategic partnerships with clients. Many of them, most of them are in the US, but also we now have some clients here in Europe as well. Besides our technology and the client and revenue base, the third biggest pillar of our company, or I would call it an asset, is our team. We are today close to 30 people, and we have a great mixture of young, talented people and experienced people, including engineers and designers, and we've been working together for some time. What I would like probably to highlight is that we have
30 seconds?
Excuse me?
30 seconds.
1 minute, okay?
We can negotiate.
Okay. So we have 2 offices, one in San Mateo in California because our clients are there, and our engineering team is out of Hungary. Most of our people are in Hungary, and we have a very clear cap table, including 1 US and 1 Hungarian investor, a few angels in one group, and the founders. I'm here today because we are later this year, we are organizing around about $3 million investment. We have some commitment already, and we are in discussion with other investors. Thank you so much. It wasn't even a minute extra. Thank you.
Thank you very much. I hope you're always good with negotiation that much. So.
I think I started late. I doubt that it was over.
It's 13. I gave you
Okay,
11 minutes. So.
So, okay, what are we supposed to do? Ask question, critics, what? Anything?
It's more of a feedback,
You can
right?
say everything. Okay, all right, be prepared then. All right, I'll start then. I'm not sure I like your pitch, I'm sorry to say. I hate the structure of it. I think it's confusing the hell out of me. You need to know I'm an investor, I'm not so smart. I'm here, otherwise I would be sailing somewhere. And you need to explain things to me in a way I can understand it. And I really struggle to know after 10 minutes what you really do. Are you you're a CAD tool? You're doing 3D printing? You're doing VR? You're talking to doctors? I mean, I'm super confused. So maybe it's just me, the audience maybe understood things. So I think you should try to explain what you do in more simple terms. You're an expert for sure in what you do, and that's very often the case in what we see. I have a couple of questions. You seem to be targeting the long tail by going to doctors in your offer, which I found quite interesting. You price your long-term product at $99 a year. For doctors, and you target the clinics with $100,000. Seems to be a very big gap in those two, and I struggle to understand why. So I'd like to understand, because I kind of, if I understood what you do, I like your long tail approach. I think it could be a way to scale your business, but I'm not sure how you do this with $99.
I guess I answer first, and then, or it depends on you. Okay, so I start with your second question. Yeah, so we are targeting. We have now two target groups. One is the healthcare industry, and for them, we provide an end-to-end solution together with partners like HP and others. And these are bigger numbers, in between $10,000 and $100,000 per year, and they have all sorts of features available to them. So the custom specific things that are used in the industry are sold to these guys. And we are selling these through value-added resellers such as HP and others. And we don't really go yet directly to the clinics because we are working with teams who already have access to the market. The other end is a more general 3D CAD software, which is not custom made to that healthcare professional. It is just available for anyone, and we didn't plan to do with it, anything with it. But last year was crazy because people started to buy and use it for all sorts of purposes, mainly in the healthcare, doctors, but also designers. And we are figuring out how to do that, how to do both. We had so many new clients and new end users that we didn't even anticipate last year. So we're trying to go to the healthcare industry with specific white label type of custom solutions and the general end users.
Thanks.
Okay, for me, maybe it was a little bit easier because we come from the same country, so I had a little bit more background on the company.
You're cheating, then.
Yeah, maybe a little bit helped. So that part was clear for me, but the other part which was not that clear is in terms of your business model. And Julian is also asked a little bit about that aspect, that who are you selling the product? It wasn't clear for me from this, like who is your ideal customer? You do it like go through these companies, as you mentioned, your partners, or you do direct sales to doctors? That partly you answered so far, but
we are currently focusing, partnering up with we call them, as I said, value-added resellers who have a reach to all these clients. And HP is a good example, but there are other that I would not like to talk to, but one of the logos was on the slide, but we are partnering with them who have already a reach. So we license our technology to these guys, and they are sub-license or sell it to others, to the end user market, like clinics and stuff like that. However, at the same time, it is very new what we are talking about, like going digital in terms of these personalized products. It's new. It was not like 3 years ago, the technology just was not there. It's super new. So clinics also and doctors and studios are approaching us. And we now are building also a direct sales channel to that. However, it seems that it is more rational. It makes more sense to go through these value-added reseller partnerships, but at the same time, it's good for us to be in direct touch with all these clients because we can gain a lot of knowledge.
Are you prepared to kill one of those two revenue streams to focus on one?
We are planning to, or if we are ready to? We are ready to, absolutely.
Are
yes.
you prepared
in
to?
no time, yes.
And sometimes the market pulls you into a direction,
so
and you just have to...
Yeah, so what I mentioned, absolutely yes. 3 years ago, we started with development fees for all these because we didn't have the product. Then we changed the licensing. We had an idea what to license. The market said that, no, this is not how we would like to pay. Then we changed that. So we have to adjust. This is like super new. And together with all these big clients, including 3D System and other manufacturers, we are together actually figuring out what is the best, even with the clients. Some of them would like to pay one upfront just to make sure to own it. And then we are still in the progress. This is huge. This is happening, but like with crazy speed, but the business models are not yet figured out for this industry. We are trying to get these models from other industries, but it's still not final. It's like a completely new thing. And that's why I'm pretty much focusing on people who are in this 3D printing and VR industry because they kind of understand this more and have more flexibility and give us patience that I'm not, maybe next year we're going to have a different model. Not next year, but in 2 years.
Maybe I should start another line of negotiation because the time is over. Thank you very much.
Thank you.
Thank you, guys.
Thank you.
I just would like to basically say something about, the state of criticism. Saying which Churchill said, criticism may not be agreeable, but is necessary. It fulfills the same function as a pain in the human body, and it calls attention to unhealthy state of things. I just felt that was interesting. So I hope that you can try to take advantage of that and then try to see, let's just say, what will be the next step. And I like the overall idea very much. So with that, I would like to introduce the next startup that, again, I really hope I will just pronounce the name properly, but it's Pixevia? Yes? Perfect. So you have 10 minutes.
Hello, Mindaugas Eglinskas, CEO of Pixevia. Pixevia is a retail automation company with a main product, fully automated store. It will be easier to show a store when you simply walk in, type a card, walk in, grab things, make a coffee, and system automatically does everything for you. You don't have to go to self-checkout, you don't have to go to any checkout, you don't have to download anything, just leave, that's it. You type a card, grab things, you go, that's it. And this type of technology is considered as a key technology for retail. As an autopilot for car industry, it's like a gold standard for retail and considered this as a main retail players and also by Amazon. And we are super proud that we were first in Europe to introduce such technology. Amazon was first in the US in 2018. We were first in Europe in 2018 already. Later, other key players like Tesco, Żabka, also Amazon launched the stores. But we are proud of our achievements. And now in 2021 to 2022, we're deploying this technology across main retail players in Europe. Shortly about retail, why it's important for us. one of the biggest world markets still left unautomated. Even we take just small amount, small part of the retail, grocery stores only, Europe only, 10% of this market, 4% of their revenue as we target as our software fee, it will be about 1 billion euros in revenue. And retail is plagued with problems. Number one problems, no one wants to work in retail anymore. We have problems with customer experience. We have profitability issues because almost all retail players play with price, not with customer experience. And we have new type of players like super fast hyper convenience. It makes no sense to wait 5 or 10 minutes in queue when you can have your item delivered in 10 or 20 minutes. And we believe that completely new type of technology and completely new type of solution is required to solve these problems. Technology powered by AI, and in our case, we have 3 components, main components to deploy such technology: ceiling-mounted cameras, simple security cameras, any integration company can mount and connect. Shelf sensors, simple sensors which can be put on top of any shelf. Some computing power with our algorithms, as we use in data centers or on premises, and our technology currently supports multiple customers, hundreds of sales areas, 100 square meters of sales areas. Customer can enter with any payment card. Customer doesn't have to download anything. You can just tap card and enter. If he is a regular customer, he can use iPhone or Android type. Here, like a small demonstration, how it looks like inside AI. Technically, we construct 3D space with different items, and we construct 3D moving skeletons. And in such a way, we can able to detect each item which was taken from the shelf or put back. And also, we have a lot of information about customer behavior, and also a lot of information how staff member behaves or how they effective in the stores. And we are doing this in a fully GDPR compatible way. We don't track any faces. We don't track any special features. And this technology is already working, highly accurate, highly reliable. These numbers are from our last year's operation, 99% availability, 98% accuracy, and 10,000 of transactions are already processed through our system. Going a little bit more into details, it's not only about self-checkout or just checkout. It's more complex systems. When we have, yes, most important thing, super fast checkout, but also 24/7 operation, high on-the-shelf availability, COVID safety for our customer. For management, we have, we need less staff. It's important currently for all businesses. Also, we have precise and real-time stock information. We can analyze customer behavior. We can do demand forecasting way better. Theft protection, you monitor by dozens of cameras at the same time. You better find another store to steal anything. And enormous media and press attention. And the third part, I will not focus right now, it's possible to use the same technology for super fast delivery to make deliveries even more efficient and faster. So it's really powerful system, but at the end of the day, it's not our roadmap. It's already the things we already have in our system. What is important for the retailer? To summarize everything in 2 numbers, we can have 20% more increased revenue, mainly because of 3 things. You work longer, you have extra night shift during the night. You don't need space for your regular checkout. You save about 10% of your sales area, and you can use this area to generate more revenue. And just customers love you because they can buy everything in 45 seconds. At the same time, you have to reduce labor costs because such store doesn't require permanent staff members. The staff goes specifically for one or another task: to clean the floor, to replenish the shelf, to check expiration dates. And these all tasks can be monitored by our system, how effective we are. So we have more revenue, and also we can reduce labor costs. We have currently 15 team members. All of them are worked in the industry for many years. Like myself, multiple times startup founder, and also I manage mission critical projects for finance and for defense. Other guys like Justas, more than 15 years in R&D for biometrics. He worked at Neurotechnology, world-leading company in face recognition and fingerprint recognition. Other guys also from industry-leading companies which were building complex things before. Stefan, 20 years of experience in retail. So we know how to build really complex things, and we achieved a lot of earlier. We talk about billion-dollar industries. Of course, we have competition. Here I point some names like Amazon, world's biggest company, retail company, but still it's important here to understand the status we are currently in. Amazon currently has in Europe 17 stores, 17, just less than 20 stores. Tigo raised about 100 million euros, 4 stores. Standard Cognition raised 200 million euros, 1 store. iFi, 3 bigger stores, dozens of smaller stores, still raised about 100 million. So in this company, like we raised 1 million. We deployed the very first store in Europe. We deployed the stores outside Europe, like in Expo 2020 Dubai. And also, like 6 weeks ago, we launched the very first store with the Reve Group. Reve is the 4th European biggest retail chain with 1,000 stores. And it's a super important partner for us. And like the launch of the store was closely monitored directly by board members of Reve International. And like 6 weeks after the launch, we talking about the second store, the Reve Group. The launch was really super successful, twice bigger size, about 1,000 items, also alcohol and cigarettes included. So we are making rollouts with European, one of the biggest retail groups already. So, and to summarize, we have technology ready. Technology solves one of the major problems for retail. All the major retail players think that it will be the future of retail. So our goal now to go and to market and to deploy stores as fast as possible. So
Thank you very much.
For this reason, we need just 7 million, with 1 million already committed from existing investors. Thank you.
Do you want to be on stage? Yes.
Yeah, thanks for the pitch. First, same kind of remark, if you're not offended, that if you have a presentation like this, it's, for me at least, I don't know about anybody else, but it's, if you have a slide, either show it for at least a few seconds, or don't include that slide, because it's, you know, for when you try to visualize and listen to things together, it could be really disturbing. I understand it was probably a longer presentation for another purpose, but maybe you consider just, you know, dropping out a few slides which you don't even want to talk about. That's just one thing. Regarding the main thing, like your business, one thing I didn't, there are a lot of questions, so I'm not going to ask all of them, but first is, you producing hardware and software together. That wasn't clear for me. I understood the cameras can used from you know, like the setup cameras, but for the you know, the other sensors, you have to produce them. So you are a hardware and software company together, or you mainly focus on software? That's the first question. And the second question: do I understand your business model correctly? That could be also your selling point, that you don't really need extra investment from like an existing shop. Like if I have a supermarket, I can use your system without, you know, building something like a flashy supermarket you showed on the screen, like your pilot project, as I understand. So the question is that, is it your main, competitive advantage that you don't need that big investment and I can do it in my small supermarket on the corner? Or did I misunderstood something?
Okay, the first question. Yes, cameras can use, we can use any cameras, can bought from any company. Processing power the same, like you can buy any server or any PC box. We design the sensors, but we don't manufacture them. We outsource to a third party. But yes, electronical parts and mechanical parts are designed by us in our company, but technically these parts are rather simple compared to the software stack we have.
So
right now.
But I can do it, the other part of the question, I can deploy this system in my own supermarket if I wish? Or do I have to build something really new to be able to use your system?
What is required to install the system? You can install cameras and servers by yourself and just pick any your system supplier. For the sensors, yes, you should provide us a specification about the shelves, and we will send you the sensors from our third-party manufacturer.
And for like a small store, you mentioned something like in square meters, like really like a small supermarket. What's the investment size from a supermarket point of view?
Still,
it's not easy because it depends. Yeah.
Sensitive information, but it way less than you can think about. It's just a percentage of your revenue, not 10% or 20%, but just a small percentage of your revenue.
Okay. Yeah, please.
Okay, I have a quick question on the market itself. What would push a supermarket operator or supermarket chain to make the investment and install that in their supermarket that would be driven by the consumer? In other words, what kind of pain point do you really solve for the end consumer? If you had to pick up one or two.
I think number one is long queues, especially in the busy areas. When you have 20 minutes of my time in the middle of a day, I don't want to spend 5 or 7 minutes in the queue for a sandwich.
So queue at the paying standpoint, at the cashier?
Yes. For the customer, it's the queue and the general. Customer experience for the retailer is amount of people you have to hire to run the store.
Okay, that's from the supermarket side of things. Do you have any time to integrate your solution? So how long does it take to integrate one supermarket approximately of 250 square meters, and how much does it cost? Just give me some ballpark figures if you have them.
Currently, I think it's possible to deploy everything in 2 weeks during the renovation phase. Pricing depends, as I mentioned, but it's way less than people can imagine.
The imagination of ours is, as investors can go really big. So it's
okay.
Maybe not the perfect answer, but yeah, we can accept.
I'm happy to have like a separate conversation, and then can you give all details?
Okay. All right.
All right. Just do we have time for a last question, or how?
If you want to negotiate, I will give you 30 seconds.
All right. Now, just a quick one. It wasn't clear from the presentation. How many stores do you have equipped with your system?
Okay, currently 3 stores were equipped with our system. But as I mentioned, currently Amazon has 17. So it's just the beginning of this transformation phase.
No, we had kind of the same type of investment. So I know about it, but just wanted to ask clearly how many you have. Okay,
yes.
Thank you.
Okay, perfect. Thank you very much, guys.
Thank you.
Thank you. So either I have to really work on my pronunciation of things, or like you guys are really just pulling a prank on me. So the next scale up is DRCT. Did I pronounce it correctly, or you call it something else?
You call it direct.
Direct. That's very hard to say DRCT as direct, but I will just give you the right to call it direct. Thank you very much, and you have 10 minutes. Just be very direct, okay?
I will try.
Hi, everyone. Thank you for giving this opportunity to present our scale-up or startup. Yeah, we are creating the first ever neo airline. I'll start with the problem. The airlines, in average, the load factor of airlines is 82%. 82%. It means that 18% wasted, and the 18% of the seats on each flight is empty. It means that in average every year 1 billion seats are not being sold, and airlines are wasting more than 9% of the revenue on the marketing and distribution. So it's billions of dollars wasted on the marketing and distribution over the year. And the problem of why it is so because the distribution infrastructure of the airlines is quite outdated. It was launched in 1980s, and it is like a legacy software that is hard to use and which is very complicated and also very expensive for the airlines. As a result, airlines are losing profits and opportunities. Around 9% of the revenue wasted. Pricing is inefficient due to the lack of the relevant data. It means that when airlines are selling tickets, the prices are already been created before you are searching for the tickets. That also means that airlines don't understand the needs and the demands of the passenger. They don't understand to whom they are selling the tickets. That's why the pricing is inefficient. And airlines are forced to survive on low margin and low revenue streams. Price is the only way to differentiate the commodity services. You can easily remember how do you search for the tickets. You just go to Skyscanner or Kayak, and you are just comparing the prices and the schedule. That's it. But everyone knows that there are not only the measurable things like prices and the scheduler, but there is also the quality of the product. The Ryanair product differs from the Turkish Airlines product. And for the passenger, it is hard to compare such things. For the passenger, it's hard to compare that in products of some airlines, baggage is not included. They can't choose the seats and so on. And passengers are losing time and money. The decision-making process is painful because you should compare different offers from the different airlines without having a lot of information about that. Booking changes are time-consuming, so when you want to reschedule a flight or cancel your flight, you should contact the call center of airline. And all airlines offers look the same due to the lack of detail of the product and the product quality. Therefore, passengers make decisions based on the price and schedule, as I said before. Our solution, we are creating the first neo airline. It means that we are not going to possess our own fleet. We want to create something like Uber creates with the taxi services. They are not operating the cabs directly. They don't have the cabs. They are focused on the clients and passengers' needs. They understand where are the passengers, who are the passengers, and they understand how to deliver them the products they expect. The same have been done by the Revolut with banking, when you can use the bank, and the Revolut is not a bank. So they created the client-centric interface that can deliver the product that client expects, but client doesn't expect to deal with banks as it was before. Some days ago, I was in Santander to open my bank account. And it is awful. I wasted 2 days to open the bank account, but in Revolut you can make it in 2 days. in 2 minutes. And we want to do the same because we want to focus on the client's needs. And we, as we are quite deeply in the technical software development, and we are deep in aviation, we want to focus on the distribution, revenue management, and optimal fare forecast, and let the aircraft owners focus on the operating of the fleet. Where are we now? Now we are acting as a tech provider. It means that we already integrated, we became the official partner of more than 30 airlines. At the moment, the airlines like Lufthansa, British Airways, KLM, Air France has chosen us as a partner who has the direct access to their inventory. It means that we can source content from them directly. We can deliver this content to the online travel agencies, to offline agencies, and to travel management companies. So when you are searching flights, for example, in Skyscanner, and then you go to Kiwi to buy this flight with the very high, it could be that these flights have been tailored by us, delivered to Kiwi by us, so by our technology. So it means that now we are not selling our own content, we just deliver the content from the airlines to the sellers. And as I said, we already work with 30 airlines who certified us as a technical aggregator. We are selling 23,000 segments per month. It means that 23,000 flights we are selling per month. We have already more than 200 sellers, B2B clients in 5 countries. And we are making €2.5 per each ticket, per each transaction. We call it transaction. And we are proceeding like 10% monthly growth. We have the integration with all main GDSs. GDSs are the distribution system which airlines use. We have the bunch of strategic partnerships with guys, maybe you don't know them, but they're well known in aviation. I have a lack of time. Okay, I'll try. Hanair, Kiwi, Iverex, and so on, and other. And the next stage of our evaluation is to become the neo airline. It means that we want to make our own content, so we want to redeem the seats from the airlines. As we have already the volumes of sales, we can redeem buy the seats from airlines. We can resell them on our own rules and prices. And we already have the volumes of sales. We already have the technology for that. And
30 seconds.
Just, I'm finishing. It's the last slide. And the market size, I don't know why the names of the market size is not here, but I'll try to explain. The market size is 16 billion. Sorry. 16 billion is the market size of global distribution systems. 24 billion is the market size of the revenue management system, which we are doing also. 40 billion is wasted by the airlines for the marketing. And 100 billion is the market size of the neo airline. It means that this is a market size that we can try to reach. And as the last words, we have a lot of experience in aviation. Me personally, I'm 13 years in aviation. We have quite good, experienced, talented team who is also dealing with aviation a lot of time. So yeah, we are looking now. We already raised the first round of investment. It was like a pre-seed, and now we are looking for the next round around 5-6 million to scale up. Thank you.
Thank you very much. some more feedbacks.
My turn. My turn to start.
We switched positions. So.
Okay. I got super excited. Finally, one pitch starting with talking about the problem you're solving, and then the excitement was a bit short-lived on the format of your pitch. I think you read a lot of things which we can read. Actually, if you have a slide, we can read it. So I would really encourage you to move away from the slide and talk to your audience. That's on the form. I think I have one main question. Is I really struggled during the whole presentation to understand your USP, especially compared to Skyscanner, Kayak, and all those boys doing aggregation, which is what you seem to be doing, except that you call yourself an airline. So maybe I didn't catch that, and if you would like to tell me a bit more about it.
Thank you, Julien, for the comments in regards to the presentation. I'll try to do my best. In regards of the comparing with the competitors, now we are acting as a tech provider. It means that, for example, if you mentioned the Skyscanner, they are acting like traffic providers. So they're selling the passengers to the airlines or to the OTAs. It means that they're attracting them to the platform, they're comparing the prices, and then resell them to the OTAs or airlines. And we are delivering the content from the airlines to the sellers, or from the airlines to the Skyscanner. So it means that we are just a technology. We are not selling our own content. So we are not competing with Skyscanner right now. And moreover, we are going to use Skyscanner as the platform to deliver the product that we are going to, when we will be on the stage, when we can buy seats from the airlines and resell them under our own brand. We will use Skyscanner as our partner. Did I answer your question?
For me, sorry. for me, no, because I had the same question actually in my mind. So why? Okay, I try to rephrase maybe the question. Maybe we have the same question. Why are actually Skyscanner or the airline using your service? What's the differentiation from your service as they wouldn't use Skyscanner? Because what you mentioned, like we can see for the customers, you can see information which is haven't been there, like what kind of luggage size you can carry. I saw that on the slide. Right now, I don't see that on Skyscanner, as I remember, because I use it normally, or any other provider. So what exactly that you are doing? Because probably I didn't understand either. What's your role in this process?
For Skyscanner, to get the information about the flight, they have to use some technology to grab that. So they are not just parsing the websites of the airlines. It doesn't work like that. So they have to have some technology to send the requests and to get the answers via this technology. So we are competing not with the Skyscanner. We are competing with the aggregators like Amadeus, like Sabre or Travelport. It's like three main aggregators that are covering 80% of whole distribution of all tickets in the world. And for example, the price of delivering the information by these guys is in average $8 per one segment, per one flight. And our average price is 50 cents. So it means that the delivery of the information from the airline to Skyscanner with using of these legacy technologies means that the passenger, you actually, will get the ticket on much higher price.
Right, so I think I understand your role. And what's
the last question?
Only a price differentiation between you and the other providers? Or why is there a price differentiation?
Actually, it's a really good question, because these companies who is dealing now with the distribution, this Amadeus, Sabre, and Travelport, they have been created in 1980s. And they just don't have the capability to deliver the whole information about the product, because before, when it was created, there was no differentiation in the quality of the product. Everyone offers everything. You have the ticket, the luggage included, the baggage included, the seat is included, and so on. And now it is not like that. And we can deliver the whole information. We can even deliver the photos of your seat. For example, if you are flying business class, we can deliver the information, the 3D view of the seat, so you can understand what you're paying for.
Okay, thank you.
Thank you very much. Round of applause.
Thank you.
So guys, for this batch, again, last but not the least, somebody is going to do the task for the people, right? So take task, please, 10 minutes.
Hi, my name is Sebastian. I'm the founder and the CEO of TakeTask. We are a group of two serial entrepreneurs. I founded ABR Sesta when I was a student 25 years ago. And it's still operating. It's a self-sufficient company. I'm just the owner, actually working on exiting the company, profitable, growing. I also introduced Subway restaurants to Poland, first restaurant in Poland where I was the first franchisee. Marek has great competence mostly in telecommunication and IT. He was a CTO also in a software house, so he is my right hand in terms of technology. I'm more a business, legal, and financial guy. So the problem we decided to work on is lack of good communication and task execution mechanism in companies with dispersed labor force. You know? So managers, they send tasks, and the employees get the task in many different formats, and they do not have good ways to communicate back the feedback or get access to guidelines. So what we did is a task management app, which is very, very simple. It allows you to get this quality assurance in a second, so the managers can very quickly create a new process in our system, and employees get the tasks which are personalized, prioritized. It's a no-code platform, so and it's a really no-code. It's not a low-code, but it's a no-code platform. So we just implemented our system to Drogeria Natura, and the training of administrators took 3 hours. And after 3 hours, they already started to work with the system, deploy the task to the whole 300 plus retail chain. And then they could execute the tasks in the field in real time. So the drag and drop task editor is this simplifying element of our system, but it's also a lot of personalization and dynamic content within the tasks. So because retailers and other companies with desk workers, they work in very different environments. The whole environment can change in one night when you get a COVID pandemic or when you get the attack from Russia to Ukraine. Of course, the whole notification toolkit with push email. We also have our own SMS and voice bot system. Here are some screens of our app to see that it's very elegant. Of course, each client, we now concentrate on enterprise client, get their white label so they can change the colors and logos, etc. These are some technologies. For example, this is AI-based price monitoring, where in something like 2-3 seconds you get the scanning of prices. We have a global contract with Shell, for example, for this particular thing. And these are some notes. so you can make some notes on your smartphone. We also have some feedback mechanism, like here you have a board which you can, it's a kind of a touch screen where you see all the tasks which are related to your location, for example, a store or some other factory. And here you have a dashboard with different KPIs related to your particular store, so you can work on the KPIs and then work on the task you're supposed to do. So it's all in one place in a very simple way. There are two main types of companies we address our system. The first one is enterprise. We started with enterprise. We have almost 20 clients in this plan. The average monthly fee is about 4,000 euros. But there are smaller tickets and bigger tickets. It's a kind of a managed SaaS. The implementation takes about 2-3 weeks. And it's on the private Azure cloud of the client. And it's both directly sold and with the Microsoft Marketplace. And we just launched our full SaaS for SMBs. It's on our application, which is called Take Task. We have first clients, and there are also 3 plans, but the price includes the Azure costs, and for now it's about 200 euros, so much smaller tickets, but the process of implementing the client, it takes from our side about 2-3 hours. So it takes in total 1 or 2 days for the client to be onboarded with their own processes. So they get their own processes in the system. The two channels of sales. The direct channel, this is mostly me and my project managers. I'm the business development guy because we are mostly a tech company now. We want to get to some threshold and scale with funds from investors. And then we will build the whole sales channel, etc. But we also work with different partners, like we are a top Polish ISV for Microsoft with all the incentives, etc. But also working with big and small consultancies, telecommunication providers, etc. They simply sell our system. When the COVID struck, we launched the COVID quarantine monitoring system just in 2 days. There are almost over 11 million user accounts, so you can imagine the capacity of the system where you have hundreds of thousands of tasks done daily in the system. But on the other hand, you have a system that you can launch very, very quickly. We also, with our voice bot and SMS bot systems, we registered over 1 million people for vaccination for COVID. We sent hundreds of millions of SMSs to Polish citizens with this information. This is how our revenue looks like. As you see, for some time, we had a flattening of the MRR here, because I was involved for over 6 months with fundraising, and I did not succeed, honestly. We just had some bridge round and some accelerator, but as I'm the only salesperson, the sales did not grow very significantly. Now, for the last half year, I'm working on sales, and we now have new clients onboarded in the system. The most important things in our technology: fast setup, as I already mentioned, remote deployment. We now, for example, do tests in Philippines for Shell. Fast implementation, so the training, as I said, with Natura, it was only 3 hours, but usually it's about 5 to 6 hours. Very simple graphical user interface. So you do not need to train the deskless worker. They just get the app, they get the processes, and they start to work right away. And it's multilingual, based on scalable Microsoft technologies. The market is big, and most of the investment went to went to software, not for deskless workers, but for office workers, like Teams, etc. The venture capital. But the deskless workforce is 80% of the capital. So we see that now it's on the rise. There are many competitors already. It's not that it's space without without competitors, but the market is very, very big, and it will grow significantly. It will grow faster. The collaboration software market for the deskless workers will grow faster than for the office workers. There are different types of competitors. We have certain advantages over them. I can answer the questions later about the advantages, of course, but we combine certain features of a no-code platform, enterprise, and full SaaS. This is our simple roadmap. What would we achieved where we are now? We are now launching a full telecommunication platform as part of the development of our SMS voice bot system, which we are now in talks with some telecom operators. We will combine this technology with the last slide, with our task manage application to have a whole suite of communication, both in a structured way, like with task, and non-structured, like what. And we are. We'll probably go for an A round when we'll be about 100K MRR, which will probably end of this year, beginning of next year. But of course, if we can find funding earlier, we are happy to talk about it. That's it. Thank you very much.
One last round.
Thanks. Can I start now? Okay. Yeah, first of all, I think it is a great page. So
thank you.
I don't want to, rate all of them, but it itself, it was understandable and easy to follow. One question about your clients. Actually, one remark. Sorry. Good thing that you were really honest about doing the fundraising and not having enough time for sales and building the company.
Yeah.
Probably you learned from it.
You learn from mistakes. Yeah. But I want to be honest. I'm not. I will not.
I mean, it's just one remark that is you were honest about it. Of course, it's not the right move probably for next time. So about your typical client, I saw Ocean there as a hypermarket and a few other logos. So who is actually who is the best fit for your product?
We are process and industry agnostic. But in terms of sales, it's always easier to go to a certain industry. So we started with retailers. Mostly groceries, food retailers, drugstores, this kind of stuff. But we also have like Cross, which is a bicycle retailer. We have some companies, but now the SMBs, they are making some installations, like some equipment, so they have these protocols of. So from our perspective, it's. When you have a process which is done on a piece of paper, you can just digitize in 15 minutes, half an hour, and it's digitized. If you have, let's say, we are now testing with some food processing companies. It took me 2 15 minutes conf calls, video calls with quality assurance manager, and we built. And the next call, we tested and I showed him the results of his, controls on, and he said, "Yeah, that's great." So in 15 minutes, I digitized his process. So we digitize, for example, HCCP-A, quality control and food safety standards for Shell in just one day. So they had everything in 20 processes on piece of paper, and after one day, everything was digitized with the app. But they already had the app, of course. They were doing the scanning of prices. They were doing merchandising checks, promo readiness, etc., etc. So we just added, a few more tasks that were just appearing, popping up. Okay, now you have to check the temperature. Now you have to check this, and so, etc.
Do you think the world needs another Trello or another Asana?
Okay, so it's not Trello and not Asana. Trello and Asana is for office workers. We are concentrating on deskless workers. So for this 80% of the deskless workforce, in comparison to 20% of office workers. So it's designed as an app for people that do not work in front of a computer, that they have a process, and you want this process to be executed evenly all over the country in different places. So you want to build a process very meticulously. You want to test it and then deploy it and have feedback how it went.
So you're focusing more on manual workers, I would say.
Exactly.
Maybe one last question, if you want to.
No, it's okay.
Oh, perfect. Thank you very much. And round of applause. Good. So guys, that was another round of very interesting scale-ups. Now it's time again to change the scenery a bit. And we will see, let's just say, how everything is going to go with all of our scale-ups. We're going to need like around 1 minute just to prepare the set. but just that you have a knowledge of understanding what's going to happen is about ESG for scale-ups. Prepare your business model and investment stories. So it's going to be very interesting with very interesting speakers. I would like to welcome the crew just to basically try to prepare the place, and then after that we will start with the next round.
Warnock. I'm deputy editor at Sifted, and it is my pleasure today to moderate this interesting discussion about ESG. I'm very excited to be moderating the conversation today because I used to work with some ESG and have consulted with startups at their earliest stages about how to prioritize ESG, what tools to use, and what's important. So I'm super excited. Just a quick little intro about each of the people that is on stage with us today. So as I said, I'm Eleanor, I'm from Sifted, I'm deputy editor, which means that I'm working with our team, figuring out our direction, editorial direction, and then also doing a little bit of writing about VC and other things. Then we have Matthias, welcome.
Hello.
You are co-founder and CVO at ShareP. Can I just ask quickly, what does this V in CVO stand for?
Yeah, that's a lot of people ask this question, and I think I put it intentionally because I'm also CEO, and I started the whole ShareP, and then my colleagues joined me as a co-founders. But CVO, it's a Chief Visionary Officer, because as some smart guys in this industry says, like, you don't need a CEO for a startup. You just need the guy with the vision that doesn't take the pills to really go forward.
Amazing. And then we have Evelina, our ESG expert from PwC.
Yeah, hello, everyone. It's a pleasure to be here. Yeah, I'm representing PwC ESG Hub. Lots of short names, but basically our role as a hub and my personally is to support both public and private sector companies or clients in the ESG journey, so setting ESG strategy, KPIs, materiality assessment, ESGD, and many more.
Amazing. And then on virtually, we're joined by Serena as well, innovation professional. Hello, Serena. Thanks so much for joining us today. Hello.
Hi, everybody. Greetings. I hope you're doing very well. And like me, recovering from a flu. I would have hoped to be with you so that you know how tall I am. I'm 172. However, I can imagine that you all look pretty and you're excited to learn some more together with Matthias and Evelina on ESGs.
Thanks, Serena. Okay, Evelina, would you like to kick us off with a little presentation? Thank you.
Sure. If I can ask for putting the slides on so we could start. We prepared this short deck just to introduce the topic and just to set the scene for this really important and interesting discussion about ESG for scale-ups. So the minute we have it on, I can start.
Do we have someone in charge of the slides?
Yeah, because I'm not. I mean, I don't have anything to Change the slides.
The magic
start
button.
The presentation. I mean, I can start speaking. Actually, we don't need the deck if it's not available. I can just briefly present. That's. Okay, so I mean, I can start introducing the topic just for the sake of time. We thought it would be good just to explain what and demystify the ESG as a topic. So we know that there are those three letters, E, S, and G. So, and what this means for the scale-ups in practice. So E basically covers the relationship and the influence that the company, any company, because every business actually, it doesn't matter whether it's a scale-up or a multinational company, every business is affected and is affecting environment. And it's not only about carbon footprint or climate impact, but it's also about waste, about water usage, about setting targets and goals around those aspects. Then we have the social aspect. So those are basically the relationship that that the company has with not only workers and employees on its own, but also with the communities and institutions in the environment where the company is set and operates. And then we have the G aspect, which is actually about how the company is governing the organization, but also how it cooperates with stakeholders and the way it makes decision actually to make those effective and well-informed decisions. So those are the three aspects that are covered by ESG. Then we have the key drivers. I will move on since we're waiting. So in the presentation, then we try to briefly explain who are the main drivers of this ESG being so high on the not only investors' agenda, but also companies and countries too. So for sure, it's like the regulatory perspective, and this is also because of the EU Green Deal that was introduced 2 years ago. So this is like the plan to basically make the European Union carbon neutral to 2050. And this also includes a number of directives and regulations that are affecting countries, but multinationals, and then eventually this cascaded to supply chain, which actually will affect scale-ups at some point. So those are like directives concerning transparency and reporting. So CSRD that will be soon implemented, but already existing SFDR and many other concerning non-financial reporting. And then we have also communities and consumers, which are demanding more and more. Okay, I mean, okay, so yeah, we covered this, and we can move on to, oh, yeah, okay, so I was just referring to this slide about demystifying the key drivers. So we already mentioned regulators, and then civil society and consumers, and there are many studies indicating, like the one study that was conducted last year concerning consumers and their choices and how they affect actually whether they take into account the ESG. And it turns out that almost 34% of consumers self-reported that they are willing to pay more for products that are environmentally neutral or contributing to environment. So those are, of course, everything is evolving, like both regulations and the way, the approach that all the stakeholders are presenting toward ESG and the implementation on the concept on the ground. But those are the studies that are showing that this is definitely getting a lot of attention. And then we have civil societies, but also multinationals, which are expecting the suppliers to be in line with the regulations, because multinationals, of course, have to be in line. They are abided by law. The business partners that are part of the supply chain are not all of them are now abided by the law, but they will be. And then we have investors, which is one of the key groups. And now we see that they are increasingly appreciating the fact that companies are starting to introduce or trying to align their business models with ESG approach. This is basically because they know that those companies that are trying to do it or are already implementing the whole concept are better prepared for any adverse changes on the market, and it's hard to indicate right now, like we lack concrete data when it comes to exact data points saying that yes, those companies, because they are ESG prepared, will be better performed, but for sure they are better prepared for the future and even for now. And this actually this is a good introduction for the next slide. Thank you, Mateusz. Here, just a quick overview of the study that was conducted by PwC on the PE. It is a global PE study that was conducted last year. It's mostly focused on PE, but there is a capital venture angle too, and here we are sharing some numbers. But what's really important is, like, we are all aware that there is no formalized or standardized procedure for implementing ESG in startup or scale-ups. But for sure, the topic is getting more and more attention, and companies like capital venture funds, they are trying to, first of all, get more familiar with the topic, and they are willing to require from potential investee companies to take those topics into account. We also shared some shopping experiences or expectations concerning consumers, so you can also take a look, like the other study that was conducted by PwC. It also confirmed that the topic is relevant for consumers and global society generally. I think we can now move on to the next aspect, which is the question. So, what is the main benefit? How ESG allow you to what kind of value it brings, and whether there is any concrete benefit of implementing ESG. Here are three pillars. So we divided it into, like, top line growth, risk management, returns, capital. But they're like this is like kind of an umbrella of the benefits, and there are like subtopics or subgroups of benefits that you could read under those three aspects. But what is really important is that when you implement as a company, when you take like a serious approach to ESG, for sure you will experience that your customers, existing customers, but potential customers, will appreciate you and will give you a chance to broaden your presence on the market, so you'll be able to enter new markets, but also build your stronger existence on the market. It will also allow you to properly manage risks, and those are a number of risks. Those are the risks that are linked to scarcity of resources. Those are the risks, the reputational risks too, that can be a result of the improper supply chain management or value chain management. And then we see that there is an obvious assurance of, like, the cost of the capital is lower, and then you have both for transaction, but generally you have better access to the capital, because you're showing investors that, first of all, you're aware of the topic. The second thing is that you're already implementing, and the other thing that you're trying to adjust and align to all those changes and things that are happening around legislative part of ESG, but also the societal expectation and business partners' expectations too. And now I would like to briefly, if we could move on to the next one. We already mentioned what is ESG, what kind of benefits it brings, who are the main drivers, and I think this is like the most important part, because now you see that it brings clear value, it is possible to implement it, and companies are already doing it. But what is really important, and I think this is like a huge advantage of scale-ups and startups, because actually they don't have all this burden that huge multinationals already carry. Like they have like open world because they are starting their journey, because those are really young organizations, so they can start implementing the idea of ESG from the beginning. This gives a lot of opportunities, and because like it's in the DNA of any startup and scale up to introduce innovation and changes and adjust to those, and ESG for many is perceived as a kind of innovation or something that is really new, although it is not a new concept, but anyway. So I think it's really great opportunity for scale-ups and startups to actually start aligning business model to those principles. And here we listed some of the steps that could be taken by scale-ups to start this journey. And this is also how we work with companies generally, not only scale-ups, just to show them what should be potential steps for them. So we usually start with the materiality assessment, or checking where you are as a company and see from both opportunities and risk perspective, what are the key topics for you. Then when you have those key topics identified, you should, because you should not focus on everything, you should choose those that are the key for you, and then prepare a kind of an action plan for the next 2-3 years, just to show what kind of goals you set, what kind of commitments you are willing to achieve and made, and then how you're going to do it. So you have to have clear objectives, KPIs, and then having this action plan, present how you're going to achieve those goals, and in what time frame, because this is also crucial given that there are certain timelines for multinationals to achieve, especially when it comes to, I haven't finished yet, to be honest.
I'm so sorry.
Because last but not least is about publicly disclosing goals and commitments. This is something that I have been discussing with companies for many years, and this is really key aspect, because you might do a lot of things internally, but if you're not communicating them, it's like they are not existing. So no one knows that you're doing it, no one knows that you're willing to achieve those goals, so you can't take credits for it. So it's really a key issue to publicly disclose your goals, commitments, and the way you are progressing in achieving those. And this brings me to the end of the presentation. Thank you.
Thank you so much, Evelina. That was such a great foundation to set up for our chats. I see Serena is clapping. I love it. By the number that you cited in your presentation, that 76% of VCs consider ESG in their investments, which is, even though you said in the world of multinationals and bigger corporates, ESG is seen as, more of like a daring innovation. Really, that stat just tells me in tech, in VC, ESG is something that is a household word now, right? It's something that everyone has to take seriously. And so I'd love to just kick off our conversation by talking about, like, in that world where ESG is something that everyone's looking at, everyone's doing, what are some of the biggest things that scale-ups get wrong? What are some of the biggest misconceptions about ESG? Maybe Evelina, you can kind of kick us off.
You want me to still speak?
Yeah, go for it, go for it.
I wouldn't like to dominate the conversation, but I think the most important part of it is to understand that it's nothing, like, it's not rocket science, actually. Like, those are the simple operational things that you could address basically by setting goals concerning water usage. So you have a goal to limit the water you use, or just to think about your carbon footprint, like especially for startups, like digital carbon footprint. This is something really important. And also you can start, I know that for startups and scale-ups, like supply chain is not a key topic, but still, if you're cooperating with business partners, it's good to start those discussions at the beginning, just to show them what are your values and that you're really expecting your business partners to align with those values and expectations. So this is what I think is important to understand. But
yes, so maybe I would say from my experience, in most of the cases, as I even speak with other founders, what they get wrong about that is that, first of all, they don't understand it. I wish they would see this presentation of yours. It was amazing. No, really. Even if I have seen it already before. But that really makes the things easier. And for startups and scale-ups, especially scale-ups, where 24 hours just kind of fade in a time. You don't really know either it's a Monday, Wednesday, or really it's a Saturday or Sunday. It's really, everything goes fast. To understand that it's actually simple and it can help you, because it does, and it does help with the communication, especially that when the scale-up says, oh, we are not really interested in B2G, we are not interested in B2B, we are focused on the customers. But on the end, you get to this moment that when you need to speak to B2G, B2B, and when you don't have the set goals, then it's kind of like no go. You will not even know why they don't want to talk to you, because they know that implementation of any kind of sustainability in your business will take time and they don't have it. And the same goes with the investors. Like, if just in my opinion, why it's 70 and not 100? You know, investors are investing in future. They are investing in the team and an idea and the execution that you're having. But in fact, they are investing in what you're going to produce. They are planning to have a time 5, time 20, or time 60, some of them even. But you're not going to get it tomorrow. You're going to get it in a year or 2, 3. To have that, they are aware that, you know, European Union and other countries are setting high goals. And if you don't, if the startup is not following this, or at least building the technology this way, it's going to be bad investment.
And Serena, how do you think that scale-ups and startups can, well, A, maybe what do they get wrong, but also how can you just prioritize? You know, when you're, as you said, you're busy building a business and you're really wrapped up in just the operation side of things, how do you figure out what you should actually focus on?
Yes, I support the comments of the dear colleagues on the panel over there. I would add that ESG started with the act of investment, right? So maybe for some of the startups and scale-ups, there might be sometimes a misunderstanding on the term in itself. If they don't see ESG, but they see sustainable investing, if they see responsible investing, impact investing, socially responsible investing, and so on and so forth, many other varieties of these terms, they basically mean the same. It's the same approach, it's the same intention, and requires a lot of action from the startups and scale-ups. So that would be the first misunderstanding. The second that I can immediately think of right now is that maybe in a scale-up, when you are supposedly hiring a lot, there is a good growth rate in the company, you might expect that the ESG agenda comes from the co-founders or the board of directors, while it might happen differently, right? You might get that from the business developer who is communicating with one of the suppliers, who might get it with the sales team who's locking in the next sales agreement or the next customer, client, whatnot, depending on the industry. So leave all the doors open for the ESG to come in, and not expecting that to be presented only by the co-founders or the guys with the suits. Nothing wrong with Matteo's suit. I like suits as well, but you know what I mean. And I can also see that Evelina has one. Maybe I'll put one later. Still, all of these possibilities actually allow scale-ups to be introduced to ESGs. And the third one, and I'll leave it with the third misunderstanding, is that it is not work, it's not extra work, and it's not just bureaucratic work. You can use it to improve certain organizational processes. You can use it to improve your product deliveries, your features and characteristics, that whatever your offering portfolio is, ESGs can help you make it better. When it comes to priorities, that was the second question, right? How can you prioritize? So I see it in a twofold way, right? If the scale up didn't have an ESG approach from the DNA, from the get-go, the backbone of the company, the storyline from the first pitch or the first grant or the first investment deal, then allow yourself to pivot and to change. And you can change either on doing some internal assessments within your own organization, like looking closely, mobilizing your quick resources, your best employees. Research actually has shown that the most engaged employees in the company are also the ones that care the most about ESGs in that context, in that organization. So you can do that, or you can go the other way and see, okay, what's my next investment round? Who are the investors that I'm going to approach in this pipeline, or who are going to combine this consortium? Do your own due diligence on these investors. All of them have their own criteria that they measure the behavior of the investment decision or the startup deliveries and all the other elements, and then try to fit into that agenda so that you score the next investment round, and you allow for some time in your organization to change that story, to change that perspective, and benefit from the long-term vision that ESG provides.
Super interesting. Matthias, what do you think about the prioritization question?
Yeah, I think I would like to add here something like, I mean, I like what Serena says. It's including the suits part. I think it's about keeping it simple on the beginning. I mean, you don't need to really make a report that has 60 pages and I don't know what else. You're not a corporate, and which means you have lawyers that have nothing else to do that produce hours, and that concludes with pages. And you can just set a simple goals that your customers also, or potential customers, potential partners can understand. I mean, like, make it simpler even internally in the office. Yeah, let's use the tap water instead of buying bottled ones. I mean, just the simple things, but if you start somewhere, you can build it. You know, the house is built from bricks. You don't order it like, you know, online. And in our case, I can give you a short example. It's not like a product placement. We talked with the huge, the biggest operator in Switzerland about the railway and the communication, public communication. And we asked them, what is your problem? What is really your problem? And then they said, yeah, we are trying to convince people to switch to the public transportation since 20 years. I said, like, okay, so what are you doing wrong? Or like, are you happy with the effect? And they said, I mean, a lot of people more and more are using the public transportation. So I was like, okay, so what's the target customer that you would like to convince as the driver? Ah, okay. I said, like, okay, so did you succeed? No. The reason is because if you're making, for example, saying, yeah, public transportation is for free, but the guy who have a car, he will keep on going with a car, and that's it. So you're not reaching to him. So the message must be so simple that he understands, and he's the potential target for the sustainability in this case. And not saying that, yeah, but so we build a solution to exactly convince that kind of person, but on the end. But the point is that it needs to be simple, because everybody needs to understand. Nobody will get it a 50 pages statement, but everybody can get it. Yeah, don't buy the bottle, take the tap water. It's a simple message, yeah, you know. And in this case, if you give an example, even as a small scale up, and you approach the corporates as an example we did, it works. You can, and because then you communicating with them with a simple solution, but also in their line of understanding.
Evelina, I wanted to ask you too about the prioritization, and also in your presentation you talked about the time frame that you're working with these companies and how you help them think about that. But obviously in a fast-growing company, those priorities are going to change all the time, right? Their business might completely change. So how do you help management think through that, especially in terms of that time, 2-3 years?
Yeah, I mean, for a startup or scale up, it's like 10 years for any other company probably. So this is like really, time is an important factor for sure. And when we start this kind of discussion, we always expect, maybe not expect, but we would like to hear from the owner what is at least the plan for next year or two, just to see what kind of time frame we should take into account, and based on that decide what could be the potential priority for the company. But also it's important to understand where the company or the startup is operating, what are the key stakeholders, so what is the environment of the startup and how they will affect those people, institutions and other business partners. So just to, you have to start with really good understanding of where you are and where you want to be. Maybe not in 10 years, but in a year, just to, based on that, understand what is possible for you to do. Because it's not for setting goals that you will, from the beginning, know that they are not achievable. So, and this is like Mateusz said, it's about having like practical goals, simple goals, easily communicated not only internally for your own employees, but also for external stakeholders. So everyone understands what you really want to do, how you want to do, and when it will be achieved. So those are the, and I know that it's really on a general level, but it's hard to I'm trying to put it in a way so everyone can understand what is our approach, how we run those discussions with clients, and what is the way of thinking about ESG. And it's also about, like we spoke about water, energy is also like one of the topics that is raising more and more on the agenda is the circular economy approach. So this gives like really it's like a complex, on one hand, it looks like really complex model or complex way of thinking, but it's not actually. And it's really applicable to every type of business. It's applicable to huge multinationals. And that's what, when I was actually working on with huge multinationals, but it could be applicable to public sector too, and to small, medium, and startup companies.
I think you brought up also a super important point, which is the communication, right? It's not just the internal goal setting. It's also about how you're talking to stakeholders, whether those are employees, investors, people who are using your product, or just the community that you're in, right? Serena, what do you think are maybe some examples of best practice in communicating those ESG priorities for startups and scale-ups?
Yes, so working for an academic institution, higher education institute like Aarhus University, I will leverage the terms that we usually have in grants and projects that we run. And in some of these projects, you're asked to have a communication strategy at the same time as a dissemination strategy. So what would be the difference between these two? Communication for a scale-up in this occasion would be something that you spread out in terms of messages and content using all your channels, all your digital assets, all your means of communication for everything that's happening in your entity, in your group, in the company, and then somewhere where you relate it to ESG. Let's say if there is something related to a new hire that belongs to a diverse group, or maybe you are expanding into a new region and you're applying some new regulations with regards to using the raw material or resources from this place. And then on the other hand, you might have to do some dissemination strategies too, meaning the actual activities, the simple acts that Mateusz and Evelina mentioned, the simple acts that you are taking on ESGs, you disseminate those and you assure that everybody who relates to these acts is informed. And in this case, in this dissemination activities, you might be a bit more specific on your targets, right, in the audience that you have. And you definitely frame the messaging different to allow for what I usually like to call in my pitch training a call for action. So I communicate something to you. I let you know that I'm doing something in the E, something in the S and the G, but then I want something in return. I'm not here alone. I'm not doing it on my own. You have to do something here as well. You have to take some action so that my activity, the one that I'm just disseminating with you, has this snowball effect and is taken away then not just by my community where you belong, but also your community where some more belong, and so on and so forth in the larger places. As I mentioned before, these digital assets that the company might have need to be revised and checked again. The choice of language there will make a big difference. Of course, for some industries, you have to comply the language with some regulations or prior work done related to ESG or any of the other sustainable development programs. But what I really would recommend here in communications is that create a knowledge board in your organization, in your scale up. Call it a small scale think tank, call it a Google Drive folder, a board with some magazines and newspapers in the kitchen lounge, or once a week, half an hour talk with an external guest that you invite to inspire your colleagues. Use this knowledge board to organize all the inspiration that comes from your employees, your stakeholders, your communities, all the other parties, and then pick on that at a later stage. If you see that this knowledge board is getting crowded and you are having so much cooler content that you thought before, maybe put someone to manage it and organize it, because you might have some radical ideas there that can actually translate into new business models or new offerings for you. And then my last advice here in communications would be take a look at your data. You might be drowning on it already as a scale up, but there is a lot that the data can speak for you. And how can you communicate that data that sends a message for your ESG actions?
Mateus, what would you say about the communication question? And maybe you can give some examples from your experience as well, building a company.
Yes, communication, this is of course a key in every company, and especially, of course, you need to have a time right now where most of the people are working remotely, and the communication, definitely it's much harder. I remember the days where everybody been in the office and, communication between people was literally, you spent 2 hours of whole day just communicating about different stuff. Right now, it's like you're lucky if you have some bio time between one meet and the other Zoom and then Teams. Then you're really lucky, at least for a toilet. So maybe putting a board in the toilet would be a good one, because that's the place where people definitely meet. No, but seriously. I think it's, of course, social media, and you can communicate clearly what you would like to achieve or do, but not doing some foolish stuff, I would say. Just as, I would repeat myself, keep it simple. And as an example, it's like, we said that in the startup that I'm running right now in Sherpy, we said like, we want to convince people that smart mobility have a different meaning. It's not that you're going to use the electric car. This is not smart mobility. It's not that you're going to buy electric bike because, ETH in Zurich, they proven that based on enormous example of e-bikes, it's actually harming the environment than helping. Why? Because the drivers don't change. They just buy another vehicle and use it from time to time, but somebody need to utilize the batteries after. And our idea was, okay, so if you're coming from point A to point B and you're already a driver, so maybe we can convince you based on the research, because as Serena says, scale-ups are joining with data, but actually universities are if the scale-ups are joining with data, then universities, I don't know, they're like a galactic of data, and nobody reads that ever. I mean, like once it's published, it's done. It's like a pail of papers, and that's it. So what we did, sorry, what we did when we started ShareP, we just read those things, and so we didn't invent a wheel. We literally read what the smart guys have examined by years and said like, okay, they said that there is not a technology like this and there is this and this piece missing. And then we just put a puzzle because, you know, on the end, it's like a Lego, everything fits together. We're all human. And we came up with the solution that, you know, you can plan your trip. Maybe you can propose you leave your diesel car on the suburbs of the city, because if you leave it there, your parking is cheaper. So we actually tell you it's cheaper. So you save money, you save time, because the public transportation will get you to the city center faster. And then on the end, you save a CO2. So somebody can say, I'm driving a 2-liter diesel car and I'm saving CO2 more than the other guy who bought an electric bike. But that's the point. Keep it simple. Try to convincing people from the small stuff, just, you know, like a drop of water. When we are still nearby the water, and then just go to the next step. Have, of course, this plan, but communicate that quite clearly. Yeah, and I think it's important.
I think also related to the issue of communications is who is responsible, like where does ESG sit within the organization, right? Who's being held accountable, right? Who's pushing it forward? And I wanted to go back to a point, Serena, that you made earlier in the conversation, which was about the idea that these ideas can also spring from many different people in the organization. So I'd love to hear a little bit more about how you've seen that happen, but also who should be responsible in an organization for pushing an ESG agenda forward?
Yes. By the way, Mateusz University makes a lot of output indeed, and definitely there is quite a bit of these pieces that maybe are not as direct and easy to comprehend, and you can go through it. But what's important is to know the history, right? It's not necessarily that it's going to repeat itself, but it might rhyme. So we want to make sure we don't rhyme with what has already been published and worked on from the academic environment, but actually elevated in the future. So with regards to who's responsible in the ESG context in the business, well, usually CFOs has been responsible. We have seen that very common. Sometimes the board of directors have given some indicators to how to go with this. Sometimes I even recommend to non-formally have a chief happiness officer in the organization. So when somebody is not super excited or low mood and so on, then you need that. You can have many chiefs for that matter, the chief cook and the chief inspiration, all the rest. I don't believe that it can be a one-way stream, like top down or bottom up. I find it as a mix of initiatives, as different ways that you can get this going in your organization. But it might be important to appoint an ad hoc team or a few employees or team members that can follow it, that can keep track on it time by time. Sometimes investors might be pushy a lot more than maybe you were ready for it, because you were taking those the advice that we are giving to take it simple. So could be that from time to time you can onboard somebody externally or outsource that sort of task, but that should be for a very short amount of time so that you don't lose that competitive advantage that that you would want. We see that today it's mostly the millennials and Gen Z that really care about this. And you should also allow for your employees to be the ambassadors on leading ESGs. They're the best ones to help you recruit and retain talent later on. And if you claim that, and then two colleagues in the coffee corner don't agree on some of the ESG practices, we'll see how that's going to go next. So I would say ad hoc teams to start with for the scale-ups before you make a big deal out of it, and then later on see if you can make it more structured practice by practice.
And Matthias, how does it work for you and your organization? Obviously, like impact is so central to your business model, but is there a person with whom the ESG agenda sits?
That's gonna be me.
We have you.
Yeah, because I think I would not hear like it needs to be somebody who have a vision what it can really be with this with those goals, and actually getting back a bit to what Serena said about in the beginning about universities. It crossed to my mind because I have those kind of visions. A lot of students are doing the PhD. I mean, they are doing the master degree, they're doing the bachelor degree, and they always look for the maybe some 6 months or 3 months in the company. It's quite often. I mean, in Switzerland, it's like it's a standard. You're obliged to. Maybe that would be but most of those students they don't have any experience. I mean, you cannot expect that they have the experience because they are young. But what they have, they might have a knowledge, or they might come to your organization being before trained in the university to build up some sort of program, or to build up some plan, or to help talk to the others in the organization or in a startup, in a scale-up, proposing something or seeing things from the different perspective of a young person, which helps, as you mentioned, like most of the young people or millennials, they are not anymore young. Sorry to say, but yeah, to really implement some new vision for that, but definitely. Execution of that needs to come. And one thing on top of that, what I would like to say is that, and I'm always repeating myself with this, there is no sustainability without profitability. It's like many big organizations will say amazing, beautiful words. They will produce amazing presentations, colorful, but on the end, if it goes to CFO, and the CFO is a master of Excel, and then says, oh no, it costs 1.02%, sorry, we are cutting the budget, that's just no. So in this case, when you build the sustainable goals, you should consider that the sustainable goals can be profitable. And of course, if they are profitable, then maybe this profit can be covering also the ones that are not, or maybe the ones that are demanding more work from you. It's just, and once you see that this works and this really brings some value, everything gets easier. But, yeah.
Evelina, maybe you could talk a little bit about that cost and maybe
Yeah, I will, but I just want to comment on what was said about assigning someone to actually to being like ESG responsible person. And like with my experience because I have like almost 10 years of experience analyzing and discussing the topic with companies, mostly with large caps, but this could be actually copy paste to startups and the scale ups too. It's like, first of all, you have to have someone who is on the strategic level responsible for ESG topics, but this person is only like on the high level, and those people that are really like a core of the company, the internal one, should be also responsible for pushing the agenda and actually to shaping it to some extent. So I think this is really important to keep in mind that on the strategic level, but also on the operational level, you have to have people responsible for it.
Definitely.
And about the cost, how have you engaged with companies in the past to kind of help them get to the point where they can see that this is actually really going to actually be profitable?
Yeah, I mean, the thing of costs and the thing of profitability, it's something that is being like constantly discussed, and unfortunately we don't have like any concrete data or proofs that yes, if you do this it will bring you such profit. But for sure, if you are first of all, if you have a good overview of your supply chain, so then you're better prepared because you're like future-proofing your business, because you are ready for any kind of disruption concerning the supply of resources. The same when you're applying circular economy approach, you're just cutting the cost because you're shifting from this linear take, make, and waste approach to more circular one. So it's also about cutting costs. The same when you're changing the light bulbs to more energy one. It's like those are the practical things that you're applying this way. You're saving energy, saving money, and you're helping the environment. So this is the main thing.
So we're getting down to time. So I just kind of wanted to do a rapid fire question with everyone to close the panel, which is if you could just have, you know, 1 or 2 sentences to give advice to a team at a startup or a scale-up who really wants to be serious about ESG, what would you tell them? Serena?
Yes, I actually regret having this flu and not being there to continue the conversation with some beer or champagne or whatever. But thank you for listening to us. And what I can say is mostly be proactive. Allow for some different initiatives in your scale up, dedicate a couple of hours every week among the employees and the teams that show some readiness and already adaptation to ESGs. Then maybe include leaders and industry experts to do these iterations of what you're finding internally in your local search and expanding that with some of this explicit or external knowledge as well, and then see what kind of results you can so to say publish or encourage further after this proactiveness in the organization. Take it easy. In a couple of years, we will have another term for ESGs. So mostly get into that as a methodology to do things better and with higher impact, just like any entrepreneur in startup scale up really cares about. So that will be my bit.
I think, first of all, you should not be intimidated by ESG. It's not a huge concept. Those are really everyday things that you're already doing, but you are not aware of them. And probably this new name brings like a scare that, okay, it's something, it's like rocket science. It's not. And you think you should think about it like a really simple concept where you can find yourself. And of course, you have to accept the fact that there will be challenges. But it also brings lots of value to you as a company, but also to your employees and the local communities. And you should ask for help.
Very solid advice. Matthias?
I actually agree about this help asking. Yeah, and yeah, for me, it's just, you know, keep it simple. Start from the small stuff and, you know, have a vision, of course, obviously, but just start from the small stuff. It always helps. And, you know, I remember when the garbage collection in houses started. You know, I remember the start, like when the people were saying, no, I should do it. It's terrible, more No. Right now, honestly, myself, I cannot imagine myself not segregating, because it's like, it's cheaper, it's better, it's simpler. You know, everybody thinks about this plastic everywhere, and that's this awareness of the problem that somebody can have a vision about, the rest might not see. But then if you use the small things and you have small steps, you can convince them. You can convince anybody to anything. You just need the time, and you need to be, you know, into this, not give up, because you know, it's easy to give up if you're a startup. But if you don't give up and people see that, they will follow.
I love it. So my takeaway today is ESG is not a big scary monster. Break it down, take it easy, simple steps. Thank you guys. I learned a lot. Great conversation.
Thank you.
Thank you.
Thank you, Serena, for joining us from afar.
Say if you do what you love, then you don't want to stop it, right? Saying it as a person that's from 7:30 a.m. We're trying to be around here. So guys, thank you very much for the energy, for being here. Anybody's tired? No? If you're tired, just raise your hand. But if you raise your hand, then you're not tired. So that was a tricky one. So we're going to have a small break till 5:20. So if you have, let's just say, some appointments umbrella, or if you just want to basically just go and grab a coffee or something, now is the perfect time. So see you guys back here by 5:20. Thank you very much.
Greetings from the Wrocław Congress Centre, where we are hosting Wolf Summit 2022 this May. Needless to say, our thoughts and prayers are with the Ukrainian people during this terrible time. Especially close to our hearts at Wolf Summit are the Ukrainian founders who are continuing to pursue their dreams at this time. Sadly, the ramifications of this war are being felt worldwide, although most acutely within the Central and Eastern European region. In light of this, I've made the decision to invite all startup founders from the following countries to join us here in Wrocław this May, completely free of charge.
Bosnia and Herzegovina, Latvia,
Poland, Albania, Romania,
Czech Republic, Croatia,
Lithuania, Kosovo,
Hungary,
Bulgaria, Slovakia,
North Macedonia,
Slovenia,
Serbia,
Estonia,
Montenegro, and Ukraine.
I'd now like to sincerely thank the City of Wrocław for providing us with this amazing venue and for their continued support in making Wolf Summit 2022 truly iconic. See you in May.
Wolf Summit 2022!
So I really like Wolf Summit, but when guys from Venture Cafe comes, all of a sudden the average age goes like 5-6 years low. So that's good. So during the day, we were mainly talking about scale-ups and LPs and GPs. And let's just say that right now we try to make it in a way that also, let's just call it, we're going to broaden the whole spectrum of people that they're going to be here. So I basically just had an idea of not to waste too much of anybody's time and just invite all of our speakers and the moderator to be here to talk about why some platforms thrive and others don't. And I really feel that platforms are right now having a very huge momentum. I had a pleasure of knowing some of these guys for a very long time, so I'm not going to take your time. Just give a big round of applause that you know how much you have energy. Please. Yes. I hope by the end of this panel, you're going to even have more energy. So I would like to welcome all the speakers and moderator here on stage. And for the next almost 57 minutes, the stage is yours.
Great. Good evening, everybody. Very excited to be here. I'm Amy O'Brien from Sifted, and I am a fintech reporter, so predominantly cover fintech, so maybe deviating slightly from that today, maybe not. But I'm really excited to be here with such an expert panel on this topic. I think seeing as we're so many people, we've got so much to discuss. I'll go straight to intros. So Pavel, can you introduce yourself briefly?
Paweł Sieczkiewicz, I'm the CEO of Telemedi. We are a digital health platform working mostly with the B2B companies like insurance, like banks, and we are providing the white label service if you want to build your digital health path in your value chain.
Max Filipov here, managing partner of GR Capital. We are a Ukrainian team investing Ukrainian funds into Western European companies and bringing them east. Glovo is actually one of our most successful projects in this sense. Yeah, we will talk about it later. Most of our businesses are platforms, I mean portfolio companies.
Hi, Carlos Silvan from Barcelona, General Manager for Glovo Poland. 4 years in the company. Before I was working in expansion, been involved in the launch of 9 markets for the company, and for the last 2 years living here in Warsaw and trying to grow the business.
Andreas Nemeth, Managing Partner of Unica Ventures from Vienna, Austria. We run a 150 million early growth stage fund. Invests throughout Europe, or not only in Central Eastern Europe, but we definitely have a strong bias towards this region, and usually writing checks of 1 to 5 million at early Series A or B rounds.
Flavia, Chief Commercial Officer for Velocity. We have several funds for direct-to-consumer companies from very early stage to Series A, and now we're bringing to the market our own finance product for companies in direct-to-consumer. So it's a very exciting space.
Great, thank you, everybody. So yeah, taking on this pretty broad and big topic, we thought it would be helpful to start sort of at the very beginning, thinking of product. Flavia, seeing as you're doing that right now yourself, I'd be interested to ask you what the key things founders should think about at the very beginning when it comes to building a product and building a scalable product.
Amazing question. Okay, so platforms really, in my view, exist because we want to disrupt something that is not working, or the old way of doing things, whether that is in fintech or HR or whatever vertical you're thinking of. The reason why platforms exist is to disrupt. I think the most important element is to be user-centric, client-centric, and to build around that user and that client. I've worked with quite a lot of companies in my investment days and afterwards, still now with the European Commission and in my own personal time. And one of the things that I would say has always been a good foundation is to build what your client and your user is telling you, to get to the market very quickly and to validate it as quickly as possible. If you're building in isolation, the likelihood is that it's going to be very expensive, very long-winded process, and you're not going to see the scalability as soon as you expect It's always better to put the client first, put the end user first, and build from it that disruption that you have envisaged to begin with. That would be what I would say. That's what I'm doing and preaching every day.
Brilliant, that's really useful. I think, yeah, it'd be useful to move straight on to the sort of next step, which is going to market. Max, I was interested in asking you how you should go about thinking about the market you want to enter. Is there a benefit of sort of going niche when you're building a scalable product, or should you go large from the start?
Well, I mean, I guess the times of when you should just go large and everything have already passed. I mean, times of Uber approach to winning all the markets possible at all costs have already ended, and we've seen that also reflecting on their share price growth. So what I've seen during our last 6 years of investment is that really the platforms are becoming more and more niche, like you say. So even it's not only about choosing your industry, but also about choosing the market you are entering. So also what we've seen when we both invested, for example, into Deliveroo and into Glovo. So both businesses are food delivery businesses. Product is pretty much the same when you look at the app, but the amount of actual capital spent for both businesses to reach the same KPIs was very much different. And the valuation up is still pretty much different for both businesses. So what I'm telling is that you should really look for the market where you can succeed, and these markets are becoming more and more scarce these days. For example, Deliveroo was targeting London, Singapore, Dubai, very high margin, high average check markets. But when Glovo started, those markets were already taken. And what we've seen in their success is that they were not kind of, they didn't think that winning developing markets and small check markets is a very bad thing. They tried it, and those markets were still very much eager for innovation and for getting food delivered in 30 minutes or 40 minutes. And Glovo also succeeded. But also what you probably need to account for is that, for example, 10 years ago, B2B platforms were not that successful because actually the end clients, like my colleague said, were actually not ready. For example, if your client is actually a business, 10 years ago, most businesses were not online. They didn't have much incentive to go online. These days, everybody is online. So you need to, when you think about your product and the first market you need to enter, of course, you have to be efficient. So you need to find this market where everybody is already ready for this innovation, but still nobody has conquered this small or bigger market yet. That's my point.
Definitely. And then in terms of going to market, you can also think of it for marketplaces and for lots of these platforms on both the side of the supply and the demand. Andreas, I was interested in asking you, which one should a platform business focus on first?
I think you touched now on one of the key questions every marketplace or platform has in its early days, and I think there is no right or wrong, but I think you should consider if you have access to supply, think who are the potential customers for it, and really stay focused. I think starting in a niche might be a good play in the first run, and then afterwards actually scale it into multiple verticals. If you think of Amazon, they started with books, and nowadays they are actually touching on almost every vertical. But I think definitely supply is the key ingredient to it, because then you can really, if you have a scalable product, that is the supply will. You can scale it accordingly, but if you don't have access to enough supply, then it's definitely hindering you.
Definitely equips you from the beginning. B2B or B2C? It's some businesses figure out right from the start, but Flavia, I'm interested in the economics behind that. What are the main differences in the economics for B2B platforms versus B2C?
That's probably the hardest question. Okay, B2B companies, in my view, the platforms, you're going to be able to do a few things very early on. Once you kind of validated, you're in the market, You're just going to be able to replicate, automate that client journey, that sales and marketing cadence that you have. And where you're going to end up maybe a year in is where you're going to have very predictable kind of cost of acquisition, almost predictable lifetime value. And usually for companies in this bracket, you're going to have a very good margin. Your lifetime value is going to be huge. That's why companies attract such high valuations. And it's going to be a very sticky product. Because once you're embedded with a business, the likelihood is that you're going to survive for a very long time. So the investment that you're doing up front through that marketing sales cadence is going to be worthwhile. You're going to, every single client that you add on, the marginal value is going to be a lot higher. So that, just to give you a sort of industry kind of metric, I know that I've used it historically. For every pound you spend, kind of 6 plus is kind of acceptable or really good in lifetime value. So that is what you would expect from a B2B kind of B2B platform. And the demand, the supply is going to be much easier to manage. In B2C, I think that what we're not discussing is that these are slightly more hybrid models where you have to work at both ends, where you have to work on the supply side as well as the demand side. What that means is that on the supply side, you're going to have this sort of subscription, high lifetime value. So every kind of supplier that you're bringing on is going to worth a lot for you. But at the same time, you have to grow this consumer-facing or user-facing part of your marketplace or your platform. And that is very expensive, and the lifetime value is much lower. So building something like that requires substantial amount of revenue, because you're going to have different needs for different parts of your product in your market. You're going to have 2 different techniques that you're using to increase both of these parts of your business at the same time. So in my view, whenever you're thinking about this, think about whether you have the resources, whether you have even theoretically validated those models, because it can go terribly wrong, or maybe the market in which you want to enter, you're not going to find it that easier to make that balance, to get as much on both of these sides of your platform and be able to scale. But fast forwarding 3, 5, 10 years later, it could be the best thing that you've ever done. It's just, is the capital in the market willing for you to be able to work at both ends? I think that that's the economical question that you have to ask yourself.
Brilliant. Nicely broken down there. Thank you. And I think, Pavel, this is a really good time to ask you, actually, because you described Telemedi as B2B2C. I'm interested in what the benefits are on the customer acquisition side of this kind of business model, and also in terms of scaling potential. Does it sort of double it because you're going to both sides?
Yeah, so I will refer in some way to what Flavia said. And when we are looking on a strictly B2C business, there's a lot of marketing spendings usually in a P&L. We are the B2B2C, so at the end of the day, the patients are using our service, and we are trying to convince them to use our platform by hubs, which in our case are B2B, are insurance companies, banks, and the other type of the B2B companies who got huge number of individual patients who can use our service. And this is the obvious thing that we are leveraging in our P&L when we are comparing Telemedi to pure digital health B2C businesses. We are much more cost efficient. We don't need to raise so much money because we don't need to put a lot of marketing efforts in a B2C. Sometimes when we are looking on a pure B2C players, even in our space, we see that on their P&Ls, if few B2C players are starting to bid for the same individual patients, the only one company that's actually winning the digital health, the telemedicine revolution is Google. Because the more money one company is raising, the other is the more they are bidding in the Google. The second company is raising more money, they need to bid more in Google too, because the number of the patients or individual people who want to order the food, etc. This number is constant on the market. It's not like rapidly changing every month. So they need to bid for this. And when we are going with the B2B2C model, we are looking for hubs, the B2B players who already made this marketing effort already. And this is how why we choose this model, and this is how we are delivering, the millions of the services each year already with the much more cost-efficient approach.
Really interesting, and I think this is a good time to go to global. So, in terms of direct to B2C, what were the main challenges on the customer acquisition side when you're scaling?
Few of them, but I think one thing that it's very important to be mindful about is obviously for a platform like Glovo, ideally you want to be raising the different sides of the platform in a harmonious way or at the same time so that you can limit the number of inefficiencies. And one of the things that's very important is identifying where is your limiting factor in your marketplace. No? So to put the example of Glovo, for instance, a country like Poland would be supply constrained, in which unlocking drivers or couriers due to low unemployment, low immigration, etc., it's very, very complicated. But if you go to sub-Saharan Africa, for instance, then the reality is that food delivery can be a luxury. No? So actually your limiting factor is on the user side. And once you are understanding where your limiting factor is, then the important thing is, all right, so you have a value proposition, and this value proposition is going to have certain attributes that pretty much are going to be present in most of your markets. Say, for instance, in the case of food delivery, it's about operational excellence, it's about affordability, it is about selection and content in your application. But then the order and the relevance of these different attributes is going to change a lot market to market. So in a nutshell, I would say important to identify the limiting factor, one, and two, be very agnostic in prioritizing those different attributes because you will spot differences across markets.
And actually, once you've spotted those differences, can you change your strategy? Can you change your customer acquisition strategy sort of halfway?
Well, that is the challenge, no? Because obviously it demands, as you very well say, it demands a change in the strategy. It demands a change sometimes in the allocation of capital. And the reality is that as a company, and especially if you're a multinational company, you need to find a very thin balance between adapting your strategy, because every market is going to say, hey, my market is different, and at the same time not reinventing the wheel every time, no? And so, unfortunately, there is no secret sauce for this. It's a process of iteration in which you need to have two parties collaborating very well. But yes, the short answer is if you don't adapt your strategy to the conditions of each market, the reality is that, as I was saying before, the risk is lots of inefficiencies will go into your marketplace, and then you're going to eventually destroy a lot of value. And that's when things like what Max happened, no? Like different companies having a ratio of investment to incremental GMV that can be very different.
I'm actually going to ask you another quick question on this because I'm very interested. What do you do? How do you decide it's time to pull out of a market?
So the easy question is, it boils down to opportunity cost. And obviously quantifying that, it's difficult, no? But with markets, it happens similar thing as with underperformance with people. You reach one point in which having an underperformant people or asset or whatever in your team, it becomes an act of unfairness for the rest because you become aware that you could allocate those resources or that focus or that capital in a more efficient way. Luckily, companies have their own ratios and ways of measuring that more or less in an objective way. And I think that at some point, as a platform, you also reach this stage in which you realize, all right, somebody has reached a size or a volume that gives them certain efficiencies that for me to outpace them essentially would mean I would need to let go many other opportunities. And at that point is when the decision becomes clearer.
Thank you. Really, really interesting, that aspect there. Moving on to, you've sorted your markets, you've sorted your original product, now you're ready to launch some new products. Flavia, how do you find that sweet spot between launching new products, scattergun approach, or focusing on what you're already doing and going deeper?
I would say that whenever you're faced with such a decision, you really have to ask yourself, is it you that is driving that need for a new product or a new functionality or a new a new kind of offering that you're putting out there? Or is this coming out of a need from your user, from your client, that is being fed through you systematically, and you're communicating, you're validating those various different elements from the data that is coming from your user base? I'm of the persuasion that you can't just launch something without understanding that that is exactly what is needed on top of whatever you already have. Going out there and just launching different functionalities without having any validation, whether they're going to be well received, without having surveys, interviews, and various different other techniques that founders can find and test very easily nowadays, is really a waste of money. I've been perhaps privileged, perhaps not so, to have seen a lot of companies developing functionalities and investing millions of investor capital into specific product ranges, or let's say premium versions that actually didn't take off because nobody actually thought about speaking with 100 of those types of users and seeing whether this is what they need. It's always so easy to form an opinion and to go out there and start building, rather than go out there, co-create the solution that is most required. Because once you're in a market, it's just going to be who will make that journey incrementally better, sell a lot more, address those needs better and better and better. And you're not going to get it by just looking at your technology. You're going to get it by speaking with the ultimate user. That is what you exist for, and that is what's going to make your company a lot more scalable in the long term.
Market research, market research. This is a bit of a fintech question, which appeals to me, but lots of people are very excited about embedded finance right now. Andreas, I wanted to ask you, so yeah, that's where these marketplaces can sometimes add this as a product on top of what they're already doing. Do you think this is an area that we're going to see a lot of growth over the next few years?
Absolutely. So Amy, I think as an expert in the fintech field, you're definitely better known than me, yeah. But because 6 years ago when we started investing, and we actually investing in 3 distinct verticals: fintech, which InsurTech is a part of. We invest in digital health, and we invest in mobility. And actually, in each vertical, we have invested in marketplaces, like marketplaces connecting sports venues to people that want to practice sport. We connect people, like with telemedi, with doctors, patients and doctors. We have invested in mobility startups, actually bringing used cars to people here in Poland. And what we definitely see more and more is that even if they are digital health startups or mobility startups, they now actually start embedding a lot of finance products in their offering. So they have a core product like Eversports, connecting sports venues and sporty people. But you know, for example, the payment transaction that is transacted through that platform is definitely a very interesting revenue stream on top of the traditional SaaS business they run. Or with the used cars, insurance, financing for these used cars is definitely a very interesting additional revenue stream. And I think that's why embedded finance, embedded insurance is offering huge potential in digital marketplaces, because it's actually just a byproduct and actually adding additional revenue potential for the platform on top of the traditional offering, even actually complementing them and actually improving the offering you have for your end consumer, because actually you not only want to buy a used car, but you want to have an insured, financed, maybe with a flat fee standard subscription model of a car, which is actually offering a totally unparalleled new value proposition to customers just by embedding some finance products here. And I think it's sometimes even bigger, the potential. Think of the automotive industry that is actually now making more money with financial services than by actually selling the cars. I think the same potential I see in the digital market space with fintech enablement really offering huge growth potentials for the platforms themselves.
Max, are you seeing any other emerging platform sectors that you're particularly excited about or you think are going to really take off over the next couple of years?
Well, I mean, we've already seen some actually. Probably one of the most interesting, if we call it, can call it like that, was Miro platform in our portfolio. And actually, that relates to the question also about the niche and readiness to go to this niche, because it's actually the platform that allows big companies like Airbnb, Glovo, which actually need pretty standardized photos of food, of real estate, to find photographers of all over the world with one contract. When we first saw this product, I really thought this is genius. But again, this couldn't be possible like some years before. In general, what I'm seeing is more and more, well, we just discussed also with Andres, this one company. I also didn't realize this is the actual service which can become a platform, but the company named Affilio, they connect people with all of the family management services. So, for example, in Germany, usual family has one boy or girl in it, usually middle-aged, who help all of their elderly to do all of the healthcare, all of the children to get to the right university, all of the others to get their taxes, to get all of the, I don't know, real estate serviced. And this is a real kind of job, not paid for, right? So somebody has to take care of it. So they created a platform out of it. So actually anything that is nowadays, as I said, so niches become more and less obvious, but still we find companies that identify these niches in some of the very unexpected ways. And the cool thing about it that, like also Andres put it out, so the key is to become this gravity point to build this supply, for example, or demand first, whatever in this particular market is more winning strategy. So that then you can add more and more services on top of it. So you can, when I started venture career, I kept hearing about WeChat, which in China became kind of an app for everything. And actually the Glovo also, when they started with this button in the center, order anything. Just today I heard the story that when they realized all of the people are ordering McDonald's through it and paying like 5-6 euros for delivery fee, whatever, just get me McDonald's please right now. So that's when they realized they're more of a food delivery business and they need to pursue McDonald's to start delivering through them. So yeah, I mean, we will be seeing more and more of this, and you can't judge. I also heard a lot that you can become a successful founder only if you solve a problem which only you understand and you have faced it. But actually, as also Flavia said, with decent market research, you can actually find a really interesting niches with really interesting market dynamics, which by standard terminology could become a blue ocean, let's say. Also it's not a platform, but another product I heard today is the standing desks. Actually, when a girl started doing it, she's Ukrainian actually, she realized it could be also a decision for some health problems with kids because they need to stand at a certain angle and so on. So you just need to try and you will see more and more ideas both for platforms and for different innovative products.
I feel inspired already. Yeah, so every startup, I guess, is a sum of its parts. So I think it's important to think about hiring now. Flavia, I was interested to ask you about how does hiring impact like potential success when you're scaling, and also do different types of platforms need people with different skills?
Very good question. I think we all know the answer at an intuitive level. We all know that actually successful companies are built by people. People build technology, people sell, people set up automated messaging, people communicate. So hiring is very much a determinant of your success. If you can't attract the best people, then you absolutely are not going to build a best-in-class company and a best-in-class culture. Or vice versa, you have to start with a culture to be able to attract the people. Who knows? I think platforms have a bit of a challenge, and this is something that I've seen historically over the last 10 years. Platforms have to attract people that are a lot more technical from day one. The reason for doing that is because you guys have to scale very rapidly. So it means even processes within marketing and sales and communication have to be automated from day one. There is no 0 to 0.5, it's kind of 0 to 1. You have to prepare to scale. And because you do that, it means that fundamentally every role in the company has to be very aware and feeds into the product roadmap. So from a start, if you get somebody that doesn't understand platforms, doesn't understand technology, then be ready to couple them with product people that can then feed those functionalities, those integrations, those incremental changes that enable you to go from 1,000 clients or users to 10,000 to 1 million to 10 million. And we've seen some platforms, you know, reaching the sort of billion figure. So I think that's the kind of the thinking. You're not hiring for your problem then and there. You're hiring for someone that is going to take your company a lot longer. And if they, from the very start, is somebody that, irrespective of their core knowledge and skills, they have to have a very good understanding of technology, of platforms in particular, because everything that you're going to be doing is going to be part and parcel fed into your product roadmap. So you, unfortunately, I don't think you can distinguish. I work with direct-to-consumer businesses. Yeah, maybe you can get away with a bad marketing hire. Maybe you can get away with a mediocre UX designer or programmer. In a platform, you can't, because your goal is to get to, I don't know, 10,000 hits a day, be able to cater with 1 million transactions. So mistakes like that can cost you dearly. You're not going to raise, you're not going to go forward, you're not going to be competitive. Sorry, I think that I'm depressing everyone, but I can't see your faces. The light is so bright.
I'm inspiring your depression, so that's balanced. I'm just joking.
Going global. So next steps, once you've got your great team that you haven't made any mistakes with, Pavel, how do you know the time is right to expand into new locations? I'm interested in sort of the key things that you had to consider when you were entering new markets.
We are following our B2B clients. When we are working with insurance companies, for example, most of the time they are part of the bigger groups. So once we got a great case study working with them in one country, we are just asking for the references. And sometimes not even asking, but going to the next countries and offering similar service. It means on our side that we need to develop new languages of doctors. And once we got the new language of doctors developed, we got the additional network effect, because already many people are living in different countries. There's many expats living in different countries. So even if we don't have the German B2B clients yet, we already are serving people who are speaking German, who are living in the other countries, who are served by the insurance companies who are there, etc. So this both sides of the network effects on the B2B client side, on the doctor's side, are actually determining where we are moving forward with our business. And of course, we are testing. Not always the first bet is this which is winning, and this is how we are going forward.
Really interesting. And then on the B2C side, then Carlos, with Glovo, I was interested in how, you know, when you're expanding into all these new locations, how do you keep your focus, especially, well, locations and product lines? How do you keep everyone in the game?
You always want to have more focus. I don't know if you have as much focus as you would like, but there's a few things that you learn over time. And perhaps In the case of Globo, I mean, at Globo we took expansion very, very seriously. We were lucky to be the second wave of this type of companies that, as Max was saying, were trying to get to many countries very fast after Uber and a few more. So we could learn from some of their mistakes and things that they did well. And at some point, we had a playbook to launch any market in 6 weeks. At some point, Globo expanded to 18 more markets in just 1 year. So the process became a bit refined. Now, when it comes to focus, there were at least 3 things that were very important for that type of success. One of them is guaranteeing the expansion team, treating expansion as a startup inside of the startup, giving that full independence and full ownership over what they are doing. At Globo, expansion was reporting directly to the CEO, would be getting a different independent budget, and actually we would be treating our launchers as a small GMs. Small GMs meaning obviously they have a budget that is smaller because their impact in the P&L is not as big, but they would have the same attributions in terms of decision-making power. So the second one actually is try to bring in the right type of seniority that will allow you to fulfill these functions. Don't treat expansion just as an execution, replication type of job, but something that can be more than that. And then finally, and this one, it's important for the other 2 to succeed, no? But you need a lot of top-down strategic alignment. In our case, we have a founder, Oscar, that's extremely prone to trying new places. Also because, as Max was saying, there is a success component in going in those markets that are less competitive, and the first mover advantage is obviously very important. So that was very important as well for the focus and the success.
Really interesting. And then when you are expanding so much, how do you keep yourself and also your teams accountable? I'm interested in the company culture side of things. When you're, hiring people all over the shop, how do you actually retain that culture?
So accountability, I would say that there's a part of accountability as any other character trait or however you want to call it, that it goes with the person, no? What in Netflix they call the rare responsible employee. But other than that, I think that as a company, as an organization, there's a few things you can put into place in order to sort of foster that. One of them is obviously ownership, trying to hire people so that they can make their own decisions and that they can either leverage on the success or the failure of their own actions. And then the second one is attribution, no? And attribution, it's a hard one. I'll put one example. So I took office, for instance, here in Poland, the very same week that they canceled the flights between Poland and Spain due to COVID. So actually, if you look at the downloads of our company and you sign there the moment when I started being a GM, all the business starts going up the same week that I started. Obviously, that's an attribution error, no? And again, like there are things that companies can put into place in order to work on this attribution error. Like for instance, focusing more on inputs, not just on outputs, no? So yeah, that would be my recommendation, I think, trying to limit that, give ownership and sort of work on attribution.
Really interesting. And Pavel, actually, I'd like to ask you about that sort of retaining company culture as you're expanding. How do you go about that?
So the first thing, around a year ago, we asked ourselves, what is telemedicine? Like, if we made a workshop that is called Mission to Mars. If you would like to build once again telemedicine from scratch, who will go with us to the Mars, and what character is it? Why we would like to take this person with us to the Mars? And in this way, we are looking for the people. Actually, we learned that not the skills already, not the knowledge that this person already got, not the previous experience that the person was working 20 years in the insurance companies that actually is driving our success, but the attitude and this character. So we are looking into the people. Is this drive, this dedication, etc., will be on the level that we want to have. The second thing is, of course, this learning curve, like how we can learn ourselves, but how we can learn the other team from our mistakes that we are doing, because we are totally aligned as a team with the what he said that Michael Jordan said, that the winning is going from the failure to failure without stopping to be excited And this is for this type of people we are looking. And at the end of the day, everything is coming back to the KPIs. And I totally agree with Carlos that people too often are looking on the output only without the input that is actually driving this daily KPIs. And we are totally looking for the people who are open and transparent to look on the numbers, to make the reflection, because if there's no such reflection, if you are looking on the daily routines of the particular person and there's no reflection on the KPI, there's definitely, it's a gambling, not the strategy, where to move if you're not looking on the KPIs. And this is where we are.
No, really, really important. Okay, I think we have time to ask everybody a couple of rapid fire questions. I'm interested in the one big piece of advice you'd give to founders that are beginning to scale their platform-based business. Flavia, I'm going to ask you first.
Okay, it might feel like a broken record here, but I think something that I would apply and I apply every day: don't start building until you've spoken with 100 users or clients that you think you want to have, and tell them your vision, get their feedback, what do they need, and then start building. Then start to challenge your own assumptions. I've learned it the hard way, delays because of some of the assumptions that we've made, and I think that that is probably the most painful lesson that you can have as a founder. So this is the advice in reverse.
Andreas, do you?
So I think there is this one very important moment in the life of every startup. You know, after the first phase of being very creative, of building your MVP, of testing the market, of finding your product market fit, I think at the size of 50 to 70 people, there is a very important moment, and then you have to really build your organization in a way that it doesn't matter if you have 80 people or 800 people or 8,000 people. And I think this is probably where you really have to switch from being very creative, being open and agile, to be very efficient and very focused. And I think this is probably the most important time in the life of a early stage startup. What I would not do is start scaling without having that. You know, otherwise you would end up in a total mess.
No one wants that. Carlos, what's your one big piece of advice?
My piece of advice would be focus on culture very early on and try to build a competitive advantage from that. Culture is something that it's very easy to overlook, and it's something that either you focus very early on or it will become very costly and very expensive to build. And the reality is that if you think about what culture is, culture is a set of common values that people are going to share, and because people will share it, other employees or other people in the same situation as you are going to take a similar call or a similar decision. And thanks to that, you will be able to actually give ownership to the people. So you will be able to hire better talent. And thanks to that also, this will give you the speed and the adaptability that can potentially be an edge, in environments that can be very fast and very dynamic, as it's the case with platforms.
Yeah, Max.
Thank you. I will tell you the advice which I usually give to Ukrainian founders, because they usually ask, why don't you invest in the Ukrainian businesses? First answer is we invest into early growth and later stages. There are not so many businesses in Ukraine who get to this level. And why don't they get there, despite there is lots of talent and lots of really, like Carlos also knows, cool people and curious people and nice entrepreneurs? Because they tend not to think international. I wouldn't say global, but at least international from the day one. Of course, there are, with countries like the US, like Germany, there are lots of companies which are successful just being present on one single market. But still, I can imagine the product of those companies scaling abroad pretty easily. With this, with the Ukrainian companies, which I know, they're very, very much localized. And what they see long term, even if they become successful in one country, or maybe they can scale to some similar countries near, but they didn't think more international from the first day, is that then their value degrades, because these international companies, they come and take their market share, innovate better. They think more long term. And what I mean by thinking international is, first of all, just like, again, research, research, research. Don't just rely on the customers you see around you. Try to imagine what your product may look like in 5-7 years when you are just already stuck, will be stuck with the market you have in front of you right now. And embedding that with culture and with all the other advice, I think will make you a successful platform or company.
And Pavel, I guess you've got the hardest job because everybody said such good things, but do you have another piece of advice?
I was crossing out the answers. So my answer will be, when I'm scaling and when you are scaling the B2B business and you are going to the next country, don't push the clients. I mean, if you see this bright excitement in their eyes and in their questions, etc., there's product market fit. But it's like starting the company from the scratch, going to the new market. If there's no product market fit, there's no this excitement in the talks, etc., like pushing for this will not make the things happen. Like, it means we need the product market fit of this market, iterations, etc. Not like on one market it worked, so I will now convince you that it will work for you. No, like we need to iterate to fit to the market, not opposite.
And I'm going to move straight onto the horrible side of things, but I'm really interested, especially, well, actually, no, everybody can answer this, I guess, with things that you've observed as well as done. But Pavel, what's the biggest mistake that you made scaling that you would advise all founders to avoid?
When I heard from the very senior person that we don't need to look on the numbers because this market is different from the other markets. No, there are no different markets that are okay not looking on the numbers from scratch, on the input numbers.
I will say from the investor perspective and what we have seen, think of people you are getting on board. If you're even getting, I don't know, term sheet from Axel or whatever, the best fund you can imagine for your business, these are still organizations of very many different people. And getting to understand the very specific person which will get on your board can change the whole direction of everything we've been talking about, the whole execution, culture, whatever, because once a quarter or even often, or more often, this person may decide just the opposite from your thinking. Sometimes it's good, but it may be very bad.
Carlos.
I think from my side, it would be very careful and wary of hiring fast, because those can be decisions that sometimes can be emotional and can have a very negative net present value. And always try to envision where you want your platform to be, let's say in 18 months, and hire for that. Don't hire the person you're going to need 6 months from now. Hire the person 18 months from now. Maybe it's going to be a bit more expensive. Maybe you'll need to do a bit more work. But the ROI of this type of decisions, in my experience, it's been always very high.
Andreas,
actually, in the role of investor, I think you find startups that you really like, ideas that you see can be scaled, can have a big vision. But you as an investor, you're only necessary to provide the resources, and maybe also to help the founders. But I think ultimately it's the founder that needs to have the same vision, that needs to build the company. So investors are always looking for people that they really want to work with for 10 or 20 years. It's a long-term journey. So never invest in a startup, but only invest in the people.
Flavia.
Oh my piece. I'm gonna finish with an awful story. I used to have 147 companies in my investment portfolio a few years ago, and one in particular I sat on a board. It was on the board there were a few investors that were of the mentality that as a CEO and founder you have to be the best salesperson in the company. Nobody else can be better than you, and to such an extent that the company failed because the CEO was so upset that the best salesperson was not them, so they fired the best salesperson. And one of the things that happened afterwards is that the rest of the sales team started to do this exodus. If the CEO presents to the board that the biggest risk in the company is that the salesperson is really good, because he was bringing like $1.5 million of contracts every year for the last 7 years, and that is the biggest risk you have, then you're in big trouble. And I think maybe it's my ecosystem in London where we're still of that sort of mentality. Maybe it's just the cluster of funds that still believe that the founder has to be the best salesperson. But my God, don't cannibalize your culture, and absolutely accept that you could be really good, but sales might not be one of them. And it's okay. It's absolutely okay. The company did went under, although they had an amazing product and an amazing technical team from some of the top universities in the world. So it was very, very sad.
Always good to end on a happy note there. But I certainly learned so much from speaking to all of you about this today. So unless there's anything else anyone wants to add, I feel like we've been through a lot of advice. Thank you so, so much. And I hope everyone else found that as helpful as I did.
Thank you.
Thank you.
So, good afternoon, everyone. So I know that after a whole day of networking and everything, and some of you are just a tiny bit tired, but I just really want to make it in a way that first try to be as close as possible, because it really gives all of the speakers a bit of a more motivation. And don't worry about pandemic, because half an hour or 2 meters is not going to change anything. So you would be able to enjoy everything way better. Also, we're going to have a very interesting panel, so I'm not going to take too much of the time from, let's just say, both very interesting moderated and at the same time all the details of that. I'm just going to start with the whole title, and the very, experienced moderator is going to take care of the rest of it for you guys. So it's a blitz scaling from the East. I'm really running another part on that side. Otherwise, even I would sit here. So I'm not going to take any more time, and I would like to invite Ivona on the stage, and then she's going to take it from here. So Ivona, the stage is yours. Round of applause. Just yes.
Good evening. My name is Iwona Skowronek. I'm VP of Operations at SenseFix. It's my great pleasure to welcome you to this fireside chat, Blitzscaling from the East, featuring Chris Ye, and being brought to you by Alpha Wolf Summit, Venture Cafe, Warsaw, and SenseFix. It's my great pleasure to introduce our moderator, Balaji Renukumar, the founder and CEO of SenseFix. SenseFix is a digital workflow startup that uses multimodal AI and mixed reality to automate workflows and decision-making in logistics and operation and maintenance in commercial buildings and industrial facilities. The company is headquartered in Silicon Valley with an operating office in Poland and subsidiaries in the UK and Bahrain. Balaji was a former scientist associated with German Aerospace Center. He holds a bachelor's degree in aerospace engineering from Indian Institute of Technology. He is the second-time founder and is densely connected with startup ecosystem in the UK, Europe, US, Middle East, and ASEAN regions. He was mentored by Chris during early days of SenseFix in a cohort in Palo Alto, California. And SenseFix is growing through its stages, engaging customers from US and Europe, and raising over $3 million in investment. And currently setting up a 25 person team in Poland. So Balaji, being an earnest blitzscaling student himself, is keen to interview Chris to explore blitzscaling. So without further ado, over to you, Balaji.
Thank you, Ivona. So welcome to all blitzscaling enthusiasts in person in Warsaw, and those joining via YouTube and other platforms. Welcome to this fireside chat without the fire, although. Let me just take a moment in resonating the sentiments of people in the room, as well as millions of Polish and Europeans in actually going to condemn the war next door that's happening in Ukraine, and also hope peace prevails sooner. Okay, I'm now super excited about the session today on blitzscaling. Everyone wants to know how to take companies from 0 to billion in a couple of years. Who else can take us through this other than the very author who wrote the book on blitzscaling, Chris Ye? Chris will shed light on many aspects of blitzscaling and thoughts around it before we take up questions for the last 20 minutes of this session. We are doing it as a hybrid session. The viewers on YouTube can post their questions on the chat wherever you are, whereas the attendees in Warsaw, you will get opportunity to ask your questions in the end. So welcome, Chris. Warsaw and the CEE startup ecosystem is calling you. You co-authored this book on blitzscaling with Reid Hoffman, the billionaire founder of LinkedIn. You co-authored another book, Alliance, a New York Times best-selling book with Reed and Kasnocha in the past. I don't know if I pronounce the name properly. I'm sorry. So you have been an investor or mentor advisor to over 100 startups since 1995, a writer, an accomplished speaker, and you hold 2 degrees from Stanford and also hold an MBA from Harvard Business School where you were a Baker Fellow. You serve as a co-founder of Global Scaling Academy, which teaches individuals and organizations how to plan for and execute hypergrowth. You're also a co-founder of Blitzscaling Ventures, which invests in world's fastest growing ventures. So, Chris, to set the stage for this session, our viewers would like to get a glimpse into how did it all begin for you?
Oh, perfect. And again, thank you, Balaji, for inviting me. Thank you, everyone, for hosting me and for joining me on this evening or afternoon or morning or night, wherever you happen to be in the world. So it all began in a relatively straightforward way. I grew up in Southern California and then went to Stanford for my undergrad. And while I was at Stanford, this was in the early 1990s, this was when the internet was really just taking off. And so I was part of the first class at Stanford where when we were freshmen, we got email addresses assigned to us. And during the time I was there, we computerized things like the registration system. And by the time I finished at Stanford, that was when the internet was first starting, what the World Wide Web was first starting to get going. I, in fact, remember using things like Gopher and WAIS in addition to Netscape, which was a brand new phenomenon that hadn't yet come out yet. It was originally NCSA Mosaic. That was what Mark Andreessen had created. So I was there at the very dawn of the commercial internet. And from there, instead of going into a conventional kind of job, I decided I would follow the startup world. And I joined D.E. Shaw & Company, which is a company that is very secretive, but is best known as being the company Jeff Bezos worked for before he founded Amazon. I always tell everyone, sadly, he left about 18 months before I got there. So I don't know Jeff personally. I'm not being invited onto a rocket ride anytime soon. Not that I would go. But ever since then, I've been focused on the internet and the startup world because it's just the most exciting part of the economy, one of the most exciting parts of being here on this planet. And I've gone from being a early employee or founding employee to being a founder to ultimately being a writer, an author, and an investor and board member.
Great. Would you mind telling us what were the key learnings and experiences that led you to end up writing this book?
So it really came down to the fact that when we began this book, we started working on the ideas in 2015. And this was during the beginning of what we now call the unicorn era, when startups were being highly valued and growing very quickly. And what we were trying to do is to explain, well, why now? Why are all these companies growing so quickly? Why are they so highly valued? Why are so many of these companies based in Silicon Valley? Because none of these things is necessarily obvious. It's not necessarily obvious what changes occurred to make all of these things happen. And blitzscaling is an attempt to explain it. And our basic conclusion is that the internet changed everything, that it brought us all together and connected us, which meant there were more and more winner-take-most markets with network effects, which meant there were more and more global markets that were enormously valuable. And as a result, there are more and more companies that are becoming global winners at scale, which makes them hugely valuable and makes both the founders and the employees and the investors lots of money.
So to all our viewers, I really recommend all of you to get a copy of this book and read it. If you are a startup founder or a head of a new product service division in a corporation, trying to do an entrepreneurship thing, you must read this book. We all know how a group of Silicon Valley bright minds come together and build massive companies. Imagine the same guys coming together to analyze how unicorns are built, what strategies they follow, how they pivot, and on, and they write a book on it. And when those guys are founders and investors themselves, that's what this book is. This is written by Chris and Reid Hoffman, who is the founder and see who used to be the founder, who is the founder of LinkedIn, who used to be the CEO of LinkedIn before it got sold to Microsoft. I think it's extremely valuable for all of us. So Chris, why do you think blitzscaling as we know did originate in the far west, the Silicon Valley to be specific? Was it a cultural thing?
Yeah, so it was. If you look at the history of Silicon Valley, it is a very interesting combination of the technology side through Stanford University, UC Berkeley, Lawrence Livermore National Laboratories, and the like. There were always a lot of scientists, especially on the computer science side, based around here. And that, of course, dates all the way back to Hewlett Packard in the 1930s, being the first big tech company to rise in Silicon Valley. But there was also the counterculture. The Bay Area here was a center for the American counterculture movement in the 1960s. There were hippies, there were people who were utopians and thinking about a better world. And so people were just more open to trying things. They weren't bound to the same traditions that other parts of the United States, like the East Coast, were, perhaps even other parts of the world. So you had this confluence of incredibly smart technologists, a culture where people were encouraged to think different, as Steve Jobs would say. And in addition, this also happened to be the place where a number of pioneering venture capitalists set up shop. So some of the very first venture capitalists of all came out to the Bay Area. People like Georges Doriot, who began at Harvard Business School, but began making investments out here as well. Don Valentine, the founder of Sequoia. And when all of these things came together, it created a set of network effects that really made Silicon Valley the preeminent startup cluster. And that's interesting because it really should be Boston. Boston had so much more money, so much more history coming out of World War II. And yet Silicon Valley ended up succeeding because it was a more open society, because people were less bound by tradition, because people were more willing to collaborate. And there's a lot of lessons there for all the other technology clusters around the world who want to also become a place where many unicorns can be born.
Yeah, it's very interesting when you mentioned it was ought to be Boston and on the eastern United States, especially I think there is this saying, Stanford University was actually set up to be the Harvard of the West. So how did this slip from the hands of the eastern United States and then land into Stanford and the surrounding Bay Area? So any thoughts on that?
Yeah, so I mentioned the cultural side, but there's also a highly underappreciated sort of structural reason. So one of the things that happened in the Bay Area is that California does not enforce non-compete agreements in employment contracts. It basically means that if you leave your company to start another company, or if you leave your company to go to a rival, you can't steal ideas or take IP, but they can't stop you from going there. And so there was much greater talent mobility in Silicon Valley than there was in Boston. The other thing was the nature of the companies in Boston tended to be much more vertically integrated. They tended to be much more siloed. They didn't really cooperate with a lot of other folks. And this actually shows up in the patent data. So if you look at the patent data, you can look at who the inventors are and which companies they worked for, and you can basically create an innovation graph. And in the case of Boston, the innovation graph looks like a tree with very distinct branches. Each company is separate. The people only work with the other people on that branch. Whereas with Silicon Valley, it looks like a very dense mesh with people working with other people at other companies in different times. A person might have 5 different patents, each with a different company. And that remixing of ideas, that greater collaboration, thanks to that lack of non-compete agreements, is one of the hidden reasons why Silicon Valley overtook Boston.
Oh yeah, I can imagine what you say, because in our own startup SenseFix, we have a couple of advisors from Google who hold daytime job at Google, and they kind of advise as well as work sometimes. So I think I know when you said about the non-compete and other clauses of the Silicon Valley based companies, permitting the overall population out there to kind of participate in startup building. I'm not sure. I don't want to comment on those rules and laws when it comes to Europe and other parts of the globe. I think that could be one key factor which really helped the Valley begin all this. And also, there are blitzscalers in the East,
Absolutely.
out of the United States, today. But they are largely copycats of the Amazons, Ubers, and WhatsApps of the Silicon Valley. We have some early adopter markets and startup conducive ecosystems, for example, in the Netherlands, Australia, even after huge blitzscaling successes from the Silicon Valley, why hasn't that trickled eastwards to these destinations in founding original companies?
Well, it has to some extent. So there are a certain set of extremely powerful companies that really arose in markets outside the United States. So, for example, if we look at one of the companies that is just dominating right now, which is ByteDance, which operates TikTok. That's a company where there was Silicon Valley DNA because partially it came from an acquisition of a startup called Musical.ly. But it's also the case that TikTok came out of the algorithms that ByteDance developed for their news service. And then they eventually turned around and applied those relevancy algorithms to social media and really changed the landscape. Here in the United States, TikTok now has more watch time than YouTube, which is pretty remarkable, right? That is YouTube is an astonishing success that's still growing rapidly, but TikTok just zoomed up behind it and overtook it. Same for TikTok and Facebook. And that's a model that came out of not the Silicon Valley, although there's a Silicon Valley influence, but from China. And then the other thing, if we take a look at the rise of super apps are things that have really taken off outside the United States, really haven't taken off in the United States. Obviously, we're all familiar with Tencent and WeChat in China, but also in Latin America, super apps like Rappi are very powerful as well. So I think it's absolutely possible to create these great ideas and great companies outside of Silicon Valley. And sometimes it's even an advantage. In the case of Spotify, which comes out of the Nordics, because they were in a smaller market, they were able to more easily gain the cooperation of the record labels to do legal music streaming. Whereas in the United States, it would have been much harder at first because they would say, well, you can't prove it. You have to pay us $100 million up front. It just makes it much harder. So I do think that this is starting to happen. But it still is the case that it's just so much easier to start a company in Silicon Valley that it just means that more ideas develop here. And if you want to start a company, and you know this, having spent time in Silicon Valley, if you have a great idea, you can probably find people who will give you some money. Maybe not as much as you'd like, but you'll probably get some money. And meanwhile, all of the service providers, the lawyers, and other folks that you need to work with will agree to defer their fees because they're all dreaming of putting their effort into the next Google and getting a piece of the action and becoming wealthy that way. So as a result, the system is just less, there's just so much less friction for someone who wants to build a company, and that attracts people to come over here and build great companies. But that doesn't mean it can't be done elsewhere in the world. It just means that it may be a little harder.
So do you think in the East, outside the United States or outside the Silicon Valley, this blitzscaling is happening slowly? Or is it attributed to some kind of human herd mentality that the investors in, say, Europe or Asia or other regions have simply got used to not betting on anything that is not tried and tested in the Silicon Valley?
Yes, so there absolutely is an issue around the investor base, right? The investors being more conservative, less willing to fund. And my partner at Blitzscaling Ventures, Scott Johnson, often describes one of the reasons why he wanted to start Blitzscaling Ventures with me and Jeff Abbott is he said, I got tired of funding companies here on the East Coast and then seeing the Silicon Valley companies get twice as much funding and then eat our lunch. I want to be on the side doing the eating as opposed to the side being eaten. So it absolutely is the case that the investors are an issue, but that also begins to speak to why this is becoming less of an issue for entrepreneurs. So increasingly, and here at Blitzscaling Ventures, we survey the deal-making activity of all the top 35 VCs, especially the ones in Silicon Valley. And more of them are looking overseas for their investments. They're investing in Europe, they're investing in Asia, they're investing in Latin America, even starting to invest in Africa, because they believe that there are greater returns available out there. And because the competition is lighter, right? You have a bunch of more conservative traditional investors, like, great, I can go over here and I can buy into a company and its growth for a lot less money than I would in Silicon Valley. And that's the other thing. It's just so incredibly expensive to live in Silicon Valley. Company, individual employee, let's say that you're a young person starting out, you need a place to live, you're spending $3,000 to $4,000 a month on rent. It makes it very expensive. And so companies have higher burn rates. It's harder for them to hire. They have to pay people more. Whereas in many other parts of the world, in the East, the cost of living is just so much lower. And yet there's still plenty of brilliant people who can do amazing things.
So continuing on the investors, do you honestly think VCs play an equal, if not more decisive role to blitzscaling an idea?
So the question can be interpreted in two different ways. The way number one is when it comes to blitzscaling, who's most important? The answer there is very simple. It's the entrepreneur. Venture capitalists are always the secondary players, and venture capitalists would do well to remember that. Not all of them do, but the good ones do remember that. They remember that they are here to serve the entrepreneur and to facilitate the entrepreneur's success. They're not doing it themselves. However, it is also true that specifically for blitzscaling opportunities, venture capitalists are more important because the incredible growth generally requires incredible amounts of capital. And so it's really essential to be able to get great investors on board as you blitzscale. And that means that getting great investors is more important for a blitzscaler than it is for just a slower growth company.
Yeah, because most of us think there might be, different dynamics in the blitzscaling landscape. The way the VCs make up their minds to unload hundreds of millions of dollars for a blitzscaling phase of a startup. So are the dynamics slightly different here? Meaning, do investors still bet on, okay, the same rules, 2 or 3 Stanford, Harvard grads in their early 20s, having a minimum viable product and a product market fit, okay, let's go invest? Or do you see investors look at the blitzscaling phase of a startup in a different way?
Well, they still love that stereotypical founding team, of course. And there was a bunch of research that First Round Capital did that showed that you, in fact, did get better returns from investing in founders from Stanford and MIT. As it turns out that the absolute best thing to do to get good returns was to invest in a female founder from MIT. That was actually what worked out best in their database. But of course, that's just a statistic. And each individual entrepreneur is a statistic of one. The statistics don't necessarily apply. So if you did not go to Harvard or Stanford for your college or graduate degree, no worries. It's still possible to build great companies. And that's because more and more investors are responding to the traction that they see out there. Right? They see companies that have been able to grow rapidly, that are doing things they never expected. Take the whole world of Web3. Originally, Web3 was the province primarily of Bitcoin maximalists and other people who were on the fringes. And it didn't attract people. There were random child actors or crazy guys who became billionaires as a result of this. But then once it became mainstream, now all of a sudden, they're pouring money into the companies that already have traction. But B, all of a sudden, those Stanford and MIT folks start building Web3 startups as well. So, we generally see that sort of Wild West story in the United States where it's an open frontier and it doesn't matter where you came from. And then as all the money moves in and things become more settled, then the traditional structures of society keep coming back. But the good news is there's always more frontiers. In the United States, they ran out of room. Eventually, they hit the Pacific Ocean. But when it comes to startups, human ingenuity is unlimited.
Okay. So at this point, I would also like to jump into how much the universities play a role, not just on blitzscaling, but all the things surrounding startup building. Of course, you in the Silicon Valley have been fortunate to have Stanford and Berkeley. So thinking about our region here, for example, the Central and Eastern Europe. So traditionally, there are not so world famous kick-ass universities. Let me say that. I'm sorry for my French. But how do universities, or how did universities play a role in shaping this blitzscaling trend and the ecosystem in the Silicon Valley, the Stanford and Berkeley to name? And how do you think those the universities elsewhere in other regions of the world should play a role in making this conducive?
So let me talk about the Silicon Valley University model because it has been an incredibly powerful force for producing great companies. By the way, it's not just limited to Stanford. One of the most incredible things I've ever found is the University of Utah's computer science department in one class produced the founders of Pixar, of Adobe, of Xerox PARC in a single class. So there are other great schools and other great teams everywhere. But what has made the universities in Silicon Valley so effective is a combination of research funded by the government and private corporations into basic technologies and applications. And that's what allowed them to build out the new chips, the new operating systems, the new ways of doing things that underlie most of these business models. But then in addition, there is a culture that just accepts and even encourages students and faculty to get involved in entrepreneurship. If you go to Stanford and you talk to a Stanford professor, and especially in the engineering and computer science department, the chances that they have a venture capital fund, a startup, or have at least made angel investments is about 100%, because they're right in the middle of everything. And the school encourages them to do that. It doesn't say, oh, no, you can't do that. The school says, that's fantastic. That adds to the brand of the school. So that is a huge help. Now, the other reason why colleges and universities are so important is that ultimately, and this is underappreciated, colleges and universities generally cause the cities and towns that they're located in to become better places to live. So the creative professionals, they're generally highly educated. They want to go places where there are great restaurants and good culture and museums and other smart people to talk with. And that basically describes a college town. And so the college makes the town more appealing to the people who will hopefully then stick around and work at these companies, whether or not they're alumni of the universities themselves.
It's actually great to hear what you mentioned in the earlier part of this answer, that maybe in the US as well, everything would have started through research fundings and the government support. And because especially in this part of the world, the EU and other public money is flowing into the startup ecosystem heavily. So we might be up for a big blitzscaling trend in the next decade or so, when the same happened in the Silicon Valley few years ago. So now jumping into the blitzscaling accounts, what was the earliest account of a company that grew by blitzscaling that comes to your mind? So can you take us through that journey?
Absolutely. So I think that one of the most important examples of blitzscaling, which actually came from a company that was established, but was blitzscaling it to a new market, was IBM. So IBM, most people who are young might not be as aware today, but once upon a time, IBM was the most powerful technology company in the world. It was synonymous with technology for decades, and it was the most valuable company in technology for decades as well. And the reason IBM became so valuable is because it made a blitzscaling bet on the System 360 mainframe computer. Now, at the System 360 mainframe computer, cost in its research and development, I think something like 2 to 3 times the annual revenues of IBM at that point. It was a make or break thing for the company. They invested a truly colossal amount of money into developing this system, which was, as they say, more of a modular system, more of a services-based system, right? Instead of having a monolithic computer, you had all these different modules that you could put together. It resembled and presaged much of the way that we have, Amazon Web Services today. It's not as easy as just spinning up another virtual instance, but you could add on additional blocks of System 360 and build out your system ever larger and larger. And of course, this is a blitzscaling opportunity because we have an operating system involved, we have a platform involved, there's strong network effects. And the result was IBM went from a company that was known for creating tabulating machines for census results into being the world's first computing giant. And that lead that it gained as a result of that kept it as the world's preeminent technology company for multiple decades.
So did it happen inside IBM all by accident, or did they
It did not.
have
So
or did they have to go through a lot of painful make mistake and learn iterations?
Oh, yes, absolutely. The earlier versions, their earlier attempts to get into computing did not work. And so they had to learn from those. There was painful trial and error. And the other thing was the company had what was essentially a founder. So the leader of IBM at the time was Thomas Watson Jr. His father had started the company, really took it over. Thomas Watson Sr. was a salesman. He was selling the CTR machines for tabulating census results. He's like, wow, they seem to sell well. I think this company is worth it. Let me try to actually buy it. And he took over the company, renamed it IBM International Business Machines, and built up, IBM typewriters. Like the IBM before Thomas Watson Jr. was a typewriter company. People even today, like if they're really old, they'll remember the IBM Selectric typewriter, which was an electric typewriter, which meant instead of, I sound so old when I say this, but there were manual typewriters where you pushed a key and it was directly mechanically connected to a letter, which was made out of metal, which would go against a typewriter ribbon, which had carbon permeated into it, and you would pound that against a paper that you rolled through. And that was how we printed things. I know it sounds insane, but that was actually how it was done. And IBM had electrical typewriters where you could type the keys and you didn't have to pound them with your fingers. And this was a huge, huge advance and made the company successful. But what Thomas Watson Jr. had as the refounder of the company, he took over for his dad. He had the ownership, he had the moral authority, he had the willingness to take this giant risk of investing all this money in System 360 and betting the company. Right? That's something that only a founder can do. It's very difficult for a hired hand CEO to bet the company. Thomas Watson Jr. bet the company, bet his father's legacy, and won.
I would like to, for the benefit of some of our viewers who still are not very, proficient with the idea of blitzscaling, which you beautifully describe in the book as prioritizing speed over efficiency. Would you, in your own words, explain the concept in a kind of a textbook fashion for a couple of minutes so that all of us are on the loop?
Absolutely. So, as I sort of referenced in passing, the reason why there are more blitzscaling opportunities today is because there are more and more globally connected markets where network effects can occur. Now, why are the network effects important? The network effects are important because what they mean is that as the scale of the company grows, the value of the product to each individual user or customer grows. And that does two things. The first is as the company is growing rapidly and the value per customer grows, then you are getting exponential value creation. So that's why the companies become valuable so quickly. But in addition, as that value per customer grows, it means that it becomes increasingly difficult for any competitor to take those customers away from you because they can copy your product exactly. Their product will be this valuable and your product will be this valuable because of the network effects. And so that dynamic, the long-term sustainable competitive advantage of the network effect is what drives the winner take most market dynamic. And if that's the case, if the market can be won and once won, held onto for decades, printing money along the way, then your overwhelming objective should be win the market. That means getting to scale or critical scale rather faster than anyone else. And if that means prioritizing speed over efficiency, so be it. Now, again, inefficiency is not a virtue. There's no value to wasting money. But what it means instead is investing that money to achieve greater speed in order to win the market.
To any first comer or to most of common people, it sounds really crazy that investors and the entire ecosystem would bet on speed over efficiency because efficiency has been classical way of growing a business. So do you think, as you mentioned, once these customers become or get the value and they stay loyal to the first company, but you know how I think Swift was originated as a competitor to Uber. So in spite of big investor money, do you still believe that it's not possible once the first mover takes all those customers, even big money can't take them away to be loyal to another company?
Yes, so it depends on the nature of the market as well. So the interesting thing with Uber and ride hailing in general is that the network effect is strong, but it does not remain strong at greater levels of scale. You get to a certain level of scale, enough to be able to have the liquidity, get the customers to your door, to get the driver to your door within a short enough period of time, let's say 5 to 10 minutes. And beyond that, it doesn't help that much, right? Will somebody say, well, I'm really going to switch apps or I'm going to pay more money to get someone there in 3 minutes rather than 5 minutes? Probably not. And so as a result of that, it's been possible for people to create Uber, or rather other ride-hailing companies around the world. Uber has either had to acquire them, as it did with Careem in the Middle East, or it has been forced into basically ceding the territory to their competitor, as in the case of Didi. Like Uber went to compete head-to-head with Didi in China, and in the end, Uber couldn't compete. The Chinese government basically said, we're going to end this competition. And Uber did well to actually trade their Uber China for a stake in Didi. But that's an example of how it does not create a single global winner. In contrast, A company like Airbnb, the network effect continues to get stronger because the selection matters so much. Again, if I- there it, it's hard to get to the point where there's so much density that it no longer matters, right? The density always matters when it comes to Airbnb because the pricing is so variable and the nature of the properties are so variable. And they're not coming to your door. It doesn't matter where they're coming from. The location actually matters. And so as a result, it's much stronger for Airbnb than it is for Uber.
You have done such a beautiful job in observing and analyzing how these companies grew into the mammoths they have become, the way they grew, and which is like almost like a class, textbook for founders wanting to build massive companies. If you succeed in your mission of educating everyone on blitzscaling, and every founder starts blitzscaling, then how does one blitzscaler beat the other working on the same or similar idea? Any secret sauces you want to share, not in the book?
So I'll say a couple of things. First of all, that would be wonderful. One of the things that we wrote the book to do was to make sure these ideas spread far beyond Silicon Valley because there's so many smart people in the world. And it's not some sort of silly zero sum competition where it's like, oh, a great company got started outside of Silicon Valley. That's bad for Silicon Valley. No, when there are great companies started anywhere, that's good for humanity as a whole. So that is a wonderful thing. And that's absolutely something that we would like to see. Now, when it comes to blitz scaling, it is very important to note that only a small proportion of opportunities are blitz scalable. We look at hundreds, 100 to 200 deals every month. And out of those 100 to 200 deals every month, less than 10 deals are the ones that we consider truly blitz scalable. So it's a tiny fraction of opportunities, even of the companies that the world's greatest VCs have already said, yes, we want to back them. We think that these companies are really valuable. So blitzscaling remains rare, but you can apply the ideas of blitzscaling to move faster, whatever your circumstances, wherever you happen to be. And then finally, the most important thing for blitzscalers and the people who are running these companies is to understand that they have a strong need to unlearn. So we all understand the importance of learning. Everyone's like, yeah, we got to learn. It's a lifelong learning, continuous learning, all these things. But we also have to unlearn. Blitzscaling companies grow so quickly that the lessons of the past very rapidly decay and get to the point where they're counterproductive. And the companies and founders who are better able to unlearn lessons that made them successful and abandon those things in favor of what will make them successful in the future, those blitzscalers are much more likely to succeed.
I clearly agree to what you just said, especially I have made a first-hand experience of some of the founders and startup ecosystem people in the East failing to quickly unlearn because there are traditional techniques that have been there which they have learned, but what actually matters right now to grow fast is a whole bunch of other rules. And also, I think that's a very good segue for this point. Way back in 2018-19, you remember, Chris, when we first met, I said, as an outsider to the Silicon Valley, I found entrepreneurship was the religion in the Valley. And this act of pitching was the ritual. Now, entrepreneurship has spread like a wildfire from Seattle to Wellington, New Zealand to Buenos Aires to Tokyo. My fellow founders around the globe have rehearsed and mastered this ritual of pitching and the social media footprint. How much important are these elements of pitching and social media outings for the founders in the lead up to their blitzscaling stage of startup building?
So they fall into the category of what I call necessary but insufficient. So I often teach a workshop on storytelling. And I am a huge believer in the power of being able to tell a story. And pitching is basically storytelling and telling a story that's going to compel, that's going to elicit emotions, that's going to persuade and get people to open up their checkbooks and give you lots of money. And those are all very necessary. You need to have them. But I think sometimes people get so caught up in the pitching that they forget that they actually need to build their business. They're like, oh yeah, I know I need to work on the prototype, but let me instead focus on my Y Combinator application or going to this pitch contest or something like that. And I tell those founders, listen, it's very important to be a great pitch person. It's very important to be able to convey your story. But you know what's even more important? Having the basis for the story, having the business that is growing rapidly. I am a brilliant storyteller, But beyond a certain point, if let's say you're trying to raise a Series B or Series C, if the results aren't there, you're not going to be able to raise the money. You might be able to weave a great story and raise a pre-seed round, but you can't do that later on. And you aren't going to be able to get all the way to an exit or IPO without building something of substance.
In your book, you lay utmost emphasis on these network effects. I think through network effects, the general population also participates in blitzscaling. I think it's true to say we are living in a blitzscaling world today.
Yes.
So can you enlighten us in your own words on the most important network effects that would affect some of the ecosystems here in the East, especially in Europe?
Absolutely. So there are certain types of business models that just lend themselves very strongly to network effects. We didn't frame them explicitly as such, but you've heard me talk about them. So the first is any sort of communications platform. Now, this can take many forms. It can be a pure messaging service like a WhatsApp. It can be a social network like a Facebook or a Snap. It can be a communications tool, even an enterprise tool like a Slack. And these communications platforms, because the value comes from having other people that are on the platform, they have really strong network effects. Another really critical network effect is the network effect of the marketplace, primarily the two-sided marketplace, where you have buyers and sellers. And there, the buyers obviously want to go where the sellers are. The sellers want to go where the buyers are. And the most powerful marketplaces, like an Airbnb, are ones where buyers are sellers and sellers are buyers as well. Because then all of a sudden you have this incredible ability for people to cross over, and that generates virality. It's not a network effect, it's virality, but that's also really essential. eBay also displayed this, right? If you've ever sold something on eBay, you've almost certainly bought something on eBay as well. And so that buyer seller relationship is really critical. Finally, we referred to a couple of these, but the platform network effect is the reason why every company is always eager to advertise itself as a platform, because the platform network effect means that as you develop things for your platform, the other developers develop for your platform as well. It is the center of gravity, it's the place where people come to work together. And having a platform, if you really build a great ecosystem, means you could just collect money in perpetuity. I mean, look at what Apple has done. The Apple App Store is this incredible platform where they take 30% of every dollar that flows through it. I mean, it's probably the greatest business model of all time, and that's the reason why Apple is the most valuable company in the world.
Right, yeah. So I think I already see some of questions pouring in. This would be my last question of the main session. Again, continuing on the network effect. I think on the stage over there in Warsaw, I would really encourage people, if you have questions, please raise your hands. I think someone with a microphone would approach you to get your question. So Chris, on the network effect, to close out on this, we the people also, as you also mentioned in the book somewhere, that one blitzscaling idea kind of promotes many blitzscaling ideas, because any blitzscaling idea which succeeds helps all the citizens to adopt a solution at a very cheaper price for more value. Say, for example, a blitzscaler like Netflix offers all of us for $1 with equal or better quality what earlier broadcast and cable network used to offer for $10. So it means we end up saving $9. So what do you think, what additional things should happen in the society, according to you, in order for us to spend those $9 of savings on other blitzscaling ideas, so that many more ideas would end up blitzscaling in the society?
Absolutely. And I think that blitzscaling is going to be very essential for a lot of these things. I mean, one of the topics that people talk about a lot these days is climate change and the issues that we may be facing as a species when it comes to climate change. Well, if there's anything I know about climate change, they always show me these scary graphs. They talk about how much carbon has been poured into the atmosphere, and they talk about how difficult it is to make things change. And it is difficult to change things. But, what the most important thing is to be able to convince the millions and billions of people to make a change in their life, or to build breakthrough technologies that fundamentally transform how we deal with carbon in the atmosphere. I'm talking about things like direct capture, where you're able to just pull it out of the air, or maybe developing new kinds of organisms that are going to consume it, fix it, convert it into something useful as opposed to a pollutant. So I think that blitzscaling is going to be enormously valuable for that. And I think that part of it is the less money we have to spend just getting the world to run right now, the more money we can invest in the future. I mean, it's pretty straightforward. And I'm hoping that a lot of that money is going to be invested in solving humanity's great problems. And some of it's already happening. Obviously, you take a look at the automotive industry, and it's converting over into electric. Right? If you went back in time 15 years and told people, hey, the industry is going to convert to electric, they'd say, you're crazy. And they would say Elon Musk is crazy. But look, he's managed to transform how the entire world thinks about automobiles. That's pretty amazing. He's in the process of transforming how the entire world thinks about space. That's amazing. And hopefully he will not be the exception, but the rule, with many others joining him.
Awesome, Chris. I think it's not always enough time to speak with you on blitzscaling. We can go on and on. So let's turn back to our first question. So now we open up for Q&A. I also have some questions. So yeah, back to Warsaw.
Thank you for telling the information which you provided right now. I was just curious, even about, for example, stopping war, and at least even that everyone will be paid for at least talking about stopping war, and maybe even thinking about solution of stopping the war. So as you mentioned, if people will be provided free food, and of course there will be a proof that they were provided free food, so it could be that everyone will be recorded, and that every unique face will be recorded that they have this free food. Or could be even easier that some people will not pretend that they are helping, because when they are not helping, their society or people in Africa can solve everything, but they don't want to be manipulated. And as far as especially stopping war, in my opinion, the worst idea is to make some kind of constraints on Russia that to block them, because every nation is good. So we should help people to have the truth. It means could be unstoppable internet, could be free internet, could be, mostly free internet everywhere, and connect with free food. And as far as Ukraine, doing yourself anti-rocket system, and on DARPA, especially when you do, it's the uni which create the aeroplanes. There are DARPA, I forgot the name of it. The DARPA presents, there are also some kind of judges. They are many teams, and they're creating many spaces, in this case, to go, for example, to the moon. But in this case, they could create the space for anti-rocket system, and could be anti-rocket system which may or may not be allowed to use for any other purpose than defense. It means it's like we could, for example, think about like a Spider-Man. The Spider-Man, this nets, it's not used to create any danger, and mostly it's like creating the coin, which is only for a good purpose. And maybe also other reason, it's like the proof of truth. It means when someone is recording the cell 24 hours, he cannot it's like, I will be paying him the proof, or you are not a killer. The first of all, this coin won't have any value. But when people will understand that when you record your 24 hours, then it's the proof that you are a good person, because you are 24 hours every day. These were huge amount of questions. There were.
Okay, so I think I can cover a lot of them along the way. So I think that there are a lot of fascinating things that you've brought up. So first of all, obviously, I think everyone is very saddened by the war that's happening right now. And it's been remarkable to see the degree to which technology has been used, right? What we're seeing is a fundamental shift in how warfare is being conducted with uh, less traditional means like, the man-launched anti-aircraft weapons, man-launched anti-tank weapons, suddenly being able to take out the extremely expensive military hardware that we thought was the dominant force on the battlefield. And that's a great example of disruption from below, right? Instead of be defeating tanks with even bigger tanks and even more powerful tanks, you're defeating tanks with something that is too small for the tank to actually counteract. So that, I think, is a fascinating example of how the disruption is occurring in the battlefield. Now, part of what you described is, can we get to the point where we build a society where people do not feel like they're going to go to war, where we have enough open information so that people everywhere can get whatever information they need to seek the truth as they see it. Whereas, obviously, we have a lot of regions of the world right now where where information flow is severely cut off, and people use things like VPNs to get through them. But even then, it's very difficult. So I do think that we are moving in that direction with technology. Obviously, we've seen Starlink deploy its internet access as a part of this conflict to help people stay in touch. And it may very well be that sometime in the future, we'll all be connected via satellite for free, and everyone in the world, whoever wants it, will be able to have the ability to access the internet. This will, of course, terrify many of the autocratic rulers that exist. They'll try to stop it. But if the technology becomes inexpensive enough and it becomes something that people can make on their own, then it probably will be unstoppable. Now, in terms of thinking about things like identity verification, I think a fascinating project is the WorldCoin project that Sam Altman launched. Sam Altman used to be the president of Y Combinator. A lot of people, including me, have made fun of the project because they're proposing to give crypto to everyone in the world, and they've created these orbs that scan people's retinas. And people say, well, that's creepy, and what are you going to do with it? And they haven't actually paid anyone. And so there's all these potential problems along the way. But I want you to consider what would happen if we actually had a database of the world based on retinal scans, such that, if we were to give out crypto to everyone in the world, maybe next time we're giving out food to everyone in the world, we're giving out some other resource to everyone. So it becomes a platform on top of which fascinating additional things can be made. Again, these are all interesting thoughts, and I think that it's going to take a while to get there, but you'd be surprised at how quickly the future arrives.
So thanks, Chris, for that. I think maybe there's another question in the room. Would you mind people, telling your name, your affiliation, and then be a little bit more brief to the question? I appreciate it.
Hi, Chris. My name is David from MIT Enterprise Forum CE. And my question will be, as you were speaking, one word, one term came into my mind, which is resilience. And how people adapt to new technologies and new stuff. And what would you be like, I don't know, top 3 advice or one advice of yours that is very important regarding resilience? Thanks.
That is such a fantastic point. And of course, as we all know, the ARPANET and the internet was originally designed as an instrument of resilience. Hopefully it will never be tested, but the idea was that it would be able to route around problems in the event of a nuclear war. So hopefully we never have to face that, but the resilience that the internet has created is a great metaphor for what we're looking for. So as an individual, I think the most important element of resilience is the ability to learn, to go out and bring in information. And for me, that means consuming information from a variety of different sources and being able to develop the critical thinking skills to decide, is information correct? Is it incorrect? What does it mean? I think over the course of the past 2+ years of this pandemic, we've seen that information can easily go awry and that people can sometimes reach conclusions that are not warranted by the evidence. Simply because of emotions or because of affiliations. So I think one of the most important elements of resilience is how to learn, how to process information, how to seek it out, how to find it, and how to decide for yourself what the truth is.
So here is a question from David Bloomstein from the UK. So he asks, what are the 3 most common attributes of CEOs who have successfully blitzscaled their startups?
Excellent. So the important things, I've already talked about some of them, but I'll mention them briefly in passing. The first is being able to learn. Because when you are blitzscaling, you are almost certainly blitzscaling in either a new market or a market that's been fundamentally transformed. And so the old playbooks, the old lessons may not necessarily apply. That's very uncomfortable. But if you're really good at learning and you're willing to admit when you don't know something, you're much more likely to succeed. The second thing is, just as we described, you need to develop your storytelling ability. By the way, this doesn't mean that you have to become, a stand-up comedian. Of course, it's better if you're funny, if you're entertaining, all those things. But there are people who are great communicators despite not having those skills. If you have a great story and you learn how to tell it and you learn how to compel your employees, your customers, your investors, and the general public to really buy into your vision, you're much more likely to succeed. The final thing is that just in general, these entrepreneurs need to have the ability to focus. It's so easy to become distracted. There's so many things going on. The great entrepreneurs, the great blitzscalers figure out what's really important and concentrate on that.
Before I jump into the next question in the room, here was a question from Mohammed Ashraf, a fellow founder from the Netherlands. He asks this, which is not actually very pleasant for all the founders out there. I know it's hard to take as a founder when our idea that we are working on is realized not to blitz scale. My fellow founders, I know all of us want to build unicorns. We dream of making our early employees millionaires overnight, one fine night before we ring that bell on the NASDAQ. I get you, I'm with you, but I'm on the same boat. But let's face it, it's not that all ideas are meant to blitz scale. So he asks, when and how do founders get some hints that their business is not up for blitz scaling, even before the market gives the verdict?
So there's two main things that they need to look out for. The first is to look at the frequency and intensity of the product usage. So the thing is, in the long run, the feedback the market will give you is, they buy the product or they keep buying the product or the company itself is sold or IPOs, right? That's wonderful feedback. And when that happens, you clearly know you've made it, but you can't wait until that point in time to learn from what you're doing because it just takes too long. And so the earliest thing I think you can concentrate on is the frequency and intensity of usage. Because when people use something frequently and intensively, and it's important to them, then it generally is valuable. And if they never use something, it's pretty rare that it's going to be valuable. So if you build a product and no one uses it, and even the few people who adopt it eventually fall off, that's a terrible sign. That's a problem you got to fix before you ever think about blitz scaling. The other element of it is, in addition to that frequency and intensity of usage, it's how difficult is it for me to acquire customers? Because blitz scaling is about scale. You have to be able to acquire those customers and users. And if you work really hard and you acquire customers and it still costs you 3 or 4 times as much as you need to get to, and just raising more money isn't going to fix the problem. You're going to get more people in, but each one of them is going to be a money loser. So you got to fix the customer acquisition as well. And if you can't fix customer acquisition, that's probably a sign that you should not scale.
Gotcha. So we take up the next question
another
from the room.
per minute, Balaji, excuse me, we have another question from the audience, and I think it will be the last one. So please.
Yeah.
Okay.
Hello, everyone.
Last question.
My name is Asif. It's a bit related to a question that there was already, but you referred the example of Airbnb, for example, right? And from the Airbnb, we know that the founders went to the home of the first hosts and helped them take the pictures and prepare all that stuff. So for me, as a prospective founder, the question is about timing, right? Till when should you try this product market fit, then to start the blitz scale? Is there some metric that you should use to give up or to continue?
Certainly. So it really boils down to that frequency and usage. There are a couple of things that will generally show up. So for example, are you getting good retention? Like what is the level of retention over time? And usually going out 90 days is enough. I mean, going beyond that is great. You can just look at how the curve is going. But if you think about it, if you look at the people you bring in at this point in time, and then slowly some of them drop off, does it just drop off all the way down to zero? Or does it drop off and then eventually hit a level point? Because when you have that, that indicates that people have developed the habit of using your product. So look at that cohort analysis very carefully. one of the companies I just invested in, what they do is they do mobile ticketing last minute for events and performances, sporting events and concerts and things like that. And they do cohort analysis on the people that come in as customers. And they look at how much money the people spend in year one, how much they spend in year two, how much they spend in year three, and so on and so forth. And the reason we got so excited about this company is while the amount that people would spend would decline, because you expect that people pass away, people move, people just stop using apps. That happens. But the level that they would level out at was they would still have 70% of the same amount of revenue in year 5 that they did in year 1. Well, that's incredible, right? That is a huge sign that, in fact, this is a sustainable business, that your customers stick with you over time, and that therefore you should be scaling and getting as many customers as possible.
So thank you, Chris. I really appreciate your time. And I hope before we speak next time, there will be many more blitzscaling startups out there in the market, and looking forward. So it's back to you, Ivana.
Fantastic. Thank you, everyone, so much.
Thank you, Chris, Balaji, for this insightful discussion. I hope we all learned some secret sauce how to build mega companies from ground zero. We plan to continue this kind of chats in the future, so please follow us on LinkedIn to be informed about upcoming events. We are also hiring in Poland, so we are looking for smart developers who aspire to work for a Silicon Valley startup. So please follow us. Thank you very much for coming. Many thanks to Venture Cafe and Alpha Wolf Summit for co-organizing this event. Have a nice evening and see you soon. Thank you.
Thank you so much, Ivana. Thank you, every single one of you who has been with us throughout all of that day. You may not know me, that is understandable. I'm Anna, the MC of the Garage Stage. Well, you should visit me tomorrow. We have a couple of presentations. Yet the room is very small, very cozy. That's what I like to say, because I really want people to join me there. Because the ones who were with me there today, I think I know them now personally. 6 people. Amazing people, gonna meet them tonight at the networking party. And we have a very small but cute tradition at the Garage Stage. That is thanking the partners. And I honestly love our eye contact. Thank you so much. Thank you. So let me go ahead and just list the partners once again with a huge thank you. So of course, we're starting off with BNP Paribas, Brala, Enterprise Estonia, Hubraum, Konieczny Wierzbicki and partnerzy, Vienna Business Agency, InnovX, LG Electronics, and our fintech partner, PKO Bank Polski. And of course, Alpha Wolf Summit team is very thankful that you are here with us, and we're gonna see you tonight, actually in a couple of minutes, in the main hall. See you tomorrow. Bye-bye.